Hello. Hello. Very good morning, everyone. How are you all? Now, last class we have completed whatever we have completed. In that, any doubt? You have any specific doubt? We can discuss that. I've already said that if you have any questions in your mind, you need to ask me that question also I will take. For live student, if you are asking any question, please send me the question image so that I can understand which question it is. But it should be from ICAI book only, it should not be from any other source. Correct? Okay? Yeah. Chalo. So can we start? So today we'll take the first Ind AS impairment of asset, Ind AS 36. Of course, important. Ind AS 36 important. Correct? Now, when I say impairment of asset, so every asset need to be impaired. Every asset need to be impaired. But when I say Ind AS 36, so all assets are not covered under this Ind AS. Correct? So which assets are covered in this year? This Ind AS. First is property, plant and equipment. Second is intangible asset. Third is investment property. Fourth is what? What more assets are covered? Property, plant and equipment, intangible asset, investment property, also ROU asset. ROU assets held by SE, ROU assets held by lessee will be also impaired as per Ind AS 36. Okay. Then any investment, but not all investment. Any investment in subsidiaries, associate and joint venture will be also impaired as per Ind AS 36. Means other investment or other financial asset will not be impaired as per Ind AS 36. So other asset will be impaired as per other Ind AS. For example, if I say financial asset, so financial asset other than investment in subsidiaries, associate and joint venture will be impaired as per Ind AS 109. Inventory will be impaired as per Ind AS 2. Are you getting what I am saying? So when I am saying Ind AS 36, only we should think about property, plant and equipment, intangible asset, investment property, ROE asset held by lessee and investment in subsidiaries, associate and joint venture. Correct? Understood? So you can see whatever not covered will be scoped out from this chapter, automatically scoped out from this chapter. So you can see only these assets will be covered. Apart from these asset, all asset will be scoped out from this chapter. Correct? Now for biological acid, if I say for biological acid, Ind AS 41 is applicable. So Ind AS 41 says that biological acid will be measured fair value. If biological acid are measured fair value, the question of impairment will not arise. But Ind AS 41 says that there may be some circumstances. We'll discuss under Ind AS 41 what is that circumstances. There may be some circumstances under which biological assets are measured under cost model. So if biological assets are measured under cost model, then their impairment will be covered under Ind AS 36. Are you getting? So if biological assets are measured as per cost model, then for impairment Ind AS 36 will be applicable. It means if biological assets are measured at fair value, then Ind AS 36 will not be applicable. So that is one exception case. So one doubt will come whether revalued asset, because we know that property, plant and equipment, intangible asset can be revalued, means an option has been there for upward and downward revaluation, cost model, revaluation model. So can I say when we say revaluation, so automatically there is a downward revaluation. The question arises whether a revalued asset require impairment testing. Means if we have opted revaluation model for property, plant and equipment and intangible asset, so whether that asset is required for impairment testing. Yes. So even though for property, plant and equipment and intangible asset, entity has opted revaluation model, but what India 36 says that if there is any indicator of impairment, so that asset also require impairment testing. That asset also require impairment testing. Means can I say in this way, whether you have opted cost model or revaluation model, impairment need to be done as per India's 36. Impairment testing need to be performed whenever there is indicator. Whenever there is indicator. Correct? This point you have understood. So what is general principle of this India's? What is the general principle? General principle is that every asset need to be written down to its recoverable amount. Every asset means in this chapter, every asset means only those assets which are covered in this chapter. When I say every asset, not all assets, only those assets which are covered in this chapter. Correct? So every asset need to be written down to its recoverable amount if there is any indicator of impairment. Means can I say impairment testing need to be performed only when there is indicator. If there is no indicator, question of impairment testing will not arise. But downward revaluation, if I say revaluation, if you have opted for revaluation, so you can do revaluation at any point of time without any indicator, because we have done frequency of revaluation. If you remember, the frequency of revaluation means if there is a significant changes in the fair value of the asset, then we can do annual revaluation irrespective of any other indicator means even though there is no indicator, frequency of revaluation is 3 to 5 years. Are you getting what I am saying? Or you can also perform annual impairment by your choice. So revaluation is mandatory if you have opted for revaluation model irrespective of indicator, but impairment need to be done only when there is indicator of impairment. This point have you understood? Yes sir. So can you say whenever recoverable amount is less than carrying amount, the difference will be known as what? Impairment loss. So what is the formula? Formula is what? Impairment loss is equal to carrying amount minus recoverable amount. Now the question arises, what is carrying amount? What is recoverable amount? So carrying amount means calculated as per respective India's. Is carrying amount of PP as per India 16, carrying amount of investment property will be as per India's 40, carrying amount of intangible asset will be as per India's 36. Means can I say when I say carrying amount, it will be either cost or fair value. Cost means cost model, fair value means revaluation model, less accumulated depreciation and amortization, less accumulated impairment loss of any prior year. Means it might happen we are doing subsequent impairment, so there might be some prior impairment loss. So we need to also deduct accumulated impairment loss. So this become carrying amount on the date of impairment. On the date of impairment. Now when I say accumulated depreciation, the question arises, just try to understand. Suppose this is the date of impairment. This is the date of impairment 31st March. So should we calculate depreciation before calculating impairment loss? Yes. So it means can I say when I am saying carrying amount will be after depreciation of current year up to the date of impairment. So depreciation of current year will be deducted up to the date of impairment. Understood? Yes sir, understood. Correct. Now what is the meaning of recoverable amount? Recoverable amount means what? Can I say the carrying amount of any asset can be recovered? Carrying amount of any asset can be recovered either by use or by sale. Correct now? Either by use or by sale. So can you see? You will use it or sell it depending upon what is the higher amount you are getting. Correct. So the recoverable amount depends upon use or sale. So therefore they have calculated recoverable amount by two ways. Either by taking fair value less cost of disposal or value in use whichever is higher. What is the meaning of recoverable amount? Recoverable amount means higher of fair value less cost of disposal fair value less cost of disposal or value in use whichever is higher. Now this fair value is calculated as per India's 113. So this fair value will be measured as per the requirement of India's 113. Therefore no guidelines has been given for determination of fair value under India's 36. But value in use is estimated as per the requirement, as per the principle, as per the guidelines given under India's 36. Means we need to understand how to estimate value in use. What is value in use? So the guidelines to estimate value in use is given under India's statistics, but how to measure fair value? You need to go to which India's? India's how to value fair value? You need to go to which India's? India's 113. Correct. Now, can you say we need to understand how to calculate value in use? However, from examination point of view, they will give you what cash flow, future cash flow to be generated from the use of asset, and they will give you discount rate. You are expert in discounting. You can find out present value of future cash flow. That will become what value use. But can you say how to estimate cash flow? That is also given in the question. Given will be given in what? May be given in exam, but they don't ask that type of question. Correct. However, one question has been given in ICAI statimetry regarding that, but that is very simple. Simple question. You can estimate as per the information given in the question. You can estimate as per the information given in the question. So, what is the meaning of value in use? Value in use means present value of future cash flow expected to be derived asset, from the asset or cash generating unit. From the asset or cash generating unit. I hope you all know about CGU because you have already done India's statistics. Means what India's statistics says that either you need to impure single asset or group of asset. So that group of asset is known as what? CGU. That group of asset is known as cash generating unit. Are you able to understand? Correct. So whenever I am saying CGU, so CGU is smallest group of asset which are capable of generating cash flow independently from other group of asset. Correct. Are you able to understand? So value in use means what? Present value of future cash flow expected to derive from either single asset or group of asset. That group of asset is known as what? CGU. Yes, sir. How to estimation? Can I say this estimation will be based on reasonable and supportable assumption. Reasonable and supportable assumption of economic condition in which that entity, economic condition of the industry in which that entity belong. Correct. Can I say from examination point of this point is not relevant because can I say they will give you all the information and based on that information you need to estimate. However, what India's 36 says that estimation should be based on most recent financial budget or forecast which have been approved by the management. Most recent financial budget or forecast which have been approved by the management means it will be based on management forecast approved by the management. Information will be given, you need to take that information. However, projections should cover a maximum period of 5 years unless longer life is justified. But what they want to say that projections should cover a maximum period of 5 years. We can take longer life only when it is justified. Normally, if you know projected data is always for 5 to 7 years, not more than that, because we cannot project beyond 5 years. It is not possible to project beyond 5 years. Are you able to understand? After COVID-19, the understood it is not possible to project. Anything can happen in our life. Correct. So what they are saying, suppose useful life of the asset is 1, useful life of the asset is 10 years. So can you see you can take the information up to 5 years from projection? What about the balance 5 year? What about the balance 5 year? Understood? So suppose useful life of the asset is how much? 10 years. So you need to estimate cash flow for 10 years. You need to estimate cash flow for 10 years. So what India 36 says that projection data can be of 5 years. We can take longer life only when justified. But if not justified, you can take only for 5 years. So what about the balance 5 years? So what they said, cash flow beyond the period covered by most recent forecast should be estimated by using a growth rate. By using a growth rate which should not exceed what? Long-term average growth rate of the industry unless the higher rate can be justified. Is simply beyond 5 years, you should estimate the information, estimate a cash flow by taking a growth rate which should not exceed average growth rate of the industry in which that entity belongs. Means suppose for first 5 years you have taken 15% growth rate and average growth rate of the industry is only 10%. So can you say for the next 5 years you cannot exceed your growth rate, you cannot take growth rate more than what? 10%. It should be either 10% or less than 10%. Understood? Correct. This type of question till now not asked. Then what will be the composition of estimate of future cash flow? Can you say this will include future inflow, to be generated from the use of asset. So when I am saying composition of estimate of future cash flow, it will include cash inflow from the use of the asset. It will also include cash outflow that are incurred to generate the cash inflow. So it means future cash flow means cash inflow minus cash outflow. Cash inflow to be generated from the use of the asset and cash outflow which will be incurred to generate that cash inflow as per matching concept. And also it will also include the cash flow to be received at the end of useful life from the disposal of such asset. From the disposal of such asset. I hope you understood. Means what they want to say. What they want to say, everyone. Correct. Means this is suppose 1 minute. This is suppose kya the useful life, which is useful life is suppose 4 years. You need to find out how much cash flow will be generated from the use of the asset during this 4 year, and at the end of useful life you will sell it. So how much cash flow will be obtained on disposal of asset, and the present value of this will be what value in use. The present value of this will be value in use. Understood? Correct? Yes, sir. Here is all information will be given. You need to only calculate. Correct. Now, the important point is what, which is till now not asked, but can be asked from my point of view. Correct. Which is till now not asked, but what I have feeling that sometime they will ask this question in exam. That future cash flow shall be estimated for the asset in current condition. Means whatever you are estimating, that will be based on current condition. Correct. It means, can I say any future cash flow, any future cash flow which arises from future capital expenditure should not be considered. Means suppose right now one asset is damaged. Right now one asset is damaged. So of course their future cash flow will not be so much efficient. Means can I say the future cash flow will be reduced cash flow because it is in damaged condition. But it might happen after 1 year you are planning to do some capital expenditure. So once you do capital expenditure, future cash flow will increase. So the question arises when you are estimating future cash flow, whether it should be based on future capital expenditure or as per current condition. As per current condition, not based on future capital expenditure. Because if you consider future capital expenditure, then no asset will be impaired. Then the question of impairment will not arise. So what they want to say, the future cash flow shall be estimated for the asset in its current condition. Therefore, what India 36 says that these two will not be considered. These two will not be considered while estimating future cash flow. These two will not be considered while estimating future cash flow. First is what, any future cash flow means what they want to say. The estimation of future cash flow shall not include estimated future cash flow or inflow that are expected to arise from improving or enhancing the asset performance. In simple word, any future cash flow which are expected to arise from future capital expenditure should not be considered. Any future capital expenditure should not be considered. Correct. Secondly, any future cash flow which are expected to arise from future restructuring. We have done under India's 37 restructuring. So suppose you have decided to restructure. You have decided to restructure. So any future cash flow which are expected to arise from future restructure to which entity is not yet committed. To which entity is not yet committed means last class India's 37 we have discussed that if the entity is committed we should create provision for restructuring. So if the entity is committed, then consider any future cash flow which are expected to arise from future restructuring. But if the entity is not committed, the question of considering that future cash flow which will be arising from that restructuring should not be considered. Have you understood me? So just try to understand. This is very important point. Because if they will ask, that will be simple question, but you need to understand what they want to say. Just try to understand. Suppose this is the date of impairment. This is the date when there is an indicator of impairment. Correct? Understood? So they will give you, suppose they will give you value in use with capital expenditure, with future capital expenditure, and they will give you value in use without future capital expenditure. So of course, can I say if this is 10,000, so this will be less than 10,000? Bolo yes or no? Because can I say when you will do some capital expenditure, so of course the efficiency will increase, so cash flow will increase, the value in use will be increased. So what they will give on the date of indicator, they will give you two value in use. Value in use with future capital expenditure, value in use without future capital expenditure. But what will be taken into consideration? 8,000 or 10,000? You will take 8,000 or 10,000? No, no, no. What I am saying, on the date of indicator, they have given two value in use in the question. Value in use with, including the effect of future capital expenditure. Value in use excluding the effect of future capital expenditure. So which will take 10,000? You will take 8,000. You will take 8,000. So can you say this will be considered even though entity is committed to this? Means for capital expenditure they have not said commitment or etc. Even though they are committed for capital expenditure, even though they are committed for capital expenditure, the effect of future capital expenditure will never be considered, because you are going to impair the asset as per current condition na. As per current condition means even though entity is committed for this, you are not supposed to take the effect of future capital expenditure. Now suppose they have given value in use with the effect of capital restructure, with the effect of restructuring, and they have given without the effect of restructuring. Correct. So of course this will be 10,000 and this will be 8,000. Now in this case, suppose the entity is committed to restructuring, so what you will take? Then you will take 10,000. But if the entity is not committed to restructuring, you will take 8,000. This type of question till now not asked, but they will pakka ask someday. Are you able to understand? Important point. Therefore, I am giving focus on this. Got it? Have you understood this point? So what they want to say? That on important this point. While estimating the future cash flow, we are not supposed to take the cash flow that are expected to arise from future restructuring to which entity is not yet committed, and future capital expenditure even though entity is committed to it. Means you can see for this commitment wala point is not there. Are you able to understand this point? Yes sir. Now the estimate of future cash flow shall not include, estimate of future cash flow will also not include any cash inflow or outflow from financing activities. Of course, can I say financing activities should not be considered, and it will also not include any income tax receipt or payment. It will also not include any income tax receipt or payment. Because why? Because impairment is before income tax, therefore cash flow should be also before income tax. Got it? Now point number 4, the net cash flow in foreign currency. So suppose if you are expecting any cash flow in foreign currency, if you are expecting any cash flow in foreign currency, so what they want to say that first calculate present value in terms of foreign currency. First calculate what? Present value in terms of foreign currency, and then translate that present value using the closing exchange rate on the date of impairment into functional currency. Understood what I am saying? So future cash flow are estimated in the currency they are generated and then discounted by using discount rate appropriate for that currency. Means suppose you have US dollar is the foreign currency and INR is functional currency. So it means you are generating in US dollar. So first you will calculate present value in INR or present value in US dollar. So you will first calculate present value in US dollar. Now for calculating present value in US dollar, which discount rate will use? So can you say discount rate India might be 10%, discount rate for US dollar might be 8%, might be 8%. You will take 8% or 10%. Of course, you will take 8%. What they want to say, first calculate present value by using discount rate appropriate for that currency. And then whatever present value you have calculated, that should be converted into what? Functional currency by using the closing exchange rate on the date of impairment. So conversion should be done by using the spot exchange rate, means the closing exchange rate on the date of impairment. On the date of impairment. Understood? This is also very important point. Question can be asked, till now not asked on this. Right. Discount rate from examination point of view will be given in the question. You are not supposed to estimate discount rate. Discount rate will be always given in the question. There cannot be any question without discount rate. Correct? Yes, sir. Now, what is the meaning of fair value less cost of disposal? Already we have said that fair value will be always given in the question because it should be measured as per Ind AS 113. Correct? So, fair value will be given in the question, but cost of disposal means, what is the meaning of cost of disposal? The cost of disposal, correct. Cost of disposal are incremental costs directly attributable to disposal of an asset. Examples are what? Legal cost, any stamp duty, and similar transaction tax, any tax you have paid, cost of removing the asset, etc., which are directly related on disposal of asset, but it will not include finance cost or income tax expense. So the cost of disposal should not include finance cost or income tax expenses. Understood? Yes, sir. Correct. I hope this much you have understood. Correct. Now just try to understand what they want to say in their 36. Everyone just try to understand. Correct. Now, suppose you are estimating value in use and fair value less cost of disposal. Correct. And carrying amount is equal to 10,000. And suppose value in use is coming 12,000. So can you see if one of them is more than carrying amount, there is no need to estimate other. Can I say we are wasting our time by estimating other? If one of them is more than carrying amount, means there is no impairment. There is no impairment now. So what they are saying, if either of these amount exceed the asset carrying amount, the asset is no longer impaired. It is not necessary to estimate the other amount. These are practical points. Correct. In exam, so you need to calculate both. If the information is given, you need to calculate both. Don't do like that. You will calculate only one. If in exam suppose fair value less cost of disposal is given and that is more than what 10,000, will you estimate value in use? Yes, because you will get marks for that. You will get marks for that. Understood? So in exam, so you need to calculate both information. Whatever information given, you need to use that information. Understood this point? Correct? Yes, sir. Now come to indicator. In this already we have discussed that this chapter will be applicable only in the presence of indicator. Means if there is no indicator, will not perform impairment testing. Will not perform impairment testing. Can I say if in exam the question asks about impairment testing, so of course we need to assume there is indicator. Even the question is silent about indicator. Because if suppose question is silent about indicator, can you assume there is no indicator will not impair? No, no, no. You can't do that. Means from examination point of view, if the question has given some information about recoverable amount and question is silent about indicator, we need to always assume of course there is indicator and therefore they have given recoverable amount. Understood? So from examination point of view, can I say indicator may or may not be given? Indicator may or may not be given, but to understand this is one second theoretical point, not important from examination point of view because they will not ask theoretical questions. But there are four internal indicator, there are three external, sorry, there are three internal indicator and there are four external indicator. Internal indicator means information coming from inside the entity. External indicator means information coming from outside the entity. Internal indicator may be what? Obsolescence or physical damage of the asset. Correct. Significant changes with the adverse effect on the entity having taken place during the period. For example, asset become idle. Asset become idle. Asset become idle, but it is not classified as held for sale. If the asset is classified as held for sale, then Ind AS 36 is not applicable. So asset might be retired from active use, but not classified as held for sale. Require impairment testing. Require impairment testing. So during COVID-19, many assets become idle. It is not classified as held for sale, but that asset required what? Impairment testing. Similarly, you can read point number 3 is what? Economic performance of that asset is less than expected. Suppose you are expecting in FR 90 marks, but you are getting 75 marks. So can you see your performance is not good? Because you are expecting how much? But you are getting 75. 75 is good marks, but can you see require impairment? Bolna. Correct. Your expectation is more than actual achievement. Correct. External indicator means what? The value of asset declines significantly, or the significant changes with the adverse effect in the entity have taken place during the period. For example, there is some technology changes, there is some market changes, economic condition changes, legal environment changes. For example, government puts restriction on plastic industry. Now in news came now, the government is putting restriction on plastic industry. So all the entity who are manufacturing plastic, then of course their asset will not be in use. So that require what? Impairment. Yes, sir. Market rate of interest has increased significantly. If the market rate of interest has increased, the present value will decrease. Present value will decrease, the value in use will decrease, and therefore it require impairment. Correct. The last point, the carrying amount of net asset of the entity is more than the market capitalization. Means the market value of shares is less than what carrying amount of net asset. It's also an indicator of what? Impairment. Can you say in this way? If there is an indicator of impairment, it does not mean asset require impairment. Means even though there is an indicator, it is quite possible there is no impairment loss. Means whenever there is an indicator, we need to perform impairment testing. Impairment loss may or may not arise. Means whenever there is an indicator, we need to perform impairment testing, applying Ind AS 36. Yes, sir. Then, then there is one point, indicator for impairment of investment in associate, joint venture or subsidiaries. This point I will not take right now. This point I will take automatically in consolidation chapter. Correct. This point I will take in consolidation chapter automatically, because investment in associate, joint venture, subsidiary is the point of consolidation. So there I will discuss about investment of such investment, impairment of such investment. Chalega. Don't worry, I will only take. Now coming to accounting treatment. Can I say accounting treatment will depend upon whether cost model or revaluation model. If cost model, then impairment loss will be charged to PL. What journal entry you do? Impairment loss to accumulated impairment loss, or you can say impairment loss to asset. Correct. If revaluation model, then can I say impairment loss first will be debited to what? OCI. To the extent of revaluation surplus available, balance loss will be debited to profit and loss account. So if there is a revalued asset, so can a journal entry will be impairment loss OCI, impairment loss PL to what? Accumulated impairment loss. Got it? This point? Have you understood this point? Correct. I think this also done. Now, point number 6 is very important. What is point number 6? Point number 6 says that there are some intangible assets for which annual impairment is required, irrespective of indicator. Irrespective of indicator. Understood? So there are some intangible assets. Only this exception rule is for intangible assets. Means for tangible asset or property, plant and equipment and investment property, always you will do impairment testing only when there is indicator. But there are some intangible assets, because we have understood that for intangible asset recognition Ind AS are strict. So they require annual impairment testing irrespective of indicator. There are three such intangible assets. First is goodwill acquired in business combination. Any goodwill which is acquired in business combination require annual impairment testing irrespective of indicator. Second, intangible asset with indefinite life. Last Ind AS 38 also we discussed that intangible asset with indefinite life does not require amortization but require annual impairment testing irrespective of indicator. Intangible asset not yet available for use. This also point I have discussed last class under Ind AS 38. Any intangible asset under development phase, even though not yet used, require annual impairment testing irrespective of indicator. Means can you say these assets require annual impairment testing irrespective of indicator, as well as when there is indicator, Are you able to understand? Correct. Now there is one point, not from examination point this is not relevant, but just try to understand. Whenever there is an indicator, suppose this is indicator and you are performing impairment testing based on indicator, so impairment testing will be done at the end of the year. Means due to indicator, if you are performing impairment testing, if you are performing impairment testing, then impairment testing is performed at the end of the year. But the question arises, if suppose you are doing annual impairment, so there is no indicator, so you need to perform impairment testing at which point of time? So Ind AS 36 says that at any point of time. Means if you are doing annual impairment, it can be done at the beginning, at the end, or at any point of time during the year. But whatever you are doing, that should be consistent for every year. Suppose you are performing impairment testing at the beginning of the year, so next year also you will do at the beginning of the year. Next year also you will do at the beginning of the year. But different intangible asset can be annually impaired, is can be tested for impairment testing annually at different point of time. But whatever you have opted, that should be consistently applied year to year. Understood? But practically, can I say every asset, because option has been given, practically every asset will be impaired at the end of the year only, practically. However, in question the information will be given, you need to apply that information and apply it. Correct? So from examination point of view, it will depend upon the information given in the question. Correct? This much you understood. Now can I say, if there is a single asset, it is very simple. Single asset, can I say carrying amount you can calculate. Recoverable amount, can I say fair value will be given. Cost of disposal will be also given. You can find out fair value, cost of disposal. For value in use, they will give cash flow. They will give discount rate. You can find out present value of cash flow. Then compare what? Value in use and fair value less cost of disposal. Whichever is higher become recoverable amount. Then compare recoverable amount with what? Carrying amount. If recoverable amount is less than carrying amount, impairment loss will be calculated. So for individual asset is very easy. Let me take one question for individual asset so that you will find what? You will find will be easy in class. So I will take one question and that question will be very good question. Okay. So question 13, what they have said. Great Limited acquired a machine on 1st April 2012 for rupees 7 crore that had an estimated useful life of 7 years. The machine is depreciated on a straight line basis and does not carry any residual value. On 1st April 2016, the carrying value of the machine was reassessed at rupees 5.1 crore and the surplus arising out of revaluation credited to revaluation reserve. Oh, ho, ho. What they are saying? On 1st April 2016, the carrying value of machine was reassessed at rupees 5.10, means revalued. This is fair value given in the question. This is fair value now. And the surplus arising out of revaluation was credited revaluation reserve. For the year ended March 2018, the condition indicating an impairment of the machine existed and the amount recoverable ascertained will be 79 lakh. So they have given what? Recoverable amount. Thank you very much. Calculate the loss of impairment of the machine and show how the loss is treated in the books of Great Limited. Great Limited has followed a policy of writing down the revaluation surplus by increased charge of depreciation resulting from revaluation. Have you understood this point? This point is important. Have you understood this point? Can you explain me what is this? What is the meaning of this point? Anyone? Can you explain me what is the meaning of this point? Because if you have understood this point, then only this question is easy. Otherwise, it is difficult question. You will explain. I will explain. Have you understood this point? Everyone respond. Cool. Can you say it means last class we have done under India 16 about revaluation surplus. There are two options available. You remember? Two options. First option is the revaluation surplus will be transferred retained earning at the time of derecognition. First option. Second option was that amount equal to additional depreciation will be transferred from revaluation surplus to retained earning during his remaining useful life. So that point is given. Had followed a policy of writing down the revaluation surplus by increased charge of depreciation resulting from revaluation. Means they have opted for second option. and because of this question become important. Understood? So it is very easy. Can I say first they have given what carrying, they have given historical cost how much, what is the date of, what is the date of what is the date of revaluation, 1st April 2016. So what is the useful life, total useful life given 7 years. So 12, 13, 14, 15, 16, 4 year depreciation will be charged. So what we'll do, we'll do 7 into 4 by 7. It means 4 crore will be accumulated depreciation. So this will be what revised, this will be carrying amount before revaluation. Now it was revalued 2 rupees what 5.10. What is the revaluation reserve? So the increase will be transferred to OCI as revaluation surplus. This 2.10 will be credited to OCI as revaluation surplus. Then 5.10 become revised carrying amount. Then this 5.10 will be depreciated during remaining useful life. Now what is the date of impairment? Date of impairment they have given 31st March 2018. So 1st April 2016 to 17, 18, 2 year depreciation. So out of 3, 2 year it will be depreciated. So what you will do, 5.10 into what, 2 by 3. 5.10 into 2 by 3 how much, 3.40. 3.40, correct now. 3.40 is the accumulated depreciation for the next 2 years. Then this become what, carrying amount. This will be compared with the recoverable amount. Recoverable amount given how much, 79 lakh. What is the impairment loss, 0.91 lakh. Can I say up to this too it was very easy. You can calculate what impairment loss. I said for individual asset it is very easy. They can only hit you by giving this yellow highlighted point. Means for individual asset you can do mistake only with this yellow highlighted point. Correct. Means now you need to give accounting treatment. So my question to you all, what was the your revaluation surplus? Revaluation surplus was 2.10. Now you need to find out additional depreciation for the 2 year. Out of 3 years, 2 year expired, remaining useful life was 3 years. Out of that 2 year expired. So I said whenever SLM you just use the shortcut 2.10 divided by 3 into 2. So this become additional depreciation for the next 2 year. 2.10. I have given one shortcut. You remember for SLM. So what is 2.10 divided by total remaining useful life multiplied by expired life? How much it is coming? 2.10 divided by 3 into 2, 1.4. So what is the balance? Balance is 0.3. 0.7 na? Okay, 0.70 is the balance. What is the balance of revaluation surplus? What is the balance of revaluation surplus? 0.70. Are you able to understand what I am saying? Means 2.10 was what? The revaluation surplus. First year how much you have transferred? 2.10 divided by 3. Second year how much you have transferred? 2.10 divided by 3. So this has been transferred from revaluation surplus to retained earning. What is the balance left? Balance left is 0.70. So it means impairment loss to the extent of 7.70 will be debited to OCI. What is the total impairment loss we calculated? 0.91. So out of 0.91, how much will be debited to OCI? 0.70. Balance 0.21 will be debited to what? PL. Understood this point? Not understood? Not understood. It means I need to explain slowly this point. Chalo. Let me give you the slow wala point. What I am saying, on the date of revaluation, what journal entry you have done? Property, plant and equipment to OCI as revaluation surplus how much? 2.10, 2.10. Point have you understood? What is the remaining useful life? 3 year. Remaining useful life is 3 year. Correct. What are the years? It is 16, 17, 17, 18 and 18, 19. So we have done under Ind AS 16 that revaluation surplus with an amount equal to additional depreciation will be transferred from revaluation surplus to retained earning. Means will pass one journal entry revaluation surplus to retain earning. Will pass one journal entry revaluation surplus to retain earning. With what amount? With an amount equal to additional depreciation. So whenever SLM, how to calculate additional depreciation? This will be 2.10 divided by 3 remaining useful life. Means 0.70 will be transferred. Here also 0.70 will be transferred. So how much balance left in revaluation surplus? How much balance left? So balance left in revaluation surplus is equal to 0.70. Now what is your impairment loss in this question? 0.91. So whenever revaluation model is opted, impairment loss to the extent of revaluation surplus will be debited to OCI. Balance loss will be debited to PL. This is the point now. Means what journal entry will do? OCI to the extent of revaluation surplus available. How much? 0.7. Balance will be debited to PL. How much? 0.21. To what? Asset. This journal entry. Now I have just done compound journal entry. This is a compound journal entry. Have you understood? This was I was saying. Understood now? So if they ask individual asset, they may hit you with this point only. And normally students do mistake here. They forget this point about additional depreciation transferred from revaluation surplus to retained earning. This point if they will miss, and suppose you have transferred entire impairment loss to OCI, because how much it was available? It was available how much? It was impairment loss was 0.91, but actually it was how much available? 2.1 na. And if you debit entire impairment loss to revaluation surplus, your answer will be wrong na. So normally they can hit you in this point. To be careful about this point. Correct? With this, I can assume that individual asset impairment you can do by your own. Now let us come to what? CGU. Let us come to CGU. Correct? So can I assume that you can understand what? Individual asset by your own? I will take all your doubt at the end, okay? Because your doubt are all mixed doubt. So I will take all your doubt at the end. Chalega? Or better I should take right now only. So let us take one by one each doubt. First doubt they have asked, in case if question is stated impairment loss to be done at the beginning of the year, then also depreciation should be charged. Huh? No, no, first to can I say with respect to indicator, I will say they will say always at the end of the year. But suppose if in exam they say impairment should be calculated, impairment testing will be done at the beginning of the year. Of course, current year depreciation you will not charge now. You need to calculate carrying amount of the asset up to the date of impairment. So if you are performing impairment testing at the beginning of the year, if you are performing impairment testing at the beginning of the year, you should calculate depreciation up to the date of impairment. This current year depreciation will not be charged. Simple. Means current year depreciation you will calculate after impairment in revised carrying amount. Understood this point? Have you understood this point? Once your doubt is over, just say yes sir, doubt is over. Then second doubt was asked, in case of revaluation or impairment, gain or loss, gain or loss is reclassified to OCI with recycling. No, no, no. Just try to revaluation surplus. This OCI is without recycling. It is never reclassified to PL. Whatever you are doing impairment, that is not recycling. Are you getting? Have you understood this point? Means when you are saying revaluation surplus is never recycled to PL. It is always transfer retained earning. Now, if there is an impairment loss and you are adjusting impairment loss to revaluation surplus, this is not recycling to PL. This is not recycling to PL. Understood this point? Whether your doubt is clear? Bolo. Once your doubt is clear, please say yes. Then next doubt. Sir, with respect to impairment, suppose entity purchase a new machinery which will be ready after 3 years, and benefit of plus 25% can be seen from year 3. In this case, we can consider this is not future capital expenditure. अरे नालायक, first, अच्छा, if I say nalayak, no, nalayak is only my what word. Don't be feel what sad about this. Nalayak means you will become C. Huh? I was also nalayak. Correct. Now everyone, suppose this is the date when the asset is ready for use. So can I say during this period, till the asset is not ready, impairment testing will not be done for tangible asset. For property, plant and equipment, impairment will be done only after subsequent, means only after initial recognition. Means during subsequent recognition, impairment testing is done. The question of impairment testing, if the asset is not ready for use, will not arise. Are you getting? So during initial recognition, we never do impairment testing. We perform impairment testing only after initial recognition. So your question is not correct. Have you understood this point? Bolo. Once your doubt is clear, please answer yes. Then one question has been asked for contingent liability. Usually contingent liability are disclosed in notes. Yes, sir. When the contingent liability can be recognized. With regard to the court case, uncertain, disclose it. But if the outflow of resource is probable, can be recognized. Just try to understand. For recognition, there are three conditions. There must be present obligation arising from past event. Their outflow of resource must be probable and amount can be estimated. So if suppose subsequently the contingent liability, these three conditions are satisfied, you recognize it as provision. There are three conditions, not only outflow resource probable, with that there must be present obligation arising from past event. So present obligation means what? Chances of occurrence is more than 50%. If suppose there is a possible obligation and outflow is probable. Are you getting? Suppose there is a possible obligation and outflow is probable, then you can't recognize provision, na? Understood? No doubt is clear? Follow. With respect to existing project, what you are asking? I have not understood your doubt. With respect to existing project, I am not able to understand your doubt. What you are saying about with respect to existing project? Be clear with your doubt. I think all the doubts are taken. Anyhow, assets are recorded at fair value every year by question of impairment. Now one doubt came. Chalo, good doubt. The doubt is what? If the asset is already revalued at fair value, why we are doing impairment testing? Just try to understand what India's 36 want to say that everyone. Suppose there is one revalued asset, correct? And suppose the carrying amount is equal to what? 100, and the fair value is equal to what? 90. So already you have done downward revaluation by 10, correct? Understood? Now the question is that if you have done downward revaluation, whether we'll do impairment testing. So what they are saying, first identify what is cost of disposal. Means can I say cost of disposal may be either insignificant or may be significant. So what they are saying, if the cost of disposal is insignificant means let us assume cost of disposal is equal to 0. Let us assume. Then can I say there is no need of impairment testing. But if the cost of disposal is significant, quite possible now. Now suppose cost of disposal is 5. It means for impairment testing you take fair value, or for impairment testing you take fair value less cost of disposal. So can you see in this case fair value less cost of disposal will be 90 minus 5 means 85, means it requires further impairment. It requires further impairment now. Are you able to understand? So what they are saying, any asset which is already revalued also perform impairment testing if the cost of disposal is significant. If the cost of disposal is significant, then you need to perform impairment testing. Understood? Means the difference between fair value and fair value less cost of disposal is cost of disposal. So if the cost of disposal is significant, it requires further impairment. It requires further impairment, but you will perform impairment testing only when there is indicator regarding that. So of course, can I say if the fair value has decreased subsequently, correct now? So of course you need to perform impairment testing also on the same date, on the same date. Ha- have you understood your doubt? Correct? Whether this doubt is over? Yes, sir. Okay. So all the doubts are over. Got it? So this point is given in this para. If you come to this point now, so this point is given in this para. You can read. I was supposed to take this point, but you have only asked the doubt. Because some points I need to take at the end. You can see this point. The first page only. Does India's statistics apply to asset carried at revalued? Yes. India's statistics is applicable to both cost and revaluation model. If the disposal costs are negligible, the recoverable amount of revalued asset is either close to or greater than its revalued amount. In this case, after revaluation requirement has been applied, it is unlikely that revalued asset is impaired and recoverable amount need not to be estimated. But if the cost of disposal are not negligible, means it is what significant, then you need to perform impairment testing. Then you need to perform impairment testing. I hope you have understood. Now coming to CGU. Now you have understood that what is the meaning of CGU. CGU means what? Smallest group of asset or single asset. Means a single asset can be also CGU. Correct? Means under India's 36, we need to impair CGU. So CGU can be group of asset or it can be single asset. Why? Can I say it is not possible that one asset will generate cash flow? If you see this classroom, so can I say suppose in this classroom this projector damage. So will you able to calculate value in use of this projector? No, because can I say this projector cannot independently generate cash flow. This projector will generate cash flow only with the help of other asset in this classroom. So this classroom become one of the smallest group of asset which is capable of generating what? Cash flow. So when you are performing impairment testing, you need to perform impairment testing of single asset or CGU. You need to perform impairment testing of CGU. Means can you say we need to first find out, we need to first identify how many CGU are there in one entity. Can you say this information will be given in the question? Because that will be decided by management now. So can you say first to we need to identify CGU in an entity. Correct. First we need to identify CGU in an entity. Then perform impairment testing. Means can I say for each CGU we need to estimate value in use. We need to estimate pay way less cost of disposal. So we can find out recoverable amount and then compare recoverable amount with the carrying amount of CGU. Carrying amount of CGU means carrying amount of all asset in that CGU. Carrying amount of all asset in that CGU, and then we can find out total impairment loss of that CGU. The total impairment loss of that CGU will be allocated. That we need to understand. Means what is the process? Process is what? First identify CGU. CGU 1, CGU 2, CGU 3. Suppose. Then find out carrying amount of identifiable asset of CGU. Correct? Means can I say this will be given in the question or they will give individual asset, we can find out carrying amount of each asset in that CGU. But can a question need to inform ki which asset belong to which CGU? Because you are not management now. Question will only inform. Correct now. Means question will give all the information, you need to only apply. Now one doubt will come. This asset, whether this asset will include other assets which are not covered in this Indias. Means whether this asset will include debtor, whether this asset will include inventory. What do you think? Means of course this asset will include property, plant and equipment. It will include intangible asset. It will include ROU asset. It will include investment property. But my question to you all, whether it will include financial asset, whether it will include inventory. Yes, it will include. Means when you are consisting one CGU, so okay, this CGU is a group of assets. So inventory is also part of that group, which is also helping in generating cash flow. Without inventory, can you generate cash flow? You can't generate cash flow. So can I say this CGU will also consist of other assets even though that is not covered in this chapter. So I have said carrying amount of identifiable asset. Understood? Correct. When I am saying identifiable asset, there are two assets which are not identifiable in this CGU. One is goodwill. Goodwill arising in goodwill arising in business combination. So it might be possible there is some goodwill. So what India's 36 says that this goodwill should be allocated to different CGU on some reasonable and consistent basis. Can I say that basis will be given the question? That basis will be given the question. Suppose they have given this goodwill will be allocated only to CGU1. We allocate to CGU1 only. Suppose they have given allocated to these two in the ratio 3 is to 2. So allocate in that ratio. If suppose they have given this will be allocated to all in 3 is to 2 is to 1. Allocate in that ratio. Correct. Then we'll also allocate corporate asset. Corporate asset. Means there are some assets which will not generate cash flow, but that will help CGU to generate what? Cash flow. Means you can see this classroom. So this classroom, all assets are capable of generating cash flow. Means these are used directly used to generate cash flow. But we have one admin office also. Admin office we do not provide classes, but admin office is required for collection of amount. Na? There the amount is collected. Marketing is done from there. So this admin office, whatever assets are there in admin office, will support CGU to generate what cash flow. So these assets are known as what? Corporate assets. For example, we have research and development department. We do research. So research and development department, we are not generating any cash flow there, but that support that help other CGU to what generate cash flow, so that become corporate asset. So every corporate asset will be also allocated to different CGU on some reasonable and consistent basis. Can I say that basis will be given the question? That basis will be given the question. So can I say goodwill they will give, corporate asset they will give, ratio also they will give. Thank you very much. Now the question arises, sir, if goodwill is not allocable, then what will do? If corporate asset is not allocable, then what we'll do? Then we'll discuss with one example. Means it might be possible that there are some corporate assets which cannot be allocated to different CGU on some reasonable and consistent basis. There might be some goodwill which cannot be allocated to different CGU on some reasonable and consistent basis. Quite possible. Means it may be allocated to larger CGU. So can you say when I am CGU, this is a smaller CGU. Smaller CGU means what? Smallest group of assets which are capable of generating cash flow, which are independent from other CGU. Are you able to understand? Are you able to understand? Because of course I need to curtail my explanation part. So in my mind, I have something is going that you know this, you know this, you know. I am not explaining that part. Whatever you know, I'm only explaining that part which you don't know. Are you able to understand whatever I'm saying? Have you understood this? So simple. First you will take what carrying amount of identifiable asset given in the question. This asset will also include other assets which are not covered in this chapter. Then we'll allocate goodwill as per the information given in the question. Then we'll allocate corporate asset as per the information given in the question. Then we'll find out what? Total carrying amount. This become total carrying amount. Then recoverable amount will be given the question. If not given, can I say we can find out? Can I say it will be value in use or what? Fair value less cost of disposal, whichever is higher. So can I say either of these two will be given or both will be given? If suppose they have not given value in use, so they will give you cash flow. We need to find out present value of that cash flow. We are expert in that. But normally whenever they ask this question, they give value in use only. Can I say? Now can I say we can find out impairment loss if recoverable amount is less than what? Carrying amount. If recoverable amount is more than carrying amount, no impairment loss. So we can find out what? Impairment loss. This impairment loss will be allocated first to what? This impairment loss will first allocated to goodwill, if any. Means suppose this impairment loss is 10,000. and your goodwill, allocated goodwill is what? 5,000. So out of this 10,000, first impairment loss will be allocated goodwill. Balance impairment loss 5,000 will be allocated to other assets, including corporate asset, in the ratio of their carrying amount. Have you understood what I am saying? So out of this total impairment loss, first you allocate a goodwill, then balance impairment loss will be allocated to what? All other assets, including corporate asset, in the ratio of their carrying amount. In the ratio of their carrying amount. This is the rule. Rule you understood? Very simple. Very simple. Can I take one example, one question which they have asked two times in exam? Two times that question have been asked. Means beyond that they have not yet asked in exam. Beyond this they have not yet asked in exam. They have given good question in ICAI study matter, but they are not asking. Are you able to understand what I am saying? Means they are asking lollipop question in exam. So let's see what is that question. I will take only the first question. You will feel that this question have been asked two times. Then also students are not able to answer. That is what थोड़ा सा interesting point. अच्छा. ABC Limited has three cash generating unit ABC, the carrying amount of which as on March 31, 2001 is as follows. Cash generating unit, you can see carrying amount 500, 750, 1100, means they have given carrying amount of CGU. They have given remaining useful life. Whenever remaining useful life is given, it means you need to find out the product of these two. Why you need to find out? What is the product? This become 5,000. This become how much? 7, 15, 25,000. Huh? 5,000. This become how much? Huh? 22,000. Understood? This is 15,000. Na? 15,000. This is 22. Na? So this ratio become 5 is to 15 is to 22. This ratio is known as relative ratio. Correct. Now just try to understand. Suppose they have given corporate asset need to be allocated, but they have not given the ratio of allocation. They have given it need to be allocated, but they have not given the ratio of allocation. So this becomes the best ratio of allocation. Because can you see, if you allocate in this ratio, this will not be good because the useful life is different. So if question has given that goodwill or corporate asset will be allocated, but they have not given ratio of allocation, so this become best ratio. What become the best ratio? The product of carrying amount, the product of carrying amount and their relative useful life. This product become the best ratio for allocation. So in this question, let's see what they have given. ABC Limited two corporate assets. One is X 600, one is Y 200. Understood? Achha, in this there is some unallocated asset also. Chalo, take that I will explain with this one. This you have understood? The carrying amount of X can be allocated on reasonable basis to the individual CGU, but what they have not given? The ratio of allocation. Whenever ratio of allocation is not given, the best ratio is what? Relative ratio. Relative ratio means the product of carrying amount into what useful life. Correct. Then carrying amount of Y cannot be allocated. So there is one corporate asset which cannot be allocated. What need to be done? I will explain with this question only better. This point you have understood? In this question, what they have not given? They have not given goodwill. They have not given goodwill. Recoverable amount given A itna, B itna, C itna, and entire entity they have given recoverable amount. Why they have given? I will explain. Calculate impairment loss. Can is super easy. You will do, I will do. But the A, B, C or X, Y, Z. What is the CGU name? But what is the carrying amount they have given? 500, 750 and 1100. But in this will allocate what? Corporate asset. Which corporate asset? X. In the ratio is what? 5 is to 15 is to. Can you allocate? Bolo, what is the carrying amount of that? 600 will be allocated in this ratio. Fast. Huh? Allocate 71. Whatever you want to say. What you will do in exam, that you say. You can take approximation na. Will you ask me in exam what I should take? Whatever you will take in exam, that you give me. Correct na? अरे बोलना रे. This is how much? This is 74. 314 is not correct. 70, 72. Okay. So happy? Now 964, 1414. This become total carrying amount. Will compare with what? Recoverable amount. Recoverable amount of ABC is given how much? 600, 900, 400. Whether first one is require impairment, yes? No. No impairment, then what? Then what? 14. This will be allocated. There is no goodwill. It will be allocated to CGU and corporate asset X in the ratio of their carrying amount. With this 64 will be allocated in this ratio and this 14 will be allocated in this ratio. Can you give me allocation? 50 and 14. This will be how much? How much? Bolo. Oh, 10 and 4? 4 na? 3 and 11. It is 3 and 11 and 3. Correct. So this become what? Allocation. Correct. This much you understood? Means if there is no corporate asset, means if suppose in this question they have given corporate asset which cannot be allocated also. But suppose if that corporate asset was not given, this is the final answer. But whenever there is a corporate asset which cannot be allocated on reasonable basis, so what India 36 says that impairment testing will be done in two stages. This is the first stage. So whenever there is some corporate asset or goodwill which cannot be allocated on reasonable basis, then perform second stage impairment testing. This is known as first stage. Now we need to perform second stage impairment testing. To second stage impairment testing, we form larger CGU. This is smaller CGU. XYZ is smaller CGU. What is the meaning of larger CGU? There is a larger CGU can be either XY together, sorry, AB together, or BC together, or AC together, or ABC together, to which that unallocated corporate asset can be allocated. It is quite possible that that corporate asset can be allocated to this only, or that corporate asset can be allocated this only, or that corporate asset can be allocated this only. Or can I say if this is not, this is not, this is always this will be allocated to entity as a total. If question is silent, always will take larger CU as entity as a total and question will be always silent. But in exam they may give this also, they may give this also, they may give this also. So we need to perform impairment testing of larger CU to which that corporate asset is allocated. If question is silent, always assume corporate asset whatever is not allocated to smaller CGU will be allocated to larger CGU as total. So you can see they have given recoverable amount of ABC total. This is indication what? Larger CGU is what? ABC Limited. So now we need to perform impairment testing of larger CGU. So what you'll do? You'll need to first calculate revised carrying amount. Revised carrying amount. So revised carrying amount. Can you see we need to find out A, B, C, X, Y revised carrying amount. So can you give me revised carrying amount after this? So this will be no impairment loss. X will remain same. X is how much? Sorry, A is how much? How much? 600 only now. What was the carrying amount of A? Oh, what is the carrying amount of A? 500. 500 na. B will be impaired by how much? 50. Deduct 50. What was the carrying amount? 750 was the carrying amount. Pakka. 700. Then C how much? 1100 minus 11. How much? 161089. X how much? Can you say for X we'll take these two impairment loss together 14 plus 3. So can you deduct 14 plus 3 means how much? 17. How much? 588. Why no impairment till now? What is the Y carrying amount? 200. What is the total? 30. What is the recoverable amount total? 3200. It means no impairment loss. No impairment loss means this asset will not be further impaired. But suppose it is coming 3000. So what is the impairment loss? Now the question is this 72 will be allocated to which asset? So this will be allocated to only unallocated corporate asset. So in the second stage impairment testing, of course you will impairment loss allocation, but impairment loss will be allocated to only those assets which remain unallocated in the first stage impairment testing, and it will be allocated to other means this corporate asset or group of corporate asset in the ratio of their carrying amount. In this only Y, so the 72 will be allocated to Y if suppose this is the recoverable amount. Understood? This is the concept. Concept is very easy. Follow. Have you understood this much? Correct. Now let me take one question related to what goodwill, so that you can understand goodwill also. Follow. Can I take one question related to goodwill? So already I have one question. Let me take that question. This is the question. I have only created this question. A Limited has the following CGU. You can CGU 1, 2, 3. Value in use is given 5 lakh, 7 lakh, 7 lakh. Payable less cost of disposal given 4 lakh, 50,000, 8 lakh, not determinable. So can you see you can find out recoverable amount. Recoverable amount will be higher of this. So for 1 it is what? 5 lakh. For B it is what? 8 lakh. For C because 7 lakh, because this is not determinable. Carrying amount also I have given 5 lakh, 6 lakh, 6 lakh 50,000. Useful life also I have given 10, 20, 20. Correct. Understood now. Relative ratio we can calculate. Relative ratio we can calculate. This will not be given. We need to calculate it. RR means what? Relative ratio. So it will be 50, 120 and 130. Correct. Corporate asset I have given asset A used for admin purpose which can be allocated to each CGU on the basis of relative ratio 3 lakh. Goodwill which will be allocated to CGU 1 and CGU 2 only. So goodwill can be allocated only to what 1 and 2 in the ratio 2 is to 1. We will do as per the information given in the question. Carrying amount is 1,50,000. Calculate impairment loss. So what will do? Can I say first we'll find out carrying amount of CGU that is given 5 lakh, 6 lakh, 6 lakh 50,000. Then we'll allocate corporate asset in the ratio of relative ratio that is 5 is to 12 is to 13 that we have allocated. Then we allocate goodwill to CGU 1 and 2 in the ratio given that is 2 is to 1. Then we'll find out total carrying amount after allocation. This is lakh 50, 7 lakh 70, 7 lakh 80. Then we'll compare with recoverable amount that is also given in the question 5 lakh, 8 lakh, 7 lakh. Correct. Then we'll take the what? If the recoverable amount is less than carrying amount, then we'll find out impairment loss. You can see impairment loss 1 lakh 50 and 80. Now you only said out of this 1 lakh 50, how much will be allocated to which asset? So can you say 1 lakh 50,000 will first allocate goodwill to the extent of what? 1 lakh, and balance impairment loss will be allocated to other asset including corporate asset in the ratio of their carrying amount. Understood. So you can see out of this 1,50,000, first we have allocated goodwill to the extent available. Then balance impairment loss 50,000 will be allocated to other asset in the ratio of their carrying amount. Means you can see we have allocated CGU and corporate asset in the ratio of their carrying amount only. In the ratio of carrying amount means what? In this ratio, in the ratio of carrying amount means 5 lakh is to 50. 5 lakh is to 50,000. Similarly, for CGU 3 also we have done in that way. You can see total impairment loss is 80,000. Out of this first we'll allocate to goodwill, but there is no goodwill. So entire 80,000 will be allocated to other asset in the ratio of their carrying amount. You can see we have allocated this in the ratio of the carrying amount only. Which ratio will take? We'll take this ratio 65 is to 13. 65 is to 13. Is 6 lakh 50 to 1 lakh 30. 65 is to 13 we can say now that. And because there is no asset which are unallocated, impairment loss testing done. Understood? This you have understood? Now, suppose in this example, in the last example, suppose there is one more corporate asset B having carrying amount of rupees 1,50,000 which cannot be allocated on reasonable and consistent basis. It means now we need to perform second stage impairment testing, and you can see they have given recoverable amount of entity as a whole. So whenever they have given some corporate asset which cannot be allocated on some reasonable and consistent basis, it means you need to perform second stage impairment testing. For second stage impairment testing, first you need to find out revised carrying amount after first stage impairment testing. So you can see we have calculated first stage impairment testing done, then second stage impairment testing, identify larger CGU, that is a group of CGU to which corporate asset can be allocated. In the given question, larger CGU will be entity as a whole. So we need to find out carrying amount of the entity as a whole. So you can see we have find out revised carrying amount of CGU 1, 2, 3, then revised carrying amount of corporate asset and goodwill, and then B will be as it is because B is still now not impaired. This become a total carrying amount. Total carrying amount will be compared with total recoverable amount, and you can see there is an impairment loss 20,000. So this 20,000. Now the question arises: this 20,000 because there is a goodwill also. This 20,000 whether it should be allocated goodwill. Well, first always impair goodwill. What India's 36 says that goodwill will be impaired first, even though it was impaired in first stage, but goodwill will be always impaired first. So you can see this impairment loss will first allocate goodwill. So there is no balance. If suppose there is a balance, so this balance impairment loss will be allocated to unallocated corporate asset in the ratio of their carrying amount. This are you able to understand? Are you able to understand? Have you understood this point? Correct? I hope you have understood. This much if you have understood, then okay. Same example, but in this question now given goodwill belong to larger CGU. Means it means goodwill cannot be allocated to smaller CGU. So when goodwill belong to larger CGU, means it cannot be allocated to small CGU. It means goodwill impairment testing will be done in second stage. Understood? It means first stage you can see we have taken carrying amount of CGU only and only corporate asset A. Same example is continued. Means one example I have done entire discussion. Are you able to understand? Suppose it is given goodwill belong to larger CGU. Means goodwill cannot be allocated to smaller CGU. It means goodwill will be considered in the second stage now. So can you see? You can see we have not allocated goodwill now. Only we have allocated corporate asset A. Are you able to understand? Follow me. Correct. So now you can see this become total carrying amount, recoverable amount. Then we calculate total impairment loss that is allocated to asset in the ratio of their carrying amount. Now it means now in second stage impairment testing will consider goodwill. So we'll find out revised carrying amount after first stage, that you can find out easily. You can see we have done what first stage impairment testing, then we have calculated revised carrying amount. In this we included corporate asset B which remain unallocated and goodwill also entire amount. Now this become total carrying amount compared with the recoverable amount. You can see it is coming 1,20,000. It will first allocated to what? And you can see answer remains same. Answer remains same. You can see entire goodwill will be what? Impaired. Entire goodwill will be impaired. Entire not. To the extent of 1,20,000. Means the carrying amount of goodwill after this will be how much? 30,000. Means in both cases the answer remains same, but the process is different. Understood? Have you understood? This type of question they have not yet asked. Means I don't know why they are not asking. They are asking lollipop question exam. This you understood? Now only one last point of this. If you understood that, then okay. I'll take one last example. If you understood that example, then CG also over. Dekho, I have created one more example. They have given one question based on this in ICAI study material. This last example, but till now they have not asked this type of questions in exam. Now देखो, I have given A limited has the following asset A, B, C, D, E, F. Individual carrying amount I have given. Then I have also given which asset belong to which CGU. Then I have also given fair value less cost of disposal. Please just try to understand everyone. Suppose this is CGU. Understood? And projected damage. Now one doubt will come, sir. Projected damage. So why we are impairing other asset? One doubt will come now. Are you able to understand? So what they want to say, don't worry, we will do impairment testing on CGU basis because it is not possible to impair projector alone because we cannot estimate the value in use of that projector. Understood? Means you can see, you can find out, you cannot find out value in use of that individual asset, but you can find out fair value less cost of disposal of that asset. So it might happen they have given fair value less cost of disposal of C and D. It does not mean that you cannot estimate fair value less cost of disposal of A and B. Just try to see when we can calculate fair value. When we have intention to dispose it, then only we'll determine now. Now this camera is in good condition. It is quite possible the fair value less cost of disposal is not determinable. So we do not have intention to sell it. When we have intention to sell it, then only fair value less cost of disposal will be determined now. Are you getting what I am saying? It is quite possible they have given for C and D there is some fair value less cost of disposal. Understood. Now what will be the allocation? They have given corporate as a GHI, means GHI the carrying amount is 1 lakh, 3 lakh and 2 lakh. Allocable in the ratio 2:1. Not allocable. Allocable in relative ratio. Understood? Goodwill 0.50 means 50,000 allocated to only CGU2. Quite possible. They have given what? CGU 1 to 3 recoverable amount, useful life is given, entity A. Now if you want to find out relative ratio, whether this useful life will multiplied by recoverable amount or carrying amount? Carrying amount. Be careful. To find out relative ratio, useful life will multiplied by carrying amount, not recoverable amount. Be careful. This is the area where you can do mistake. So when you are finding relative ratio, you will multiply useful life with what? Carrying amount, not recoverable amount. Understood this point? Correct. Calculate impairment loss. So how to perform impairment loss? So in this case, same thing. Carrying amount of CGU you have calculated. Means carrying amount of CGU1 will be what? Means the carrying amount of CGU1 will be which asset? Asset A and asset B. 2 plus 2, 4 lakh. You can find out. Same way you can do for CGU2. CGU2 is what? 3 plus 2, 5 lakh. Same way you can do for C3. 1.5, 1.5. Understood? See, this is the carrying amount of identifiable asset. You can see. Then allocation need to be done. Corporate asset A, corporate asset G in the ratio 2 is to 2 is to 1 given. Then corporate asset I in the ratio of relative ratio you can do. Goodwill they have given, it is allocated only to CGU2. You can find out what total carrying amount. Then what? Compare with the recoverable amount. Calculate impairment loss. First allocate goodwill. Balance allocated to other asset in the ratio of carrying amount. This must you can do it. Correct. But when you allocate now, this will be allocated to other asset in the ratio of carrying amount. This I need to explain. This I need to explain. Just try to understand everyone. Means you need to find out what are the other asset in CGU1. In CGU1 other asset is asset A, asset D, corporate asset G and corporate asset I. This is a carrying amount 2 lakh, 2 lakh, 40,000, 40,000 given in the question only. This 40,000, 40,000 is allocated amount. Are you able to understand what I am saying? This 40,000, 40,000 is allocated amount of that corporate asset in that CGU. So this become total carrying amount. And what is the total impairment loss to be allocated? 80,000. This 80,000 will be allocated in this ratio. We can easily find out this amount by using calculator. Now, just try to understand. In this question for asset D, they have given fair value less cost of disposal. What is the fair value less cost of disposal given? 2,60,000. My question to you all, if the fair value less cost of disposal of that asset is given and that is 2,60,000, can you impair below that? Means can you reduce the carrying amount below that? If the fair value less cost of disposal is 2,60,000, so can you reduce the carrying amount below that? Then it's a mere objective of this chapter will be defeated. The fair value less cost of disposal is 2,60,000. It means it does not require any impairment. It does not require any impairment now. अरे बोलना 2 lakh is the carrying amount. Fair value is 2,60,000. Whether it require impairment? It does not require impairment. If you are impairing, the basic objective of this chapter defeated. Are we able to understand? So what I started this question with one point. If suppose this is 2 and only projected damage, so why you are impairing other asset? So there is a one point of what checking. What is the point of checking? Just find out the fair value less cost of disposal of other asset. And if the fair value less cost of disposal is more than the individual carrying amount, it should not be impaired now. It means whatever allocated impairment loss should not be allocated, means this 33,333 should not be allocated to D. So this 33,333 will be allocated to other asset in the ratio of their carrying amount. Means one thing is clear that D will not be impaired. So their impairment loss means impairment loss which remain unallocated due to this restriction will be allocated to other asset in the ratio of their carrying amount. So you can see what I have done. I have done minus 3333 and this has been plus where A, G and I in the ratio 2 lakh, 40 and 40. Have you understood this? Point not yet asked in exam, but one question has been given. Have you understood this point? Similarly, when I come to next this same thing, this CU3 C F G I given, this is given, we have allocated 30,000 in this is. But for C, they have given payable less cost to sale is what 1,45,000. You only say, can you reduce C below 1,45,000? So can his maximum impairment loss is what? 5,000. Means we cannot impair C below what? 1,45,000. His maximum impairment loss for C is 5,000. So out of 11,842, how much we can allocate? Only 5,000. Means how much remain unallocated? 6,842. This 6,842 will be allocated to other asset in the ratio of their carrying. Understood. Understood. So can you see this become revised carrying amount? Revised carrying amount you can find out. Once you have done revised carrying amount, you can do second stage impairment testing. You can say we have done second stage impairment testing in this way, and then you can find out correct now. Second stage impairment testing you understood? Correct? Understood? So you can see this is the total, this is the total recoverable amount. Sorry. This is the total carrying amount 17 lakh. This is the recoverable amount. This 2 lakh. You only say this 2 lakh will be first allocated to what? Goodwill, and balance to what? Unallocated corporate asset in the ratio of their carrying amount. So there was only one unallocated 3 lakh. उसको impair कर दिया. Have you understood? Please you discussion over. Only some points are left that I will discuss. But have you understood this much? Any doubt? Please inform any doubt. CGU. CGU calculation point over. What? Not visible, na? Now okay. We have calculated means this original carrying amount, impairment loss of first stage, revised carrying amount, then revised carrying amount compare with the recoverable amount of larger CCU. We have done in this presentation because ICAI is also using this presentation. Therefore, I have also done in this presentation. You can do in vertical format also, vertical statement also, your choice. But this presentation look good, na? Therefore, I have done in this way. In this, normally student do mistake. That also I am trying to identify in this amount. Normally, they do mistake in this amount and this amount. This amount will be sum total of what? When I am saying this amount, so you can see G has been impaired twice now. Twice now. So for G you will take 11429 plus 2174. For I also you will take 11429 plus 6522. And for goodwill into go there. For goodwill, it will be 40,000 only. It can be this plus this plus this also. So be careful about this impairment loss. So for corporate asset, it might be happen that it is impaired twice or thrice because it is allocated to either two or more than two CGU. Correct. So be careful about that point. Normally students do mistake there. Have you understood this point? You can see I have already highlighted this is the danger area. Got it? Understood? Yes, sir. It means let us come to the theoretical portion. Meaning you understood? Correct. So what they say? If there is any indication that asset may be impaired, correct, recoverable amount shall be estimated for that individual asset. When I am saying recoverable amount of individual asset means value new and payable less cost of disposal, whichever is higher. But if it is not possible to estimate the recoverable amount of individual asset, then entity shall determine the recoverable amount of sees you to which that asset belong. Understood? Means suppose this projector damage. So first you'll find out whether we can find out recoverable amount of that projector. If you are not able to find out recoverable on projector, so just identify the CGU to which projector belong and find out a recoverable amount of that CGU. Understood? Now carrying amount of CGU, just try to understand. This carrying amount of CGU shall be determined on a consistent and reasonable basis. Correct. Carrying amount of CGU include carrying amount of only those assets that can be attributed directly. But this asset will be all asset, not only PP, it will be other asset which form part of that CGU. Now one doubt will come whether from this carrying amount of CGU, the liability will be deducted. I said asset too will be included. Means it will also include inventory. Achha, one point I forget to say. Suppose one point I forgot to say. In the first stage impairment testing you understood. So can I say this carrying amount of CGU may include inventory. Suppose it is inventory and property plant and equipment. And inventory is suppose 2 lakh 20,000 and property plant and equipment is suppose 2 lakh 80,000. Now impairment loss is how much? 30,000. My question to you all, this 30,000 will be allocated to inventory ki only property plant and equipment. Means when we do allocation, so this impairment loss will be only allocated to those assets which are covered in this chapter. So at the time of allocation, don't impair inventory. So when I am saying this impairment loss will be allocated to other assets which are covered in this chapter. So at the time of allocation, first allocate to goodwill, balance impairment loss will be allocated to only those assets which are covered in this chapter. Means it will be allocated to PP, investment property, intangible asset, or investment in associate, joint venture or subsidiaries. But it will not be allocated to inventory even though it is a part of CGU. Have you understood this point? This was also a point, correct? Now what I was asking, sir, asset to we have understood. But whether we deduct liability also to find out carrying amount of CGU. So what India 36 says no. Liability will not be deducted to find out carrying amount of CGU unless, but there is one proviso, unless it will not include carrying amount of any recognized liability unless recoverable amount of CGU can't be determined without considering such liability. Means if a recoverable amount has been determined after considering such liability, then that liability will be also considered. Only one example is there which can be asked. Just try to understand, everyone. I think I have taken one question based on this. Let me see whether I have taken one question. I have not taken. There is only one question in ICAI study matter regarding that. I will explain that question. But have you understood what I am asking? The point of discussion you understood? Chalo. Let me explain that example, everyone. Suppose there is one CGU. Suppose there is a coal mines. Same example is given in ICAI study material. Correct? The coal mine itself is one CGU, one single asset. Correct. Now, the fair value of this coal mine is what? Suppose carrying amount of this coal mine is 1000. Correct. And because this is a coal mine, so can I say there is a legal obligation to restore the site where this is, but understood that decommissioning liability. So of course, as per India 16, we have also created one decommissioning liability. Suppose there is a decommissioning liability also of 500. So again, this is already included in this. carrying amount. Means the cost price include this, but we have passed one journal entry, property, plant and equipment to decommissioning liability. So carrying amount of property, plant and equipment is coming 1000 and decommissioning liability is 500. Correct. Now, just type fair value has been given. Fair value has been given. Suppose 1700. My question to you all: when you are finding fair value means the price which will be receivable on sale of that asset. So when you transfer this coal mine, my question to you all, whether this decommissioning liability will be transferred, it will not be transferred. Means if you are transferring this coal mine, means then or means you are selling this coal mine. So whether the liability of decommissioning liability will be transferred or will not be transferred? Will be transferred. It means, can I say, if you want to calculate purchase consideration on sale of this asset, so can I say you deduct 500 also to find out what fair value? Means, can I say fair value of this coal mine will be calculated after deducting what? 500. Means the fair value will be 1200. Means when you want to dispose this coal mine, so with disposal of coal mine, decommissioning liability will be also transferred to buyer. Buyer will also assume that liability na, or you will restore. Why you will restore? You have transferred coal mine, so liability will be also transferred. Means to find out a fair value of coal mine, what you have deducted. So what they want to say, because recoverable amount is calculated after considering that liability, therefore carrying amount will be also calculated after deducting what? The decommissioning liability. Otherwise liability will not be deducted. Only one question we have. Have you understood? Till now this question has not been asked. This point have you understood? Correct. So what they want to say now, I will think you will feel better with this point. It will not include carrying amount of any recognized liability. Means it will not include creditor, it will not include loan, etc. Unless recoverable amount of CSU can't be determined without considering that liability. Got it? Then allocation of goodwill to CSU. Correct. You can read. Correct. You can read. But now, just try to understand. Any CGU to which goodwill has been allocated. Any CGU to which goodwill has been allocated. Can I say that also require annual impairment testing? So any CGU to which goodwill has been allocated require annual impairment testing irrespective of indicator. Means any CGU to which goodwill has not been allocated will require impairment testing only when there is an indicator. Have you understood this point? To any CGU to which goodwill has been allocated require impairment testing on annual basis, but any CGU to which goodwill has not been allocated require impairment testing only when there is a indicator. Correct? This point is given. You can read. Correct? I am not reading whatever I have already said by example. That you can read by your own. Allocation of corporate asset also we have done. You can see first stage identify smallest group of asset, second stage identify smallest group of CGU. Correct now. So first stage identify smallest group of asset. Group of asset is known as smaller CGU. When I say larger CGU means that is group of CGU. Group of CGU become larger CGU. You can read it, everything I have said. Allocation you can read it. First to goodwill, balance loss to allocated to other asset, but other asset which are covered in this chapter. Other asset means which are covered in this chapter. You can read it, or I have already said. Then this point also I have said, however entities shall not reduce the carrying amount of any asset below the highest of fair value less cost of disposal, value in use or zero. Understood this point, that restriction wala point last example I have done. So the entity shall not reduce the carrying amount of any asset below the highest of this, is below the recoverable amount, below is individual recoverable amount. So asset cannot be negative also now. Understood. Any excess amount of impairment loss which cannot be allocated to any asset due to above restrictions shall be allocated to other assets using the ratio of their carrying amount. Same thing we have done. Correct. This much you have understood. The last point of this chapter is what reversal of impairment loss. Reversal of impairment loss. Reversal of impairment loss. Yes, in inventory also we have done reversal of previous write down. Same thing यहाँ पर reversal of impairment loss. So can you say whenever the indicator reverse, we need to reverse impairment loss. So suppose there was an indicator that any asset was destroyed. After some year you have done capital expenditure. So once you have done capital expenditure, can you see it is an indicator that whatever impairment loss might be reversed. Then once again perform impairment testing. Once again perform impairment testing. The performance of impairment testing will be same. Means compare carrying amount with revised means will new recoverable amount. Understood? And then find out whether there is any impairment loss. If there is no impairment loss, so reverse previous impairment loss. But how much we can reverse, that we need to understand. Understood? So indicator you can read. Now what they said, reversal of impairment loss for an individual asset. So can you say, just try to understand what they said. Reversal will be, reversal amount of reversal will be lower of these two. Amount of reversal will be lower of these two. First is recoverable amount minus carrying amount. Correct. Second, carrying amount as if no impairment loss was ever charged minus carrying amount. This carrying amount means present carrying amount. Understood this point? Let me take one example. Suppose on this date there was indicator of impairment. Carrying amount was 1 lakh and recoverable amount was 70,000. So how much impairment loss you have already charged? 30,000. Correct. Now you will charge depreciation on which amount? On 70,000. Suppose remaining useful life is 10 years. You have done 7,000, 7,000, 7,000. Now it become what? 49,000 carrying amount. And now once again you will find out recoverable amount. And recoverable amount become 90,000. So how much you reverse? That is the point. Understood? How much you reverse? So can you say maximum? Can you say maximum reversal should be this? But can you say, just try to understand, if you would have not charged impairment loss, then your depreciation would have been 10,000, 10,000, 10,000. So if you are reversing impairment loss, you should charge depreciation for 3 years. Means can you say your maximum impairment loss should be 30,000 minus saving in depreciation? Means 3,000, 3,000, 3,000, 9,000. So 30,000 minus 9,000, the maximum reversal should be what? 21,000. Means you should not reverse more than that. And if you are reversing more than that, means you don't know accounting then. Simple na? Are bolna re? Correct. So what they want to say, they have given a formula. Formula, we need to always respect the formula. Correct. So what they said, reversal will be lower of these two. Recoverable amount minus carrying amount. What is the recoverable amount? What is carrying amount? How much? 41,000. Second, you need to find out carrying amount if there would have been no impairment loss. So if there would have been no impairment loss, carrying amount would be 1 lakh minus 30,000, 70,000. So carrying amount as if no impairment loss was ever charged minus carrying amount. So it would be 70,000 minus what? 49,000. You can see what will come. 21,000. Jadu. This is 21,000 na. So your maximum impairment loss will be lower of these two. Maximum impairment loss will be lower of these two. Suppose recoverable amount is not 90,000, suppose it is 60,000. Then what will be the case? Point number one, it will be 60 minus 49,000. How much? Now you only say, can you reverse more than this? Because if you reverse more than this, then it become upward revaluation. And upward revaluation means it will be credited to OCI as revaluation surplus. And that too only you have, when you have opted for what? Revaluation model. So if you are reversing beyond this, means you are increasing beyond what? Beyond your recoverable amount. Are you getting? So I hope you are understanding. So this is 70,000 minus what? 49,000. So you cannot reverse beyond what? 11,000. So it will be lower of these two. Are you able to understand? Correct. Means what they want to say. Suppose this is what? Your carrying amount. How much? 49,000. This your carrying amount if there is no impairment loss. And your recoverable amount is 90,000. So can you see if you are reversing means if you are increasing beyond this, so can you see this is nothing but upward revaluation. So you cannot increase beyond your original carrying amount. And if you are increasing beyond your original carrying amount, it will result in upward revaluation. It should be credited to OCI. That too only when you opted for revaluation model. Means your reversal should be only the difference between these two. That is what 21,000. 21,000. I hope you have understood. Correct. Reversal you understood. That is only given check करेंगे. Reversal of impairment loss will be measured lower of after reversal revised carrying amount shall not exceed the carrying amount that would have been determined. Net of depreciation and amortization had no impairment loss be recognized. So this will be equal to carrying amount of asset as if no impairment loss was ever recognized less present carrying amount maximum amount of impairment loss to be reversed. Point number 2, after reversal carrying amount of CC should not exceed is recoverable amount. This is the basic objective of this chapter. Carrying amount should not exceed is recoverable amount. This is the basic objective of this chapter. Recoverable amount minus present carrying amount. So the reversal amount will be lower of this two. Now, correct. This you understood? Accounting treatment of reversal of impairment loss. So can you see if it is what? Uh, the asset for which we have opted cost model only, then reversal will be through PL only. Reversal will be through PL. But if it is what? Those asset which was revalued, then if you are saying reversal means gain. Correct now. So can you say how to reverse that? But you only say follow. So can you say any reversal of impairment loss to be credited to OCI as revaluation surplus? Correct. So what they are saying, a reversal impairment loss for an asset is recognized immediately in PL. A reversal of impairment loss on a revalued asset is recognized in OCI and increase in revaluation surplus for that asset. However, if there was any previously downward revaluation, so reversal will be first credited to PL to the extent of previous decrease. Any balance reversal should be credited to OCI as revaluation surplus. That is only given. To the extent that impairment loss was previously recognized in PL, a reversal of that impairment loss is also recognized in PL. But this type of question still not asked. Because normally it has been seen that impairment loss, whenever they ask, they assume it is cost model. Till now the revaluation model they have not given. Only for individual asset they have given, that too only for what? Impairment loss. Reversal they have not given. Correct. Now this you understood. Now what India's 36 is that we can reverse impairment loss, but reversal of impairment loss of goodwill is not permitted. Means once goodwill impaired, reversal of goodwill is not permissible. Means you can reverse impairment loss of any asset other than what? Goodwill. For goodwill, impairment loss can't be reversed. Understood? I hope you have understood. Now reversal of impairment loss for CGU. The entity shall allocate the amount of reversal of asset to CGU except goodwill. So whatever reversal is coming, that should be allocated to other asset except goodwill in the ratio of their carrying amount. In the ratio of their carrying amount. Understood? I hope you have understood. Disclosure you can do by your own. This chapter completed from my point of view. Some question I will take. Don't worry, I will take some question. But first, any doubt? Any doubt? Can you ask me? Now, one question has been asked. Is sir for CGU? Just right. What is the question? Let me understand that question. They are saying there is one CGU and the impairment is done on which date? On 31st March 2001. Means what is the impairment date? I think impairment date is 31st March 2000. Correct? It means we need to estimate the future cash flow for 5 years they have given. Correct? And we are expecting to purchase one machinery on 1/4/2001. But they are saying we'll purchase one machinery on this date. Correct? Understood? We'll purchase one machinery on this date. So just try to understand first thing. We need to find out recoverable amount CGU as per present condition. As per present condition. Now this machinery, why you are purchasing? This machinery is not a part of CGU right now. This whether this machinery is a part of CGU right now? No. So just try to understand this. Any machinery you are purchasing, because of that machinery your future cash flow will increase. That is nothing but future capital expenditure. So this future capital expenditure should not be considered. Understood your doubt? Have you understood this point now? This is nothing but future capital expenditure. Now, any future capital expenditure should not be considered. To estimate the value and use of CGU, because we want value in use as per current condition, then the no asset will be impaired, right? If you are taking future capital expenditure into consideration, then I will say don't do impairment testing. Impairment loss will be always zero. Understood your doubt? Bola. Correct. Let me take some other questions. So we have done 13, we have done 28. Sun Limited is an entity with various subsidiaries. The entity closes its books of account at every year ended on 31st March. On 1st July 2001, Sun Limited acquired 80% interest in Pluto Limited. Details of the acquisition were as follows. This is a question related to business combination. Because goodwill will come only in case of business combination. So I will assume that you know some point of business combination in this chapter. Again, I will assume. If you don't know, then we'll do business combination automatically. You will understand. Sun Limited acquired 8 lakh shares in Pluto Limited by issuing 2 equity shares for every 5 acquired. So they have given some information to calculate purchase consideration. The fair value of Sun Limited share on 1st July 2001 was 4 rupees per share and the fair value of Pluto Limited share is 1.4 per share. The cost to be issued were 5% per share. Now as per Ind AS 102, any cost of issue is not a part of purchase consideration. Correct? So this cost of issue means whenever you are issuing an equity share, so you need to incur some share issue expenses. So that share issue expense is not a part of purchase consideration. So this you need to ignore. To calculate goodwill, this is bakwas point. अरे बोलना रे? Yes sir. Sun Limited incurred further legal and professional costs 1 lakh that are directly related. So what Ind AS 103 says that any directly related acquisition cost will be charged to PL. It is not a part of purchase consideration. So this is also bakwas point. For this question, this is bakwas point because we are here to calculate goodwill. The fair value of identifiable net asset of Pluto Limited as on 1st July 2001 were measured at rupees 1.3 million. Sun Limited initially measured NCI in Pluto Limited at fair value. Remember, you know about the fair value of NCI or proportionate share in INA method, means either they can be partial goodwill or full goodwill. Either they can be partial. So in this case, fair value means full goodwill. They use the market value of Pluto Limited share for the purpose. No impairment goodwill arising on the acquisition of Pluto Limited was required at 31st March 2002 or 2003. For these 2 years, there was no impairment. Pluto Limited comprised of 3 CGU ABC. When Pluto Limited was acquired, the directors of Sun Limited estimated goodwill arising on acquisition could reasonably be allocated on 2:1 basis. Is allocation ratio given? The carrying value of asset in this CGU and their recoverable amount. So you can see they have given carrying amount of this CGU and recoverable amount. This is given. There is some typo mistake in the question. This is given as on 31st March 2004. Correct. Compute the carrying value of goodwill arising on acquisition of Pluto Limited in consolidated balance sheet of Sun Limited as on 31st March 2004 following the impairment review. Compute the total impairment loss arising as a result of impairment review, identifying how much loss should be allocated to NCI in Pluto Limited. Correct? Can we do it? Means थोड़ा सा concept related to business combination also. So first we need to find out purchase consideration. Purchase consideration will be fair value of equity shares issued. Fair value of equity shares issued. What is the fair value of equity shares issued? How many shares acquired? You can see they acquired 8 lakh shares. And for 8 lakh shares, they have issued 2 equity shares for every 5 acquired. It will be 8 lakh into what? 2 by 5. So this is how many shares issued? 3,20,000 equity shares issued. And what is the fair value of equity shares of Pluto Limited? It is how much? Sorry, Sun Limited. How much given? 4. So we'll do into 4. How much it is coming? 12,80,000. Correct. So only they have issued equity shares. So can this become purchase consideration 12,80,000? Now second we'll calculate goodwill. Goodwill is equal to what? Fair value of PC. What is the fair value of PC? 12,80,000. This is for how much percentage? 80%. Now we need to find out fair value of what? NCI. NCI. So if suppose 8 lakh represent 80% shares, so 20% represent 2 lakh shares. So can you see we'll do 2 lakh into what? Into the market price of shares of Pluto Limited is 1.4. 1.4. So this become fair value of NCI. What is the fair value of NCI? 2 lakh 80,000. This become how much? 15 lakh 60,000. From this we'll deduct fair value of INA. Fair value of INA is given. How much given? 1.3 means 13 lakh. 13 lakh. So what is goodwill? 2 lakh 60,000. Goodwill is 2 lakh 60,000. Have you understood? Correct. Let me check whether the answer is correct or not. Let's check. 2 lakh 60. Correct. Now we'll do impairment testing. The impairment testing will be done on 31st March 2004. So they have given how many CGU? 3 CGU. What is the name of CGU? It is ABC. Can you give me the carrying amount of ABC? 600. 600. 550. 450. Then you allocate goodwill in which ratio? Is given 2:2:1. Allocate 1,04,000. 1,04,000. 52,000. Can you give me the total? 654,502. Then we'll compare with recoverable amount. That is also given how much? 740, 650 and 400. Can you give me the impairment loss? Total impairment loss? This is nil. This is 4, 102. 102 na? This is first allocated goodwill. This is how much? 4. This is 52. Balance will be allocated to other CGU. Nil nil. How much? 50. Done. Understood. Now they have asked, this is the first done. Means we can find out revised carrying amount, we can find out. Means what is the total impairment loss? So total impairment loss of goodwill and CGU is how much? This is 56 and this is 50. Correct. So can you say this will be allocated to parent company and NCI? So parent company and NCI, this will be allocated. This will be allocated to parent company and NCI. This is a part of consolidation chapter. So any impairment loss will be attributable to owner of parent company NCI. So this will be allocated 80% and 20%. 80% and 20%. So again, this goodwill is equal to full goodwill. If it is full goodwill, so impairment loss of the full goodwill will be attributable to both parent and NCI. But if it is partial goodwill, it will be only attributable to parent company. This point you remember. So because full goodwill, this you can calculate. Understood. That is only given how much it is attributable to NCI they have asked. Correct now. So once they have calculated, you can see they have calculated what? 106 is the total impairment loss. Out of that 20% is allocated to what? NCI. So 106 ka 20% is how much? 21.2 will be allocated to NCI and balance will be allocated to the parent company, is owner of parent company. Understood? Correct. This you have understood. This question number 30 is very important because newly inserted question and can be asked. Correct. Now, A Limited acquire 80% shares of subsidiaries of B Limited for rupees 3,200. Understood? At the date of acquisition, B Limited identifiable net asset is 3,000. A elect to measure NCI at proportionate share of net identifiable asset. So in this case, NCI is measured by using proportionate share in INA method, means partial goodwill. Whenever there is a partial goodwill, then there are some adjustment required. There are some adjustment required. Are you able to understand what I am saying? Whenever there is a partial goodwill, some adjustment is required. You can see they have goodwill. Thank you very much. At the end of next financial year, B Limited carrying amount is reduced to 2,700. Means they are given carrying amount of CGU 2,700, excluding goodwill. Recoverable amount, case 1, case 2, they have given calculate impairment loss. So first we'll do case 1. Case 1 is what? Recoverable amount is equal to 2,000. Correct. Now we have what? Goodwill and other asset, and this become total. So can you give me carrying amount of goodwill and carrying amount of other asset? 2,700, and this is equal to 3,500. Now just try to understand what Indians want to say. When you have calculated recoverable amount, so can you say recoverable amount will be considered by taking full goodwill or partial goodwill? Full goodwill. Recoverable amount will be always calculated by taking full goodwill into consideration. Because if you want to find out fair value, so fair value is the amount when the entity is sold. So of course the entity is sold, to entire goodwill amount will be recoverable. Correct. It means to calculate recoverable amount, if you are considering full goodwill, okay, this carrying amount is 800. This is partial goodwill. So you should first make it what full goodwill for only what impairment testing. So we'll do what first? We will add unrecognized goodwill. So this is how much percentage? 80% now. How much? 80% now. 80%. So it means you need to increase by 20%. So if 80% is 800, what is 20%? So 20% increment you'll do. It means now it will be also increased by 200. So now it become 1000. It become 2700. This become what? 3700. This point have you understood? Now compare with the recoverable amount. What is recoverable amount? 2000. So it means total impairment loss is 1700. First it will be allocated to what? Goodwill. Balance will be allocated to what? This. Correct? Understood. Means just try to understand. Out of this impairment loss, 200 was unrecognized. So only impairment loss is 800 na. Means your impairment loss will be 800 and 700. Because whatever is unrecognized that you can't impair. Understood? Means can you see if you want to find out impairment loss, so what is the carrying amount of goodwill? 800. So impairment loss will be also 800. This become nil. What is the carrying amount of CGU? It is 2000. How much impaired? So this is what 2000 will be what? Carrying amount, revised carrying amount. Okay. Means your total impairment loss is how much? 1500. My question to you, this will be allocated to parent and NCI, only parent? Only parent. Nothing will be attributable to NCI. But this will be allocated to both parent and NCI. This was the concept. But this you can understand only if you know business combination. Huh? Normally I teach this entire para in business is in consolidation chapter basically. Have you understood this point? Can you do case number 2 by your own? Just do case number 2. Let's see whether you have understood or not. Case number 2, 2800. Recoverable amount is 2800. Do by your own. I'm waiting for 2 minutes. Everyone will do, huh? Done. Hmm? Done? What you have done? Once again, same only. Goodwill is how much? 800. This is what? 2700. This become 3500. Increase by 200. Increase by 200. Understood now? 1000, 2700, 3007. Now what is the recoverable amount? 2000. What is the total impairment loss? What is total impairment loss? 900. Will be allocated entirely to what? Goodwill. Nothing. Understood. Correct. But can I say out of this 900, 20% will be to NCI and 80% to parent company? Means 900, 80% how much? Only 720 will be recognized. So only impairment loss will be 720. Means you can't say this 900 entirely will allocate to this 800. This is not correct. Understood? Means can I say your goodwill is 800. What is the impairment loss? 720. 720 is the impairment loss now. So your carrying amount of goodwill will be how much? 80. Revised carrying amount. And this will be only attributable to what? Parent company. Nothing will be allocated to NCI. Understood? Have you understood? Understood. This question also done. Correct? Let us take one more question. 27. On 1st April 2001, Benes Limited acquired 100% of Saturn Limited for rupees 4 lakh. The fair value of net asset identifiable of Saturn Limited is 3 lakh 20,000. The goodwill is 80,000. So you can see 4 lakh minus 3 lakh 20 will be 80 only. Saturn Limited is a coal mining business. On 31st March 2003, the government has cancelled license. So cancelled license means this is an indicator of impairment. Correct? Understood? The second para is Bakwas, you can read. Then Venice Limited use straight line depreciation. The useful life of certain limited asset is estimated to be 20 years with no residual value. No independent cash inflow can be identified to any individual asset. So the entire operation of certain limited is treated as CG. Due to regulatory intention, it is not possible to determine the selling price of certain limited. Fair value is not determinable. Its value in use is 2,12,000. Suppose by 31st March 2005, the government reinstate the license of Saturn Limited. Is an indicator of reversal. The management expected favorable change in net cash flow. This is an indicator that impairment loss might be reversed. The recoverable amount of certain net asset re-estimated. The value in use is now 3,04,000 and fair value less cost of disposal is 2,90,000. You will take higher only 3,04,000. Calculate impairment loss and is reversal. Correct. So what is the date of impairment? 31st March 2003. The date of acquisition 1st April 2001. Correct. So can we start? We'll start with 1st April 2001. So they have given what? Goodwill and other asset. This become total. What is the goodwill? 80,000. Other asset is what? 3 lakh. Total is equal to 4 lakh. First we'll calculate what? Depreciation. So accumulated depreciation or amortization. Okay, goodwill will never be amortized. But this 3,20,000, what is the useful life they have given? Divide by 20 into 2 will do. Because after 2 years there is impairment na. So how much it is coming? 32,000. This is 32,000. This is coming how much? 80,000. 2 lakh. 88,000. How much? 3 lakh 76,000. Then compare with recoverable amount. Recoverable amount given how much? 2 lakh 12,000. 2 lakh 12,000. So what is the total impairment loss? 1,64,000 entirely will be allocated to what? Like first it will be allocated goodwill balance how much? Balance 84,000. What is the revised carrying amount? Revised carrying amount nil. This is how much? 2,04,000. Something we are doing wrong. The revised carrying amount should be 2,12,000. We are doing something wrong. Where we are doing wrong? Check karo. This is not correct. Why you have given 3,76,000? 3 lakh. I am only totally dependent on you, huh? 3,68,000. This is how much? How much? 1 lakh? 1,6. 156 ray. How many mistake you'll do? 1,56,000 na? Out of this, how much allocated? 80. Balance is 76,000. So now it is coming how much? 2,88,000 minus this 2,12,000. Means of course our revised carrying amount will be equal to recoverable amount only na. Therefore I was able to identify the mistake. Understood? This must be very easy. Now coming to reversal. Now reversal was done on which year? 31st March 2005. Means again after how many years? After how many years? 2 years na? After 2 years. But can I say now goodwill column is not required? Because once impaired, it is not required. If suppose there is some balance, then we'll take into consideration. Are you getting? But there is no balance. So now only what is required? 2 lakh 12,000 record. Now first accumulated depreciation for how many years? 2 years. It will be 2 lakh 12,000. What is the remaining useful life? 18 into what? 2. 23 triple. How much? 188 44 Can you say we can find out reversal will be lower of what? Point number A. First, can you give me what is the recoverable amount as on this date? Recoverable amount is 3 lakh 4,000. What is the present carrying amount? 188,445. So how much it is coming? 1,15,555. Then we'll also compare carrying amount as if no impairment loss was ever charged. We need to find out this. Correct. What was the original carrying amount of other asset only? 3,20,000. Then is we need to depreciate for 4 years. So 3,20,000 divided by what? 20 into 4. How much? Miss, can you give me 3,20,000 minus 64? So it would have been 2,56,000. What is the present carrying amount? Present carrying amount is 1,88,445. So this is maximum reversal. How much? 67,555. So lower of this will take the amount of reversal will be equal to 67,555. So what is the revised carrying amount? Revised carrying amount will be what? 1,88,445 plus what? 67,555. That is equal to 2,56,000. Understood? Very easy once you have understood the formula. Apply formula. I mean this is very easy formula. Lower of these two. If you revise formula, you can attempt na. Calculation mistake, so no one can help you. If you are doing calculator mistake, calculating mistake, calculation mistake, amount mistake, identity, taking wrong information from the question, then no one can say. But can I say if you are doing that correct, then very easy to score. Very easy to score, na? Have you understood this? So can I conclude that this chapter is completed from my point of view? I have taken good questions, good questions. I have already said if you have some questions in your mind, you can ask me. I will do that. Understood? In this chapter, practice required, nothing more than many questions given in ICAI study material. If you do more practice, more fluency will come. Otherwise, concept is this much only. Correct? So can we take 5 minute break? We'll take 5 minute break. Then we'll start a small Indias. We'll start Indias 41. Okay? Can we start once again, everyone? Okay. Now, everyone, we have completed India's 36. Now let us start a new India's 41 agriculture. Correct. Very small India's. Okay. Now, India's 41. India's 41 is agriculture. So what is the scope of this India's? India's 41 is applicable to biological acid. What is the meaning of biological acid? Biological acid is living animal and living plant. But all plants are not covered. Only those plants which are not bearer plant will be covered in this chapter. Already we have done that bearer plant will be covered in which chapter? India's 16. Correct. Now it will also cover agriculture produce at the point of harvesting. So any agriculture produce at the point of harvesting. Point of harvesting means when you are harvesting agriculture produce. That point India's 41 is applicable. After that, can I say agriculture produce once harvested it becomes inventory. So after harvesting India's 2 will be applicable. Correct. Now it is also applicable to government grant related to biological acid other than bearer plant. Means can I say any government grant related to biological acid will be covered in this chapter, but any other government grant in India's 20 will be applicable. This point I have understood. Means can I say can I say government grant related to bearer plant will be covered where? In India's 20. But government grant related to other than bearer plant will be covered in this chapter. Correct? Yes, sir. Now we have understood that India's 41 will not be applicable to bearer plant. It will not be applicable to government grant related to bearer plant. It will not be applicable to any land, agriculture land related to agriculture activities. It will be also not applicable to any intangible as related to agriculture activity. For that we have specific Indias. Correct. Now to start this chapter, can I say we need to first understand what is the meaning of agriculture. One question is given in RTP to find out whether it is an agriculture activities or not. So one question in this new RTP, this atom RTP, one question has been given whether this contract will give an agriculture will meet the definition of agriculture or not. So it means can I say if it meet the definition of agriculture then only India's 41 is applicable. Means India's 41 is applicable only when there is an agriculture activities. Means if there is no agriculture activities then India's 41 is not applicable. For example, if you purchase a dog for security purpose, whether India's 41 is applicable? No. So dog is a biological asset, but for that dog which is not related to agriculture activities, India's 41 is not applicable. Now the question arises to those biological assets for which India's 41 is not applicable. Means there can be some animal for which India's 41 is not applicable because they are not related to agriculture activities. Then the question arises for that which India's is applicable, so there is no India's for that. Correct? Are we getting in that situation? India's 8 has given some guidelines. India's 8 means the India's 8 has given some guidelines how to form accounting policies. So that we'll discuss there. Are you able to understand what I am saying? So agriculture activities means what? It refers to management by an entity. It refers to management by an entity of biological transformation and harvesting. Means there must be some biological transformation and harvesting of biological acid. Means both should be there. Both biological transformation and harvesting of biological acid for three purpose. For three purpose. First is what? Sale, either for sale or for conversion into agriculture produce or for conversion into additional biological acid. Correct? Means can it in simple word for future economic benefit? The future economic benefit related to agriculture activity will come from what? Either from sale of biological acid or from conversion into agriculture produce or from conversion into additional biological acid. Correct. So what is the keyword? First keyword is management. Means can I say it should be a managed source of activity? Any unmanaged source of activity will not be considered. So it should be a managed source of activity. It should not be unmanaged source of activity. Correct. Second, there must be biological transformation. So we need to understand what is the meaning of biological transformation. It is a biological transformation is change in the physical size of that animal, correct, or change in the quality of that biological acid. So change in the quantity or change in the quality of that biological acid is known as biological transformation. Harvesting means what? Harvesting means what? Let us read the definition only. So what is the meaning of biological transformation? Biological transformation consists of process of growth. Growth means increase in quantity or increase in quality. Or degeneration means what? Decrease in quantity or decrease in quality. Or procreation means creation of additional biological acid or production of agriculture produce, correct. So biological transformation consists of these four processes: either growth, degeneration, procreation, or production of a agriculture produce that causes either qualitative changes or quantitative changes of that biological acid. So this is known as biological transformation. What is the meaning of harvesting? Harvesting means either detachment of agriculture produce from biological acid. So either detachment, you are detaching that biological acid and detaching that agriculture produce from biological acid. We suppose this is one mango tree and there is a mango. So when you are detaching this mango from this biological acid, this is known as harvesting, correct? Or or it will also include a cessation of biological acid life process. Means when you cease the life of any biological acid, that is also known as what? Harvesting. So either detachment of agriculture produce or seizing the life of biological acid, both are known as what? Harvesting. Correct? Understood. So can I say any managed source of activities which include biological transformation as well as harvesting? Means if you are doing only biological transformation, this is not agriculture activity. When you are doing only harvesting, this is not agriculture activity. You should be involved both in biological transformation and harvesting. Both together become what? Agriculture activities. Understood? Correct. Yes, sir. So biological acid, beer plant, we have already done the meaning of beer plant. Correct. Let us come to some example. You need to just say whether India's 41 is applicable or not. Correct. Manage breeding program of animal. Breeding program. Breeding program means you just take care of animal and involve in breeding. Breeding means what? Generation of additional biological acid. Breeding means that. Correct. So of course India's 41 is applicable. Growing plant for producing drugs. Drugs means medicine, huh? Growing plant for producing drugs. So of course it will be also applicable. Correct. Maintaining livestock. So of course India's 41 is applicable. Forestation. Forestation. When you say forestation, this is artificial forest, not natural forest. So when you are doing forestation, means of course this is what? What? Applicable. But deforestation, just when you are doing deforestation, there is one contract to destroy the forest. So there is a contract to destroy the forest is India's 14. This is not agriculture activities. When you have taken a contract to destroy the forest, that is known as deforestation. So that is not agriculture activities. Forestation is an agriculture activities, but you have taken a contract to destroy the forest is not an agriculture activities. This is not applicable. Correct. Annual cropping, yes, it is applicable. Cultivating orchids means flower, na? It is applicable. Floriculture means flower. It is applicable. Aquaculture means fish farming. Aquaculture means you will just generate one artificial pond in that you are producing some sea animal. Correct now. Reproducing sea animal. That is known as what? Aquaculture. India's 41 is applicable. But fishing in the ocean, if fishing in the ocean is not a managed source of activities, you are going for fishing, enjoying your life. That is not what? Agriculture activity. Fishing in the ocean, it is not applicable. Correct? Understood this point? Managing animal related recreational activities. Suppose you have some monkey and you are doing some recreational activity. So recreational activities for the entertainment purpose in AS 41 is not applicable. Managing animal shelter, yes. If you are managing animal shelter, so of course you are involved in generating what? Additional biological acid and sale of biological acid. So of course it is also applicable. Correct. But natural breeding of animal in zoo. Natural breeding of animal in zoo. So of course this is natural breeding. This it is not a managed source of activity. Therefore it is not applicable. What is not applicable? India's 41 is not applicable. Animal held for securities purpose. India's 41 is not applicable. Understood? Correct. Yes, sir. Now coming to what recognition and measurement. To recognition, can I say it will be recognized means we recognize biological asset or agriculture produce when and only when three conditions are satisfied. Till now there were two conditions. Now they are given three conditions for biological asset and agriculture produce. First condition is same. Second condition is same. It is probable that future economic benefit associated with the asset will flow to the entity. Second condition is more or less same, but can you see here they have given fair value or cost. So either fair value or cost can be measured reliably. Now you must be thinking why fair value? So guys, there are many biological assets for which cost is not determinable. For example, can I say newborn calf from cow? So for calf, can you find out what is the cost price? Newborn calf cost price is not determinable. Therefore, we to initial recognition at fair value, and therefore they have said whether fair value or cost can be determined reliably. Correct. The first condition, the entity control the asset as a result of past event. Correct. Now control the asset, can I say, just try to understand when I am saying biological asset, so with the asset control automatically came, but then also in this recognition criteria they have intensely once again given there must be control over such biological asset. But how the control is acquired in biological asset, that we need to understand. Have you seen any animal shelter? So you will see that in that animal some marking will be done. Or if you went to some gosala etc, means where the cow will be sheltered, you will see in every cow there will be one number, number 1, number 2, number 3. Why the number is being given? To identify the control. To identify the control. This the cow belong to us. This cow belong to us. Understood? So can I say how the control will be identified through some branding or through some marking? According to what they want to say, control over biological asset or agriculture produce may be evidenced by the legal ownership or right to control. For example, legal ownership of cattle and the branding or otherwise marking of the cattle on acquisition, birth or winning. Understood? Correct. So it will be acquired either through legal ownership or through what? Right to control. But how you will identify when you have done some marking on that animal or agriculture produce? Correct. Now then it will be evidence that yes, you have control over that biological asset. Correct. But okay, you have understood. Correct. Now coming to measurement criteria is very simple. Initial recognition and subsequent recognition both are done at what? Fair value less cost to sale. We can see fair value less cost to sale, fair value less cost to sale. Correct. Now to explain, you just try to understand, because can I say fair value whenever we say fair value means Ind AS 113. Now what Ind AS 113 says that fair value means market price minus transportation cost is equal to fair value. Means to determine fair value we should deduct what? Transportation cost. But we should not deduct transaction cost. So there are two type of costs. One is known as transaction cost, one is known as transportation cost. So to find out fair value we should deduct what? Transportation cost. But when I am saying transaction cost means either to purchase you need to incur some cost, or to sell you need to incur such cost. So fair value is determined at the time of sale. Means when you sell the asset, how much price is obtainable. That is known as fair value. Are you getting what I am saying? Means if you want to find out a fair value, this calculator. So can fair value can be at the time of purchase of similar asset or at the time of sale of this asset. So fair value is calculated from the point of view that when you sell this asset, how much amount is obtainable. Correct. So can I say at the time of sales means transaction cost will be to make such sale. Correct. So can I say here transaction cost will be cost to sale. And therefore, if you remember, we have done one question under India 16 where fair value less cost to sale was given, but revaluation was done at fair value. So we have added cost to sale to find out fair value. So fair value is without deducting what? Transaction cost. Are we able to understand? So when I am saying fair value means what? Market price minus transportation cost. And when I say cost to sale, so this become fair value minus transaction cost at a time of sale. That become fair value less cost to sale. Have you understood this point? Have you understood this point? Why I am saying, because in this question both transportation cost and transaction cost will be given. But transaction cost at a time of sale, not at the time of purchase. You deduct. Correct? Yes, sir. Then subsequent recognition will be also done at fair value less cost to sale. Correct? Understood? Yes, sir. Now there is one presumption in this India 41 that fair value can be measured reliably. But it is quite possible that fair value cannot be measured reliably initially. Initially. Just try to understand any biological asset when till it is matured, so it is not sellable. If it is not sellable, it does not have an active market. It does not have an active market. We can't find out fair value. For example, right now one calf is born. So newly born calf may not be sold in the market. Why it cannot be sold in the market? Because there is no buyer. There is no active market for that newly born calf. So if you cannot find out active market, can you find out fair value? Can't find fair value. It is quite possible for initial sum year, you are not able to determine fair value. Now, if you are not able to determine fair value, the question arises: can you do initial recognition at fair value less cost to sale? No. So, for that situation, one alternative accounting treatment has been given, that in that case apply cost model. So, what India's 41 says that till fair value is determinable, apply cost model for initial and subsequent recognition. Have you understood this point? Have you understood? Till fair value is determinable, apply what? Cost model as per India 16 only. Understood? For that particular biological asset. The cost model means what? Cost less accumulated depreciation less accumulated impairment loss, and this cost model will be as per India 16, means depreciation calculated as per India 16 and impairment loss calculated as per India 36. You remember when I started India's 36, I said biological assets which are measured under cost model, it will be covered under India's 36. Remember? Have you understood this point? Means, can I say in this way? Just try to understand what I am saying. Can I say in this way? Suppose this is one biological asset and if you can determine fair value initially, so can you apply cost model? Suppose you can determine fair value initially. So can you apply cost model? No. In this case, we can't apply cost model. Means cost model is applicable only when you are not able to find out fair value. Then you can apply cost model initially, cost model subsequently also. But suppose at this point of time you are able to determine fair value. Can you apply cost model again? No. You need to switch to what? Fair value model. Understood this point? Yes, sir. Correct. Now, can I say just try to understand? Suppose everyone just try to understand. Suppose initially it was 100, the cost price, correct, and the fair value is equal to also 100. Because can I say on the date of acquisition, fair value and cost price will be same. Approximately it will be same because you are paying the fair value only, correct. But there will be one transaction cost. Transaction cost means cost to sale. Transaction cost means cost to sale is equal to 10. So it become 90. This become fair value less cost to sell. What journal entry you'll do? बताओ. Biological asset account debit how much? 90. But how much you have paid? 100. And this will be transferred to PL or not? 10 will be transferred to PL. Means can I say on initial recognition, some amount will be recognized as a loss. Understood? Have you understood this point? So transaction cost means cost to sell will be recognized as what? Loss. Correct. Now let us assume again the fair value less cost to sell become 125. Quite possible. So what journal entry you will do? 90 become 125. Increase by 35. So now once again you'll do one journal entry. Biological asset increase by 35, and this gain will be transferred to PL. Even though unrealized, this gain will be transferred to what? PL. And if there is a loss will be also transferred to PL. Understood? Now what Ind AS 41 says that this increase is due to two factors. One is due to price change, one is due to physical change. Means can I say of course the value of the biological asset has increased due to biological transformation also. Initially the cow was 1 year, now it become 2 year. So due to biological transformation value will increase. Or due to price changes also what value will increase or decrease. So there are two factors for what increase or decrease. One is price changes, one is physical changes. So when you disclose how much amount is increased or decreased due to price changes, how much amount is increased or decreased due to physical changes. Understood? Let me take one more example. Suppose there is a newly born what? Newly born calf. Then cost price is nil. Newly born calf cost price is nil, na? Correct? You have not paid anything to acquire. This is what self-generated. Correct? Self-generated means what? Try to understand. Are you able to understand what I am saying? Newly born. You have not purchased. It is what? Additional biological asset from principal biological asset. Correct. But you need to find out fair value less cost to sell. Suppose it is 90, quite possible. Then what journal entry you'll do? Biological asset will be recognized at 90 and entire will be gain, and gain will be transferred to PL. Means on initial recognition, entire amount will be gain, and subsequently it may become 100. Once again you recognize the gain to what? PL. And this gain can be due to what? Price change or physical change. Both need to be disclosed. Okay, how much due to price change, how much due to physical change. Understood? I hope you have understood. So what they have given? Once the fair value of such biological asset become measurable, then it will be measured at what? Fair value less cost to sales. Means initially we can use cost model, but once the fair value is determinable, then use what? Fair value less cost to sell. Correct? Understood? The fair value less cost to sell a biological asset can be due to physical change or price change in the market. This point have you understood? Yes, for agriculture produce also same thing. Measurement at the point of harvest what? At fair value less cost to sell. Now what they want to say, suppose this is what? Mango tree. And suppose this is the point of harvesting. Point of harvesting is on this date we are doing harvesting. Correct? So what journal entry will do? Agriculture produce account debit at fair value less cost to sell. Correct? Means at the point of harvesting which Ind AS is applicable? Ind AS 41. Can you say before harvesting it was a part of biological asset only? And of course it is a bearer plant. So bearer plant to Ind AS 16 will be applicable. But agriculture produce which Ind AS will be applicable? Ind AS 41. Are you able to understand? So at the point of harvesting, Ind AS 41 is applicable. Once again, can the cost is not determinable. It will measure at fair value less cost to say suppose 100. So again this become gain, and gain will be transferred to what? PL. Now okay, so once harvested, it will become inventory. Inventory means Ind AS 2. And what India's 2 says that valuation will be done at cost price or NRB whichever lower. So what they are saying, the cost price, NRB so we can estimate. Now, NRB is not fair value. Fair value and NRB are two different terms. Fair value and NRB are two different terms. But the question arises, what is cost price? So what they are saying, this 100 will become what cost price. So what India's 41 says that after harvesting, the fair value less cost to sell become cost price for application of India's 2. For application of India's, understood this point? Have you understood what they have said? Measurement at fair value less cost to sell at the point of harvesting. This fair value less cost to sell will become cost price for applying India's 2. Any doubt? No doubt? Correct. This much you understood? Can you say rules is very simple for India's 41? Rules are very simple. Initial recognition, subsequent. Correct. Now, point number D what said? Sometimes cost may approximate to fair value. If cost may approximate to fair value, it does not mean we are applying cost model. So they are just giving one clarification that sometimes cost may approximate to fair value. It does not mean we are applying cost model. It means we are applying fair value model only. अरे बोलना रे. So what they are saying, sometimes cost may approximate to fair value. It does not mean we are applying cost model. We are applying what fair value model only. So in two situations, cost may approximate to fair value. They have given some example. There is a little biological transformation since the date of acquisition. We just try to understand. Suppose on 31st March, this is the reporting date, and some days before we purchase a biological asset, there is a no biological transformation. So you purchase at rupees 100, after 15 days it will remain 100 only na, because there is a little biological transformation from the date of purchase. So it might happen cost price and fair value on 31st March remain same. It does not mean we are applying cost model. We are applying what? Fair value model only. Similarly, the impact of biological transformation on price may be very less. Suppose there is a pine tree. You know about pine tree, which is used for decoration, etc. If you have went to aeroplanes, airport side, you have seen many plant which attractive plant. There is no agriculture produced, only for attraction. So normally the price of that biological asset remain constant every year. There is no increase in the fair value. So you purchase at rupees 1000, it will remain 1000 for the entire life. Okay, there is no impact on the price. So cost will be approximately equal to fair value. Therefore, we are applying cost model or fair value model. Fair value. They have given some clarification about this. I hope you have understood. This gain on loss, we have understood that the gain on loss on initial and subsequent recognition will be transferred to PL. Will be transferred to PL. Correct? Understood. Government grant. So can I say government grant related to biological asset other than PRF plant will be covered in this chapter. So what they want to say, any biological asset, any government grant related to PRF plant go to which India's? India's 20. But any government grant related to other than other biological asset is other than PRF plant, India's 41 is applicable. Now this biological asset can be measured at fair value or can be measured at cost. Two option is given, but first preference will be given to what? Fair value model. If fair value model is not applicable, then apply what? Cost model. But two option is there or not? Yes. Understood what I am saying? If measure fair value, what they are saying, if it is unconditional grant without any condition, entire grant will be transferred to PL immediately. Entire grant amount will be transferred to PL immediately. But if it is conditional grant, then once the condition will be satisfied, then only grant will be transferred to PL. Means we need to wait for the fulfillment of condition. We need to wait for the fulfillment of condition. Once condition satisfied, entire grant will be credited to what? PL. So credit to PL only when condition attached to grant will be satisfied. But can I say if major cost, then can I say then to India's 20 will be applicable? So if such biological asset are major at cost, so can I say it become depreciable asset? If it become depreciable asset, two option has been given under India's 20, either deferred income or deduct from what? Cost price of biological asset. Then apply India's 20 only. Have you understood this point? Have you understood this point? Bolo. I think super easy. No point. Disclosure you can read by rule. Entities shall disclose the aggregate gain or loss arising in current period on initial recognition of biological asset and agriculture produce from changes in the fair value as cost to sale on subsequent recognition. Entities shall present a reconciliation statement of changes in carrying amount of biological asset with reconciliation of opening balance and closing balance. So opening balance and closing balance may be changed due to purchase, due to sale, due to fair value gain or loss, due to any harvesting. If there be harvesting, then also it will decrease, na? Correct? Additional disclosure is required when biological assets are measured at cost. So description of such biological asset, explanation why fair value cannot be determined, depreciation method used, useful life and depreciation method, the gross carrying amount, accumulated depreciation and accumulated impairment loss at the beginning and at the end of the period. Government grant, these two disclosures are required. Got it? Correct. India is 41 over. Super easy, na? Understood? Means what is the basic? Means if I will say that what are the key points of this India's 41? The key point is what? First point is what? Initial recognition at pay very less cost to sale. Subsequent recognition at what? Pay very less cost to sale. Any difference will be transferred to PL. Any difference will be transferred to PL. Agriculture produce at the point of harvesting, initial recognition at what? Pay very less cost to sale. Subsequently, it will become inventory, and for Indians too, that fair value less cost to sell will become what? Cost price. However, if fair value cannot be measured reliably initially, then we can adopt what? Cost model. This is the only part in this chapter. Correct? Can we take some questions? Come to India's 41. Good qualities of questions are given in the ICAI study material. There are some good qualities of questions. Come to first question. On 1st November 2001, C Agro Limited purchased 100 goat of a special breed from a market for rupees 10 lakh with a transaction cost of 2%. Means can this is a transaction cost at the time of purchase? What is the purchase? 100 at rupees 10 lakh with a transaction cost. My question to you is this transaction cost is at the time of purchase or at the time of sale? You purchase with a transaction cost of 2%. This transaction cost at the time of purchase or at the time of sale? Purchase, not at the time of sale. But fair value less cost to sale. That cost to sale means transaction cost at the time of sale. The fair value decreased from 10 lakh to 9 lakh on 31st March 2002. Determine the fair value on the date of purchase and as from financial year end 31st March 2002. Under both cases, the transaction costs are borne by seller only. Oh, so what they are saying, this transaction cost is borne by seller, not by buyer. Understood? And the transaction costs are incurred. Second, this is first situation, this is second situation. The transaction costs are incurred by seller and purchaser both. Also pass journal entry in both situations on both dates. Means understood the situation? Case 1. They have said transaction cost is incurred by seller. So I am just giving journal entries only. Journal entry will be biological asset account debit to bank. It means can I say buyer has not incurred transaction cost? Means cost price is 10 lakh only. Correct? And we need to find out fair value. So they have given fair value how much? Can you see on the date of purchase fair value is not given. That will be approximately equal to what purchase price? This will be 10 lakh only. But they have given seller is incurring how much? 2%. So that is cost to sale. So minus 2% how much? That is 20,000. So this become what? 9 lakh 80,000. So at the time of sale will deduct now, because this transaction cost is paid. This amount is received. So cost to sale will be always deducted. Therefore we say fair value less cost to sale. So this become 9 lakh 80,000. Difference will be what? Transfer to PL. PL will be how much? 20,000. Understood? This was the journal entry on purchase. Purchase date was 1/4/2000, 1 November. 1 November 2001. 1 November 2001. Then we'll pass journal entry on 31st March 2002. So, but the carrying amount is coming how much? 9 lakh 80,000. We'll again find out fair value less cost to sale. So they have said it become 9 lakh. 9 lakh. The market price become 9 lakh now. But 2% will be what? Cost to sale. So 2% is how much? 1 lakh. 18,000. This is coming how much? 8 lakh 82,000. So we have taken one assumption, same transaction cost will be incurred. Correct? So what is the decrease? How much loss? How much? 98,000 become loss. So what journal entry you will do? Profit or loss account, means you can say fair value loss account, also fair value loss account debit. How much? 98,000. Correct? To what? Biological asset 98,000. Simple. Case 2 is what? If transaction cost is incurred by both party, then what journal entry? Biological asset. Since the fair value less cost to sell remains same only, that is 9 lakh 80,000, because it is incurred by both the party. But bank will be how much? Because here buyer is also incurring transaction cost. It will be 10 lakh plus, here plus na, plus 2%. So plus 2% is what? 20,000. It will be 10 lakh 20,000. And so why we have done plus? Because it is paid. Both amount is paid. So 10 lakh 20,000. So here loss become how much? Loss transfer to PL how much? Is equal to 40,000. Second journal entry remains same only, because second journal entry you are comparing this with the same amount only. Understood? Have you understood this thing? This question is newly introduced because one doubt came with the previous question. If question is silent, then what will do? Suppose if this case would have not been given. Suppose in exam this is not given, then what will do? Then can you see it depends upon assumption only. Depends upon assumption. So you can assume either A or B. Either A or B. But don't assume it is incurred only by buyer. That will be wrong as per ICAI solution. Either assume it is incurred by both party or assume it is incurred only by seller. Normally transaction costs are incurred only by seller. Normally. Best assumption is point number A. Best assumption is point number A, but I will say question is silent, give both the solution now. Why to take risk? Why to take risk? Just write down if question is silent, assume both situation and answer. Understood this point? Then question number 5, a good question has been given. Question number 5. XY Limited is a farming entity where cows are milked on a daily basis. Milk is kept in a cold storage immediately after making and sold to retail distributor on a weekly basis. On 1st April 2001, XY Limited had a herd of 500 cows which were all 3-year old. Means every cows were 3-year old. Jadoo hai. During the years, some of the cow become sick, and on 30th September 2001 the cow died. 20 cow died. On 1st October 2001, means next day, XY Limited purchased 20 replacement cows at a market price of 21,000 each. These 20 cows were all 1 year old when they were purchased. On 31st March 2002, XY Limited had 1,000 liters of milk in cold storage which has not been sold to retail distributors. Means can I say this will be valued at fair value less cost to sell only? The market price of milk as on 31st March 2002 was 20 per liter. When selling the milk to distributor, XY Limited incurs selling cost of 1 rupees per liter. It will become 19 per liter. This amount did not change during March 2002 and are not expected to change during April 2002. Then they have given information relating to the fair value less cost to sale is given below. You can see fair value of dairy cow 1st April 2001. So 1st April 2001, can you see they were of how much, how many year? 3 year. So 3 year will take 27,000 only. 27,000 minus 1,000 means it will become 26,000. Correct. Then 1st October they purchase 1,000 cow. Sorry, they purchased 20 replacement cow. On 1st October they purchased 20 cow. So they were of what age? 1 year. So we'll take 21,000 minus 1,000 means 20,000 will take. Are you getting what I am saying? 31st March 2002, they can see they were two bunch of cow. One is initially it was 3 year, now they become 4 year. So 4 year means 26,500 minus 1,100. So can you say out of 520 died? So for 480 cows will take how much? 26,500 minus 1,100. How much? It is 25,400. Correct. And for the cow which were purchased on 1st October, it was initially 1 year, now they become 1.5 year. So 1.5 year means 23,500. So for 20 cow, the fair value less cost to sell become how much? 22,400. Are you able to understand? Have you understood this entire information? One second. From the beginning. From last or from the beginning? Last. From the beginning I will say. But on 1st April 2001, how many cows were there? 500 cows. So we'll take the fair value of cow whose age is what? 3 year. We'll take 3 year means 27,000 means this information bakwas. So 27,000 minus 1,000, 20,000. Then on 1st October we additionally purchased 20 cow of what age? 1 year. So 1 year means 21,000. This is bakwas. So 21,000 minus 1,000 it become 20,000. Then on 31st March, out of 500, how much died? 20 died. How much remained? 480. And you see their age was 3 years. Now at the end, after 1 year, that will become 4 year. So 4 year means what? 26,500 will take minus 1,100 minus 1,100. It will become 25,400. And you purchase 20 cow on 1st October. On 31st March, that will become 1.5 year. Initially 1 year increased by 5 months, sorry 6 months. 1.5 year. 1.5 year they have given fair value 23,500 minus 1,100. For 20 cow it will be 22,400. Now understood? You can also assume that fair value of 3.5-year old cow on 1st October 2001 27,000, but this is bakwas. This information is not relevant because if 20 cow died, so that will be de-recognized at carrying amount only. So we are not doing fair valuation of cow which is died. We'll de-recognize it now. Understood? So this information is not relevant. Correct. Past necessary journal entry of the above transaction with respect to cow in his financial statement. Correct. Let us first understand the working rule. Correct. Can we say on 1st April 2001 how many cows were there? Of how many year? What is the fair value less cost to sale? So initially valued at 1 crore 30 lakh. Out of that, how much died? So can you see, will de-recognize that initial carrying amount only? So 20 into 26,000 will de-recognize. So minus 5 lakh 20,000. Then we purchase 20 cow of 1 year. What is the fair value less cost to sale? 20,000. It become 4 lakh. So can I say this become what? The total carrying amount after initial recognition. This you understood. Then we'll find out fair value as on year end. So for 480, how much we have taken? 25,400. For 20, how much we have taken? 22,400. This total will come. This is the closing balance. The difference between these two will be gain or loss. So how much gain, how much loss? This is loss. How much loss? How much? 2,40,000 is the loss. This loss will be charged to PL at year end. Understood. Easy question, na? Understood now? Correct. It means what will be journal entry? The first journal entry can I say we will do for cow which is died on 30th September. Correct. So loss means of course loss na. De recognize the loss account debit to biological asset at carrying amount only. This journal entry understood? Then you purchase. You purchase biological asset. To bank you have paid 21,000. You have paid 21,000 for 20 cow. 21,000. Paid how much? You paid 21,000 na. You purchase at 21,000 is you paid how much? 21,000. So paid how much? 21,000, 4 lakh 20,000. But initially valued at fair value less cost to sale 4 lakh. The difference will be expense and charged to PL. Loss will be charged to PL. This entry you understood? Correct. At the end, can I say you will pass that journal entry? What is the difference? 2,40,000. However, they have done separate journal entry for 480 and separate journal entry for 20. You can do one combined journal entry. There was a loss to biological asset. Or if you want to do for 480 and 20 separately, then find out gain or loss separately and do separate journal entry. So in one gain will come, in other loss will come. That you can do by your own. Then there was one inventory also. Yes, inventory will be measured what? 19,000, 1,000 liter into 19. So we can pass one more journal entry. Inventory account debit to fair value gain transfer to PL. And this 19,000 will be also transferred to PL. Have you understood this point? Because inventory, there was milk. Milk is an inventory now. So at a point of harvesting, it is valued at fair value less cost to sell. Market price given 20, selling expense given 1, will become 19. So 1,000 into 19, 19,000. What journal entry you will do? Inventory account debit to PL. Understood. One more question. This is also a good question. Company X purchased 100 beef cattle at an auction of rupees 1 lakh on 30th September 2001. Subsequent transportation costs were 1,000, that is similar to the cost that X would have to incur to sell the cattle at the auction. Means what they are saying, transaction cost at the time of purchase and at the time of sale will remain same. Additionally, there would be 2% selling fee on the market price of the cattle to be incurred by the seller. We just try to understand. This is transportation cost given. Now they have given transaction cost. This 2% will be incurred only by the seller, not by buyer. Understood my information. Fair value means market price minus transportation cost. But if you want fair value less cost to say, you need to also deduct transaction cost. This point will help you. Now, can we do the journal entry? Because they have asked journal entry. So on 30th September 2001, you purchase biological asset, account debit to bank. So bank will be how much? It is what? 1 lakh. And you paid transportation cost. Transportation cost is paid by both parties, similar. So plus 1,000 you'll do. But will you add transaction cost? No. Why? That is incurred only by seller. It is clearly given the question. Transaction cost incurred only by seller. So this become 1 lakh, 1000, 1 lakh 1000 now. And this amount will be what? 1 lakh minus transportation cost how much? 1000. This become fair value. Now what is the auction fee? 2% of 1 lakh only. That is 2000. So this become what? 97,000. Have you understood? Normally student do mistake यहाँ पर. Very simple question, but if you do muggification, you will do mistake. You need to understand what I am doing. If you see similar question will come, then also you will do wrong if you are not able to understand. Have you understood this point? Correct? So you can see when I am saying payment is done by buyer. So how much paid? Purchase price, transportation cost incurred by buyer, but transaction cost is given only for what? Seller. So 1 lakh plus 1000. But here we are finding fair value less cost to sell. Fair value less cost to sell means if you sell, how much amount you are recovering. So sale will be done at 1 lakh only, minus transportation cost you need to incur, that is given, and minus transaction cost also you need to incur, become 97,000. Loss become how much? Have you understood this point? This point have you understood? Can we come to next point? On 31st March 2002, the market value of cattle in most relevant market increases to 1,10,000. Transportation cost is 1000 would have been incurred by the seller to get the cattle to the relevant market. Means fair value is what? You only say. If I say what is fair value? 1,10,000 ki 1,10,000 minus 1000? Minus 1000. And then an auctioneer fee of 2% would be also incurred. So now on 31st March 2002, you do valuation. So the original carrying amount is coming 97,000. Now you need to find out fair value less cost to sale. So fair value is what? 1,10,000. Transportation cost how much? 1000. Then auctioneer fee 2% is coming 2,200. How much it is coming? How much? So how much increase? How much increase? 97,000 minus this 9,800 increase. So we'll pass one more journal entry. What? Biological asset will increase 9,800. This will become gain on measurement, and this gain will be also transferred to what? PL 9,800. Understood? This journal entry have you understood? Simple. Then on 1st June 2002, X Limited sold 18 cattle for rupees 20,000 and incurred transportation charges of rupees 150. In addition, there was 2% auctioneer fee on the market price of the cattle paid by seller. Okay, this is sale. This is sale. Sale means in this journal entry, my viewpoint and ICAI viewpoint is different. First, let me explain my journal entry. Okay, sale means can I say when we record sale, so sale will be with gross amount only, or we record with net amount. When you record sale, so you record sale. This is revenue because revenue means what? Ordinary activities. So this is actually revenue because we are dealing with agriculture activities. If you are selling your biological asset, that become revenue. Revenue means sales. Correct now. So 18 cattle sold for rupees 20,000. What journal entry will do? What is the date? 1st June. What journal entry will do? Bank account debit to revenue. How much? And then you have also incurred some transportation cost. Transportation cost means carriage outward selling expense. Correct. Means there are two expense, transportation charges and auctioneer fee. Both are selling expense. So selling expense will account debit to bank. That journal entry will do. So can we do one journal entry? Selling expense account debit to bank. Can you give me total selling expense? It is 2% of 20,000. 400 now. So 150 plus 400. That is 550. The selling expense will be transferred to PL. Correct. Then can you say once you have recognized revenue, so biological asset cost will be also transferred to PL. Cost of sales will pass one more journal entry. Cost of sales account debit to biological asset. Correct. So what is the carrying amount of how many 500 na? What was the carrying amount of 500 cows? It was how much? 1,06,800. 500 ki 100? Sorry, 100. So can you say 1,06,800 represent the carrying amount of 100? What is the carrying amount of 18? 19,224. 19,224. Can you say this will be also transferred to PL? Means if you prepare PL account, what is the impact? How much revenue? How much cost of sales? And how much selling expense? So how much gain or loss? How much gain or loss? Gain or loss? Is it gain or loss? Loss na? Is it gain or loss? Loss na? Why you are saying gain? 220 is what? Loss. This will be automatically calculated through PL account. Is automatically calculated through PL account. Now you will not calculate it separately. Means it will be automatically calculated. You have done this journal entry then automatically calculated from PL account. Bole yes or no? Are you able to understand what I am saying? What happened? There is a gain. Achha, sorry, there is a gain. How much gain? Gain only. 226 gain. So again, this will be automatically calculated from PL account. So you are not supposed to pass separate journal entry for gain. You will not pass separate journal entry for gain ना. अरे बोलना रे. Correct. So what journal entry they have given check करेंगे. Means the net impact will remain same. देखो they have done biological asset to gain 226 by रे. Then cost of sales this entry is correct. Then bank account they have done with the net amount. Revenue gross amount. Bank account selling expense 550. But can I say just try to understand what I want to say. What I want to say. This journal entry will be automatically calculated now. Because when you are saying revenue is 20,000, correct? And your cost of sales is 19,450 and your selling expense 550. So will you pass separate journal entry for 226? Sorry, cost of sales they have given 19,450. What is the cost? It's 2 to 4, na? Means they have calculated in that way only gain. But can I say this is I am not okay with this journal entry. I am not okay with this journal entry. Means what they have done, they have calculated gain separately. Correct now? Understood what they have done? Then this cost of sales 19,450. But this amount they have taken as cost of sales. Oh my god. Are you able to understand? इंक्लूडिंग गेन. मजा आ गया मतलब. Means I hope you are able to understand my viewpoint. Means can I say somewhere there is some mistake in this journal entry? Means we'll do as per our concept now. So as per concept, this is the correct journal entry. Means can I say this will be one rectification? Now if you want to follow ICAI solution, follow this because I don't know whether they will give marks on this or not. Correct now. But they have done this journal entry. Can you do modification? But I have just informed you how to calculate this gain. I have informed you how to calculate this gain. Gain you can calculate. अरे बोलना रे. Correct ना. Gain you can calculate. Pass one journal entry, biological asset account debit to gain. Then this journal entry do you have understood? Correct na? Understood. What is this journal entry? Cost of sales to biological asset means what they have done 19,002 plus gain. मजा आ गया. चलो ठीक. Have you understood? Hmm? Correct. Means this is what they have taken current value of biological asset as what? Cost of sales. Got it? Have you understood? आगे चलें. This point you have understood? Then next point is what? In this question is where? On 15th September, the fair value of remaining cattle was 82,820. So remaining cattle means how much? Out of 100, how much you sold? 18. So how much left? 82 left. So remaining cattle means 82 is 82,820. 42 cattle were slaughtered. Slaughter means can I say the seizing of life means harvesting. So the slaughtered portion will become inventory. The slaughtered portion will become inventory because that will be sold in the market now. Correct. With a total slaughtering cost of 4,200. The total market price of carcasses means that portion which has been slaughtered on that day is 48,300 and expected transportation cost to sale of carcasses is 420. No other cost are expected. So this fair value whatever is given is not at all relevant. Means can I say out of 82, 42 become inventory. So we need to pass one journal entry for conversion of biological asset into inventory. So what journal entry you will do? What is the date? 15 September. So can you see you will pass journal entry inventory. Inventory will come at fair value less cost to sale. So what is the fair value given of that carcass is 48,300. So 48,300 minus what is the transportation cost they have given? 420 minus 420. How much it is coming? 47,880. Can you see it will be reduction of biological asset. So biological asset reduced at proportionate carrying amount. It was 1,06,800 for how many cattle? 100. So how much for 42 you can find out? How much for 42 you can find out what is the carrying amount? 44. Can a difference will be gain or loss? How much loss? Loss or gain? This gain. How much gain? How much? 3,024. And this one slaughtering expense also. Slaughtering expense account debit and it will be transferred to PL to bank. How much? 4,200. So can I say we can pass this journal entry? Means IC also given similar but they have given compound journal entry. The effect remains same. So you can pass this journal entry. But they have given ICA check करेंगे. Inventory correct. ठीक है. Biological asset correct. Bank correct. But Gain or loss, they have given net impact. So you can also this compound journal entry if your choice. If you want to if you want to do this compound journal entry, they have compounded the journal entry now. Correct. Last. Can I say now on 31st March, 1 second will do valuation. But how many cows, how many cattle remain now? 40 cattle remain. Correct now. So what they have given check करेंगे. On 30th September 2002, the market price of remaining 40 cattle is 44,800 minus 400 minus 2%. Can you give me 2% of this amount? How much it is coming? So 44,800 minus 400 minus 2% of this. How much it is coming? 2% of 44,800. So minus 43,504. We'll compare with carrying amount. Carrying amount is 1,06,800 divided by 100 into 40. How much? 42, 720. So how much increase or decrease? Increase how much? 784. So we'll pass one more journal entry. Gain. I mean, biological asset account debit to gain with 784. Understood? Have you understood? The last journal entry you can do by your own. Simple. Got it? You can see last journal entry given correct only. However, initially it was also given wrong. Now they have corrected it in ICAI study material. Initially they have given this wrong amount, but now they have corrected it. So if in your material it is coming wrong amount, now ICAI has corrected it. Understood? Any doubt? With this, we have completed India's 41. Balance question you can do it by your own. Any doubt? Understood? Correct. Anyone want to ask any doubt? I'm waiting for 2-3 minutes. Chalo. No doubt, then we'll proceed to one more India's. That is what? India's 102 share based payment. Share based payment. One doubt has been asked. Slaughtering cost is a direct cost, but since we are valuing inventory on NRV basis, we are not including this cost in inventory. I am correct. Just try to understand first. When we are doing slaughtering, that become point of harvesting. At the point of harvesting, it is valued at fair value less cost to sale. Fair value less cost to sale and NRB are different. NRB you apply when we apply Ind AS 2. Ind AS 2 is subsequently applied. Subsequently applied means at subsequent reporting date. On the date of harvesting, at the point of harvesting, you are measuring at fair value less cost to sale. So fair value means what? Already I have said fair value means what? Market price minus transportation cost minus cost to sale become fair value less cost to sale. So in that case, the question of slaughtering cost will not arise. Understood? Your doubt is clear? Chalo. Once again, there one doubt came about fair value. Just try to understand what I said. As per Ind AS 113, the market price minus what? Transportation cost incurred by seller means market price from seller point of view will become what? Fair value. And from this, if we deduct transaction cost incurred by seller, this become fair value less cost to sell. Understood this point? Now, if you want to write down, write down. So this is fair value. This is fair value less cost to sell. Got it? Correct. Now, when we do the journal entry, so journal entry is what? Biological asset account debit. So we calculate this amount, fair value less cost to sell. Now when we say to bank, so to bank means payment done, payment at the time of purchase, at the time of purchase. So this will be what? Whatever purchase price you have paid minus what? Any transportation cost you have incurred at the time of purchase means for bringing that biological asset to your premises. That is the transportation cost. This is carried inward in your simple language. Transportation cost for bringing that cattle or whatever in your premises. Correct? Normally, transaction cost is incurred by seller, but suppose in the question they have given transaction cost is also incurred by buyer. If given, one question we have done. If given, then do minus transaction cost also. So sorry, this will be plus. My mistake. So it will be purchase price plus transportation cost plus transaction cost. But transaction cost will be added only if given in question. If given in question that it is incurred by buyer also. One question we have done now. Have you understood this point? This is transaction cost. TC means transaction cost. Better we write on transaction cost full. Understood what I am saying now? Correct? And any difference will be transferred to what? PL. Now okay? And more doubt was asked. Any doubt? More doubt? I understood your request. Request will be now applied. Yes, sir. Any more doubt? Chalo. So can we proceed to another index? Yes, sir. So now I like to start what? Index 102. India's 102 very important chapter. Why very important chapter? Because one mandatory question will be asked from this chapter. Normally, it has been seen that question varies from 8 to 10 marks from this chapter. So 8 to 10 marks question may be asked. Okay? Okay, sir. Very simple chapter. Why simple chapter? Because already you know about the concept behind this. Only in this chapter you can do mistake in understanding the information given the question. If you do not understand the information given the question, then you can do calculation mistake. If you have done calculation mistake, then gone case. Correct. Now, what is the meaning of share-based payment arrangement? First, you can see the name is share-based payment. So this share-based payment will be both employee and non-employee share-based payment. Employee and non-employee share-based payment means if any payment is done to employee in the form of equity shares will be covered in this chapter. If you are doing any payment to supplier, suppose you are purchasing property, plant and equipment, suppose you are purchasing inventory, suppose you are purchasing investment property, and to the supplier you are doing payment in the form of equity shares, then also India's 102 will be applicable. What is the meaning of share based payment arrangement? It is an arrangement between two party. Two party means either entity or another party. Another party means what? Either employee or non-employee. It can be employee or non-employee. Correct. So it is an arrangement between two party, entity and another party. Another party can be employee or non-employee, which entitle another party means employee or non-employee to receive either equity shares of entity, to receive either equity shares of entity or to receive cash, which is based on what? The price of equity shares of that entity. Means either the another party will receive what? Equity shares of that entity, or they will receive what? Cash based on the price of equity shares. So normally whenever they are entitled to equity instrument of other entity, it is known as ESOP. We call it what? ESOP, employee stock option plan, if it is related to employee. And if they are entitled to receive cash based on the market price of equity share, that is known as SAR. SAR means what? SAR means what? Stock appreciation right. That plan is known as what? SAR. SAR means what? Stock appreciation right. Stock appreciation right. Understood? ESOP and SAR. SAR means what? Stock appreciation right. Understood? Have you understood? Yes, sir. Correct. This point have you understood? Now, what is the meaning of SBB transaction? SBB transaction. What they want to say that all SBP arrangement are not SBP transactions. So of course in this chapter only SBP transactions are covered. What is the meaning of SBP transaction? It is a transaction in which entity receive goods or services from another party. Means can I say entity should receive goods and services from another party? Entity should receive goods and services from another party. Means if I take some example to explain you what is covered, what is not covered, let me come to very basic point. What is covered, what is not covered? You can see if I will take example number 1, you can see entity and employee is providing services but entity is paying cash which is not based on the price of equity share. This is not covered under India's 102. This is covered under India's 19 because this is payment of employee benefit expense. So this is not covered under India's 102. Correct. Similarly, if second example you say that entity is receiving services from employee but they are providing what? Employee is entitled to receive equity shares. This is covered under India's 102. Correct. If I take example number 3, you can see in this example number 3, employee is providing services to the entity and entity is paying cash which is based on what? Market price of equity shares. This is known as stock appreciation right, and this is also covered under India's 102. Correct. Then if I take example number 4, you can see there is a non-employee. Non-employee is providing inventory or property, plant and equipment or intangible asset or investment property, and entity is allotting either equity shares or paying cash which is based on price of equity share. This is also covered under India's 102. Correct. But if you see, just try to understand, if suppose non-employee is providing services, Means it can be any services, audit services, repair and maintenance services, and entity is paying equity shares or cash based on price of equity share, then also India's 102 will be applicable. Correct. But next example you can see entity Mr. Ram. Mr. Ram, can I say Mr. Ram can be any investor that is paying cash, and entity is allotting equity shares. You can see the payment is this party, this can be employee or non-employee. This employee or non-employee is receiving equity shares, but entity is not receiving what goods or services. Entity is not receiving goods and services. So this is share-based payment arrangement, but this is not SBP transaction. Are you getting? Means can I say this is as simple as allotment of equity shares? Allotment of equity shares is not covered in this chapter. Why? Because entity is not receiving any goods or services. This is covered under India's 32. This is covered under India's 32. So this may be SBP arrangement, but this is not SBP transaction. So in case of Miss India's 102 is applicable when entity is also receiving goods and services from employee or non-employee. Means if I take one more example, you can see entity is allotting either bonus shares or right shares, right shares to employee. So of course employee is receiving equity shares, but can I say there is no consideration or there is some inadequate consideration which is given to entity in cash. So once again entity is not receiving goods or services, therefore this is also not covered under India's 102. Why? Because can I see these bonus shares or right shares are issued to employee or not to employee or non-employee, not in the capacity of employee or non-employee. They are issued in the capacity of what equity shareholders. Therefore, this is also not covered under India's 102. I hope you have understood. Correct. Correct. Next point. Correct. I have taken one more example. Do you know about sweat equity shares? Sweat equity shares. Sweat equity shares means what? Employer has provided some past services. Correct. And for that past services, entity will allot equity shares. Means in this agreement, can I say the services are not specified because offer is given without any services, because you have given some past services, but in the agreement nothing will be given. So what India's 102 says that in this India's 102 will be applicable even though services are not specified under the contract. Means some sweat equity shares will be allotted without any future services, so it means services will not be specified. Even though services are not specified, then also this will be covered where? Under India's 102. Correct. One more example I say, suppose charitable organization is there. Now entity has allotted some equity share for charity purpose, but can I say no consideration received? No consideration received. But can I say nothing is free in India? Even though under contract nothing was receivable, but can I say they are deemed to perform some activities for the promotion of this entity. There might be some unspecified services, and therefore this will be covered where? Under India's 102 only. Are you able to understand? So whenever entity is allotting equity share to some organization without any consideration, so there might be some deemed services, there may be some unspecified services, then because of that reason this will be covered where? Under India's 102 only. I hope you have understood what is the meaning, is what is covered, what is not covered. This much you understood? Correct. What is not covered? Can you say what is not covered? Agreement which are related to business combination. For that India's 103 we have agreement between entity and another party in the capacity of shareholders. In the capacity of shareholders, bonus shares, right shares, that will not be covered in this chapter. Correct. Then financial instrument to buy or sell non-financial asset which can be settled on net basis. This I will explain when I will do financial instrument chapter. Why it is not covered in this chapter. Right now I will not be able to explain because financial instrument is pending. Chalega? Yes, sir. Now in this chapter India's 102, there are three types of share based payment for employee. So first we'll concentrate only on employee share based payment. However, 90% chances they will ask employee share based payment only. Correct. There are three types of employee share based payment. One is known as equity settled, one is known as cash settled, one is known as SBP plan with cash alternative. Means option will be given either cash or equity shares, your choice. Correct. When I am saying equity settled, then can I say it is known as either ESP, ESOP, or it is known as ESPP. ESPP means employee stock purchase plan. That is nothing but sweat equity shares. So it will be either ESOP or ESPP. ESPP means what? Employee stock purchase plan. When I am saying cash settle, it is known as stock appreciation right. Stock appreciation right. Got it? Yes, sir. Now, first we'll take equity settle. Equity settle, I hope equity settle on grant day. You all know about grant day, correct? You all know about grant day. So on grant day, no journal entry. Means can I say under ESOP, EB expense will be recognized during vesting period. During vesting period. Vesting period is a period when condition will be satisfied. Means where employee is required to perform any vesting condition. That period is known as vesting condition. What India's 102 says that fair value of option will be recognized as an expense during which period? Vesting period. Correct? Yes, sir. So what journal entry will do during vesting period for recognition of option expense at the end of each accounting period? The journal entry will be EB expense to SBP reserve and it will be transferred to PL account debit to EB expense. Correct. Okay, this SBP reserve is an equity. Equity. SBP reserve is an equity. Correct? Understood? So because it is equity, can I say we never do subsequent measurement of equity? Means can I say this expense is recognized based on fair value of option on which day? Grant day. On grant day. So this options is this expense is recognized based on what? Fair value of option on grant day. Understood? Can I say this may change due to change in circumstances? So fair value of option may change at the end of each year. But because it is an equity we never do reassessment. So for equity we never do reassessment of fair value of option. Means can I say any subsequent changes in the fair value of option is not relevant for this ESOP. So only will take fair value of option on grant date. Any subsequent fair value given in the question is not relevant for ESOP. For ESOP. Understood? Have you understood this point? Correct. This you have understood. Correct. I will explain this point, nothing to worry. Now during exercise period, can I say once the vesting period will be completed, so options become vested. Once the vesting period is completed, options become vested. Once the options become vested, it can be exercised. So some reasonable time is given for exercise of vested option. That is known as exercise period. So during exercise period, can I say vested options will be exercised? Once it will be exercised, what will be received? Exercise price will be received. Correct? So can I say exercise price will be received from whom? From employee. Correct? What journal entry will do for receipt of exercise price? Bank account debit to SBB reserve with exercise price. Correct? And then we'll do allotment of equity shares. What journal entry will do? SBB reserve. Account debit to equity share capital to securities premium. Can you see this SBB reserve will be aggregation of two amount. One is fair value of option plus exercise price. So this SBB reserve become fair value of option plus exercise price. Can you say minus nominal value of equity share becomes securities premium? So if you do minus nominal value of equity share, it becomes securities premium. Understood? Can I say any vested options for which exercise money is not paid, it will be automatically cancelled. So any vested option which remain unexercised will be cancelled. What journal entry will do for cancellation? SBP reserve account debit to retain earning. So once equity is cancelled always by transfer to retain earning. So what journal entry will do? SBP reserve account debit to retain earning. Understood? Entire discussion will do by means once again we'll understand the entire accounting treatment by taking one question. Can we take one question? Means in this chapter I will say if you do more question it will be more understood कि what is the requirement of Ind AS 102. Correct. Come to question number 19. The following is in respect of a stock option granted by a company are available. You can see grant date has been given 1 of 1st April 2006. Number of employee covered 525. Number of option granted per employee is 100. Vesting condition 3 year. Nominal value of per share is 100. Exercise price per share is 125. And market price per share on grant date is 149. Correct. Now, what India says, there are two value of option. One is known as intrinsic value of option. One is known as what? One is known as intrinsic value of option. One is known as what? Fair value of option. Understood? Intrinsic value of option means what? Market price on which date? Grant date minus exercise price. So market price on grant date is what? It is 149. What is exercise price? 125 is equal to how much? Coming how much? 24. So this become intrinsic value of option. We call it what? Intrinsic value of option. So what is the meaning of intrinsic value of option? Market price on grant date minus what? Exercise price. Correct. Now what is the fair value of option? Fair value of option means what? Present value of expected intrinsic value on exercise day. On exercise day. Have you understood this point? Means can I say on exercise date market price may change? So can I say right now because we are calculating on which day? Grant day. This measurement we are doing on grant date means we need to estimate what? We need to estimate market price on which day? On exercise day. Correct now. Let us assume it become 400. Let us assume it become what? 400. Are you able to understand? The बोलना रही. And minus exercise price remains same. Suppose it is 125. So can you see this become estimated intrinsic value on exercise day. How much it become? 275. And if you calculate present value of these on which date? Grant day. So this become fair value of option on grant date. Are you able to understand? This become fair value of option on grant date. Understood? But this estimation is not possible, means it is not easy to estimate market price. And therefore what Ind AS 102 says that to find out fair value of option, on grant date, use two option pricing model. Means use option pricing model. One is known as binomial pricing model. One is known as Black and Scholes. But you know now where you have done SFM में there are two option pricing model you have done. Correct. So this you need to understand in SFM. Means in FR they will give fair value of option on grant date. Means always fair value of option on grant date will be given. Means we are not here to estimate fair value of option on grant date. Means what will be always given? This fair value of option on grant date will be given. Means can I say intrinsic value to can be calculated, but fair value of option on grant date will be given. If both are given, you will use fair value or intrinsic value. So what Ind AS 102 says that fair value is more reliable. So entire expense will be recognized based on fair value of option. If fair value of option cannot be measured reliably, then use what? Intrinsic value of option. But in final exam, they will always give what? Fair value of option. Suppose fair value of option is not given, then use what? Intrinsic value of option and do accordingly. Have you understood this point? Have you understood this point? Means can I say in this question intrinsic value is what? 24. which is not relevant. But why? Because fair value of option on grant date is given 30. Understood? Then they given vesting date 31st March 2009 is 3 year, and exercise date they have given 31st March 2010. All information given. Now they have given position on 31st March 2007. They have given position on 31st March 2007. Are you able to understand what I am saying? Follow. This is a question. We can see what they have given. Position as on 31st March 2007. Actual employee left in the first year how much? 15. We can see I have written 15 actual employee left. Correct. Then they give an estimated annual rate of departure, which it is estimated that in second year and third year, how many employee will leave? 2% employee may leave. So they have given estimated annual departure rate 2%. We just try to understand what Ind AS 102 says, that we need to recognize expenses only for those employees who are expected to vest the option on vesting day. Means, can I say at year end one we need to recognize some expense, but we don't know how many employees going to vest the option on vesting day. It means we need to estimate a number of employees who may vest the option on vesting day. As we have done, means always we do recognition on expense based estimated basis only. It is as simple as depreciation is also an estimation. Correct. So it means with this 2% data, we need to find out how many employee may vest the option on vesting day. Yes, this information may change in second year, and therefore they have given the position on 31st March 2008. Now actual number of employee left is 10. In second year, how many employee left? 10 year. Sorry, how many employee left? 10. But this information was not known in the first year. Therefore, this information you can't use for the EB expense of first year. Understood? Then they have given what? Estimated annual rate of departure. Now they are saying we are estimating that in third year, how many employee may leave? 3% may leave. They have given 3%. Yes, sir. Then can I say position on 31st March 2009, this become vesting day. Now we'll take actual information. So actual number of employee become 8, and number of employee who actually vest the option is 492. So you can see how many employee left? 8. So 520 minus 15 minus 10 minus 8 become what? Actual number of employee, that is 492. Now they have given as on 31st March 2010, number of employee exercising the option is what? 480. And number of employees not exercising is nalayak employees were 12. Understood? So out of 492 employees, how many employees exercise the option 480? How many employees do not exercise the option 12? Understood? Yes, sir. This is the calculation. Can I say in this question, if you are able to calculate number of employees who are going to vest the option, then it is very easy. So now you only say first year how many employee is estimated to vest the option on vesting day. On vesting day, not exercise day. On vesting day. So can I see initially 520 employee? How many actually left? 15. So 520 minus 15. How much left? So 510. Then can I say we'll do minus 2%, minus 2%, or we can do into 98% into 98%. Both answer will be same only. So you can see first year 525 minus 15 into 98% into 98%. This is the number of employee who is expected to vest the option on vesting day. Always take whole number of employee. Don't take 489.96 like this, because employee cannot be half. So 490 employee. Then second year information change, circumstances change, estimation will change. So now it becomes 520 minus 15 minus 10 minus 3% for 1 year only. So you have done what? 525 minus 50 minus 10 into 97%. How many employees there? 485 employees. third year, can I say now we third year it is actual number of employees, that is 492 employees. Understood? Correct. Now can I say if you have understood this, then we can easily calculate what? EB expense. To EB expense will what? Batao. First year what will be the EB expense? So we'll do working in this way. I'll give you very simple working. Always in exam do in this way. Year end working, then find out cumulative expense, then find out expense. Correct. So first year, how many employee? 490, 490. Multiply by option per employee. How many option has been given to each employee? 100. Correct. What is the fair value per option? So guys, this become total fair value option during 3 years. But we need to recognize on SLM basis. So we'll do 1 by 3. Understood? How much it is coming? 4 lakh? 4 lakh 90,000. 4 lakh 90,000. So expense will be also 4 lakh 90,000 for first year. Now second year information change. Now how many employee? I'm not pakka. It is 485 employee, correct? So 485 employee into 100 into 30 into what? 2 by 3 now. So we are doing reassessment. How much? 9,70,000. How much? 4,80,000. Third year can I say will take actual. Actual is 492 into 100 into 30 into 3 by 3. How much? 14,76,000. Now what is the expense? 5,06,000. From my point of view, if you can calculate this chapter is very easy. So journal entry तो कुछ है ही नहीं. But the first year, what is the journal entry? EB expense account debit to SBP reserve. Second year, what journal entry? EB expense to SBP reserve. Third year, what journal entry? EB expense to SBP reserve. Year 1 and year 2 and year 3 and. Now only I need to explain the journal entry of what exercise. So let us come to exercise. Means on 31st March 2010, what journal entry you will do? Can you receive exercise money for how many employee? Out of 492, 480 employee exercise. So 480 into 100. And what is the exercise price? 125. What amount is coming? 60 lakh. And then again, can I say we need to also debit SBP reserve account. So it is 480 into 100. What is the fair value of option? 30. How much? 14 lakh 40,000. To what? Equity share capital. To equity share capital. 480 into 100. What is the nominal value? 100. How much? 48 lakh. Difference will what? Securities premium, that is 480 into 100 into this plus this minus this. How much? Can 26 lakh 40,000. But per how much? 125 plus 30 minus 100, that is 55. And then can I say on this date, the vested options which remain unexercised will be reversed. What journal entry? SBP reserve account debit to, no, retained earning. It will be transfer retained earning. Correct. So how many employee? 12 into 100 into 30. How much? 36,000. Have you understood this journal entry? Follow. Have you understood? Correct. Have you understood? Chalo. Can I take one more question? Now, the question which I am taking right now, this question was in my study material. I have taken from old syllabus, but this type of question was not in ICAI new syllabus study material. But in the recent RTP, same to same question has been given. So it might happen you have not done that type of question. Better do it. Correct? So I have already taken in my question bank, which I do in our class. Correct? But same to same question have been taken in recent RTP, same with same amount also. Amount is also same. The following particulars in respect of stock option granted by company are available. This concept is known as graded vesting. Graded vesting means what? Ki whatever options will be given, what is the number of options given? 60 per employee. That will be divided into three groups, and each groups will have different vesting period. If different vesting period, it means different calculation. Correct. So grant is given 1st April 2006. Number of employee covered 400. Number of option per employee 60. Nominal value per share 100. Exercise price per share 125. Correct. Shares offered were put in three groups. Group 1 20%. 20% 60 means how much? 12 shares offered with a vesting period of 1 year. Group 2 was for 40%, means how many shares? 24 shares with a vesting period of 2 years. And group 3 with 40% means 24 only with a vesting period of 3 years. Fair value of option per share will also change. We can see fair value of group 1 is 10, group 2 is 12.5 and group 3 is what? 14. Now what they have given? Position they have given. Number of employee actually left 40. Number of employee estimate to leave is 36 in the second year. Number of employee who are estimated to leave in third year is 34. Means can I say in year 1 for group 1, group 2 and group 3. For group 1 to will take how many employee? 400 minus 40. 400 employee na? 400 minus 40. You will take 360 employee because group 1 to will vest on first year only. But group 2, because it is going to vest in second year, so we'll take 400 minus 40 minus what? 36. Bolo yes or no? So minus 36 how much? Is 360 minus 36 is equal to 324. And for group 3, how many employee? 324 minus 34 also will do. 324 minus 34. 290. Are you able to understand what I am saying? Bolo. Correct. Now what they are saying, the number of employee exercising the group 1. So how many employee vested the option? 360 employee. But out of that, how many employee exercise the option? 350 employee. Means how many employee does not exercise the option? 10 employee. Have you understood this point? Can I say based on this we can do calculation? Then position as on second year. Okay, group 1 gone. Now we'll do group 2 and group 3. Correct. Now group 2, again 335 employee left. Actual, so it will be about 360 minus 35 now. So 360 minus 35 how much? 325. And group 3 will take this number of employee who is going to live in the third year 30. It is 325 minus 30 how much? 295. Out of this 325 who vested the option, how many employee exercise the option? How many employee do not exercise the option? 6. Now in third year, how many? Only group 3. Now 29, it is 325. How many employee actually left? 28. It become 297 employee. Out of 297, how many employee exercise? So how many employee do not exercise? 2. Understood. Now only we need to calculate the expense. Have you understood the entire calculation? Can we do the calculation? Correct. So what will be the calculation? So year end working cumulative expense year end 1. Can you give me group 1 first? How many employee? You need to give me 360 employee. What is the number of option? It is 12. What is the fair value of option? 10 into 1 by 1. 1 by 1 how much? 43,200. Group 2. Group 2 how many employee will take? It is what? 324 na? No, 325 not. First year. Don't go to second year. We are into year 1. 324 na? This is the estimated number of employee. Into what? 24? Into 12.5 na? Into 1 by 2. 1 by 2 how much? 48,600. Then group 3. How many employee? 290 into what? 24 into 14 into what? 1 by 3. How much? 90? 92. Wrong amount. How much? 32. 480. Total is what? 124. And okay, same will be only expense for the first year. Now can you do second and third by your own? Second will take group 2. For the how many employee? 325 employee into 24 into 12.5 into 2 by 2. 97 500 minus what? Minus, you'll do this. So how much it is coming? Minus this 48 900. Group 3, you will take how many employee? 295 into 24 into 14 into 2 by 3. 66 080. This minus this, how much? Total. Can you give me total? This is 82 500. Third. Third will take only group 3. So how many actual? 297 into 24 into 14 into 3 by 3. How much? 285. How much? 99.7 minus this 33. Can I say this become the expense? Super easy na? Correct. Correct. I'll give you only the first year accounting. So can I say if I will prepare SBP reserve account, EB expense account too you can do. Every year one journal entry EB expense to SBP reserve, EB expense, SBP reserve, expense, EB expense account you can do. In this question they have asked necessary account, means two account you need to prepare EB expense and SBP reserve. Correct. Now, what is the first year date? Huh? Doubt? Any doubt? 31st March 2007. Why EB expense will do? What is the EB expense of first year? 124 280. Correct. Now can I say at the end of the first year only, group 1 exercised for how many employee? Vested 360 but exercise 350. So we'll do buy bank for how many employee? 350 into 12 na? Into 12. 12 is the number of shares multiplied by exercise price. What is the exercise price? 10 is the fair value. Bank means what? Exercise price na? What is the exercise money? Into 125. 5,25,000. This you understood? Means first journal entry is bank account debit to SBP reserve. Correct. Then we'll do what? 31st March 2001 na? 2007. To equity share capital. So it will be 350 into 12 into what is the nominal value given? 100. It is what? 4 lakh? 20,000. Then two securities premium. Normally students do mistake in securities premium. So can you give me what is the securities premium? Normally. Per. Can you give me per how much? 350 into 12 into what? Just try to, whenever you are calculating securities premium, just find out what is the first fair value. 10. What is exercise price? Minus what? Is equal to what? 35. 2 into 35. How much? 1 lakh 47,000. Can you say for 10 employee who are nalayak will do 2 retain earning? Will cancel it. So 10 employee into 12. What is the fair value per option? 10 only. It will come 1000 and the balancing figure will calculate to balance carried down how much? Batao. 86 080. Okay, this amount should be the total of these two. This amount should be the total of these two. Will not coming this means we are doing some mistake. Check karo. The total of these two is how much? How much it is coming? It is not coming na. We have done some mistake. You have given some wrong amount. What wrong amount you have given? Coming how much? 48,600 plus 32,480. Some mistake you have done. What mistake you have done? This is only wrong. I have written 124 only. So you have take consider. Chalo take. Okay, my mistake. Now how much it is coming? 81,080. Now correct. You can cross check where you have done mistake. Understood. Yes, second year, third year it will be repeated. Can you do by your own? Solution is given. You can cross check. Got it? Okay. Any doubt? Now, so ESOP you have understood. Now I will take one question on SAR. Then we'll take break. Okay. Now, I hope ESOP you have understood. Now let us come to second topic of this chapter. That is what? Cash settled SBP. Cash settled SBP. It is same to same ESOP. Means right now whatever we have done for ESOP, equity settled, same thing will be applied for SAR. Only two difference. Yes, SAR means there is an obligation to pay cash. Whenever there is an obligation to pay cash, means it is a liability. So instead of SBP reserve account, we'll open SBP liability account. Second, because it is a liability, so can I say it should be subsequently remeasured at the end of each year during vesting period as well as during exercise period based on what? Fair value of option at the end of each year. So in this case, is in ESOP we have not done reassessment of options value. But in this case, fair value option will be reassessed during vesting period as well as during exercise period. And due to that reassessment, whatever difference is coming, that difference will be transferred to PL because this is SBP liability. Only this is the difference. Have you understood? Miss, can I say for SBP liability, fair value of option on grant date is not relevant because fair value of option at the end of each year is relevant. But for ESOP, fair value of option on grant date is relevant. This is the major difference between SBP reserve and SBP liability. Means ESOP and SAR. Can we take one question? I will take one good question. Come to that question. The next question, whatever I am doing, this is most expected question from my point of view. An entity which follows financial year as per calendar year grant 1000 share appreciation right to each of his 40 management employee on 1st Jan 2005. The SAR provide the employee with the right to receive at the date when the rights are exercisable cash equal to the appreciation in the entity share price since the grant date. Is the difference between market price and exercise price will be paid in cash. Means on exercise date, whatever market price will be prevailing minus exercise price, that amount will be paid. Which case the amount to be paid will be equal to intrinsic value on exercise date. When we say intrinsic value means current market price minus exercise price. When we say fair value means expected market price minus what? Intrinsic minus exercise price. Present value of that will be known as what? Fair value. Understood? Means can I say on the date of payment we should take intrinsic value? For payment we should consider intrinsic value, na? For payment we should consider intrinsic value because we will pay based on current intrinsic value. Chalega? All the right vest on 31st December 2006 and they can be exercised during 7 and 8. Management estimate that at the grant date fair value of option means SAR is 11. Can you see this is not at all important? And it's estimated overall 10% employee will leave during the 2-year period. Means they are estimating that overall 10% employee may leave. The fair value of SAR at the end of each year are shown below. You can see fair value at the end of each year is given. 10% employee left before the end of 2006 means they estimated 10% and actual number of employees also 10%. On 31st December 2007 when the intrinsic value of SAR was 10, 6 employees exercised their option and the remaining 30 employees exercised their option at the end of 2008 when the intrinsic value of SAR was equal to 12. How much expense and liability should be recognized? Have you understood the question? First, I need to explain the question. Na? Have you understood the question? Bolo? Here there are 4 years. 2 years is vesting and 2 years is exercise. This is 31st December 2005. This is 6. This is 7. This is 8. This is 1/4/2004. How many employee initially? How many employee? 40 employee. And they are estimating that 10% employee may leave during this 2 period. And the actual employee left is also 10% on this date. Means 10% 4 means actual number of employees 36. Now they have given number of option granted is 1000 per employee. Number of option granted is 1000 per employee. They have given fair value. Fair value is given how much? Initially how much? 11. Then it become how much? 12, 8, 13. 12, 8, 13 and 12. Understood? Then they have given on this date intrinsic value is also given. On this date intrinsic value is also given. Intrinsic value is given how much? Is given 10. 10 and 12. So intrinsic value is given 10 and 12. Understood? They are saying that out of 36, 6 employees exercise the option on this date and 30 employees exercise the option on this date. This much. Entire story you have understood. First we need to understand information. Normally what happens when we read in exam any question, we don't read information carefully. If you don't read one information carefully, can I say it will affect entire solution? It will affect entire solution. So 10 marks question can become 2 marks. So reading the question carefully is very important. I have done this question many times, I know. But when you are doing for the first time, na? अरे बोलना रे. For me, this question may be easy because I have done many times this question. Without reading the question, I know what is in the question. But in exam, even though the question, whatever you have done, that question comes same to same, but you are reading for the first time, na? Correct? Now, can you say 1 second year end cumulate working cumulative EB expense, and then one more column write on liability. The first year end one. So can you say year end one? So this fair value option on grant date is not relevant for this SAR. Fair value of option at the end of year one is relevant for SAR. Correct. So how many employees out of 40? How many employees expected to leave 10%? You will take 36 employee. So 36 employee. What is the option per employee? 1000 into what? 12 into what? 1 by 1 by 1 by 1 by 1. How many vesting period? 1 by 1. 1 by 2 na? 1 by 2 na? Correct. How much? 2 lakh? This is only EB expense and this is only liability. Then year end 2. Actual number of employees now 36 only. Actual number of employee 36. 1000. Fair value of option how much you will take? 8. Into what? 2 by 2. How much? 2,88,000. This minus this how much? 72,000. What is liability? Liability is 2,88,000 only. So this is which year completed? Vesting period completed. Now we are coming to exercise period. Now can you say in exercise period we will do payment and whatever is not paid for that also we will do reassessment. So in year end 3, how many employee paid? How many employee exercised? Out of 36 employee, how many employee exercised the option? 6 employee. 6 into 1000. Can I say this will be paid based on fair value or based on intrinsic value? Means you can see they have given two fair value on this date. One is fair value of option 13. One is intrinsic value. Intrinsic value means current value. So payment will be done on current value or expected value. Current value. Current value na. So payment is always done on intrinsic value. Kasam khao. Payment is done based on intrinsic value, but reassessment is done based on fair value. Understood? This point student do mistake. Means they will not be able to understand why intrinsic value and fair value both are given. Understood? Can I say on the last day means on the at the end of contractual period, fair value and intrinsic value will be same only. At the end of contractual period, can I say fair value and intrinsic value will be same? I will say there is no fair value, there is only intrinsic value because there is no expectation now. Are you getting? So they have given fair value only to confuse you. They should give only intrinsic value. Are you able to understand? So for 6 employees they will take how much? 10 was the intrinsic value. For 30 employee will take what? For 30 employee will do reassessment at what value? Well, have you understood? Have you understood this? Now will you do 2 by 2 or 3 by 3 will you do? No, now to this is what? Reassessment now. So what is the cumulative expense? How much? 4 lakh 20 is coming. 4 lakh 20,000. minus this is an expense. How much? 1,32,000. But case the liability will be equal to what? What is not paid? Means liability is this only. Liability is this only, na? Because what is paid is not liability. This is the paid. So liability will be what? 3,60,000. This point have you understood? Last year. Then last year you are doing for 30 employee only. Into 1,000. How much you will pay? Based on intrinsic value. How much? 3 lakh? Something is going wrong. What you have done? It was 13 now. Why you have given 12? This is 13 now. Fair value on this date is how much? You are at year end 3. Why you are taking information of year end 4? But no one is responding also. Someone is doing mistake. Everyone is going through that. Then what is the use of this crash batch? I will not do anything. Whatever you will say, I will write down because this is crash batch. I am for you. I will not look into any information. You can see I don't have any solution with me. In regular batch, I'll come with my solution also. I am right now, whatever you will say, I will write down. It means you are not concentrating. It means you are not concentrating. One is doing mistake, other is following that. Why others are silent? If someone is doing mistake, others are silent. Means you are not able to understand what I am saying. It is simple, na? We are at year end 3. We'll take information at year end 3 or year end 4. This mistake, if you repeat in exam, then to कौन केस ना? अरे बोलना रे. I was not expecting you will do this mistake. Please concentrate. 30 into 1,000 into 13, how much? Means you want me to look into all the matters? This is wrong now. This is wrong. This is wrong. बताओ. This become 4,90,000. Then what? This minus this. How much? 1 second wrong. Four lakh 50 it is coming. Why you are giving 90? Oh, better I will do only. चलो देखो बच्चों, this is 4,50,000. If you use calculator, same amount will come. 4,50,000 minus 2,88,000, how much? And this is 3,90,000. Correct. Now this is paid based on current intrinsic value. This was 30 na. So payment is done how much? 3,60,000. You can see now liability this reduced. It means reversal of expense. So this is 30,000 negative na. 30,000 negative and this is nil. Very beautiful question. This question is not yet asked. If asked, same to same question will come. Then also we'll do mistake if you are not able to understand what amount I am taking, what numbers I am taking. Have you understood in this? Any doubt? Follow. Journal entry will very simple. In journal entry, no doubt will come. Now in SBP liability, whatever reassessment we are doing, that reassessment gain or loss will be transferred to PL. Means it will never be transferred retained earning. However, in case of equity, the vested options are cancelled, so that is transfer retained earning. Because there is a rule that if you cancel any equity, any cancellation gain or loss will never be transferred to PL. Any cancellation gain or loss of equity will be transferred retained earning. Means it will gain in equity only. There is a rule of accounting. This you have understood. Now journal entry is very simple. Let us look the journal entry. First journal entry understood. 2,16,000 only na. Second journal entry is what? 72. Third journal entry 1,62,000. Check कर लो. Third journal entry you can see reverse. Journal entry is what? SBP liability to EV expense transfer to PL. This is reduction of expense. Reverse journal entry. Don't do retain earning. हाँ. Normally student do mistake यहाँ पर. They will say SBP liability to retain earning. No, no. It is SBP liability to EV expense. This is reduction of expense in fourth year. Correct. Then payment done. So SBP liability to cash. Understood. Two time payment has been given 160,000. One is what? 3,60,000. Done. Journal entry is very simple. Only calculation amount is the point in this question, and normally they will trouble you in that only. They will give you question in such a way you will not be able to understand the information given the question, and if you are not able to understand information, you might do mistake. So calculation of expense is more important in this chapter. Correct. So we have done 2 point. We have done SBP reserve. We have done SBP liability. We'll take break. After break, we'll take what some more concept of this chapter only. Okay. Okay. Rept.com. Hello. Hello. Hmm? Hmm? Hmm. Can we start once again, everyone? Yes. Now, before break, before break, we are discussing about SAR. One question we have taken. What was the question number we have taken? Question was 35. Now, one doubt came once again. Sir, please discuss about exercise period. Let me discuss once again whatever I have said. I think what I have said that in case of SAR, fair value of option on grant date is not relevant. Means during vesting period, we need to reassess the fair value of option at the end of each year, and that fair value of option at the end of each year will be given. Correct? It is during exercise period, whenever options are exercised, payment will be done based on intrinsic value. Intrinsic value means what? Market price on exercise day minus exercise price. But if you are doing reassessment of liability will be done based on fair value of option on that day only. Means you can see he up to second year we have done reassessment based on fair value of option on 8. Yes, we have done reassessment based on the fair value option at the end of second year. Correct. Now this 8 become 13 in third year, but out of 36 employees, 6 employee exercise the option. So the payment to 6 employee will be based on intrinsic value, and intrinsic value is given what? 10. So payment to 6 employee will be done based on 6. Payment to 6 employee based on intrinsic value 10, and reassessment of remaining employee, that is 30 employee, will be based on what? Fair value of option on that particular day, that is 13. Understood? Then again out of 36 already 6 is paid, so 30 is left. So now we need to pay to 30 employee, because at the end of 4 year this will be the end of contractual period. So can I say at the end of contractual period automatically the intrinsic value and fair value will be same. However, I will say fair value should not be given. It will be only intrinsic value. But if they are giving fair value, the fair value and intrinsic value will be same at the end of contractual period. So 30 employee will paid based on what? Intrinsic value. Suppose in exam they have given this 14. Suppose they have given fair value is 14. Correct? Don't be confused. The question may be wrong. We want 12 now. We want this value. Suppose they have given only fair value. We will assume fair value and intrinsic value same at the end of contractual period. So it is smart work. You need to understand the emotions of the questions. Correct. Let me take one more question. Have you understood? Yeah. The doubt I have taken. So have you understood now? Once I take the doubt, please respond yes or no. Chalo. Now, let me take one more question based on SAR. That is also very important question. An interesting question already asked in exam. The question number next question is what 2. You can see in this question they have said XYZ Limited issued 10,000 share appreciation right that vest immediately. Means this SAR was vested immediately. So can I say it might happen grant day and vesting day are same. So it is vest immediately means what? Can I say entire EB expense will be recognized on grant day only? Understood now? Means if you don't read this information you might do wrong. Means can I say now vesting period is 0? Means whatever will be given that will be exercise period. Means in this question vesting period is 0. Exercise period will be what? Given in the question. Do you recognize entire EB expense on vesting day? You recognize entire EB expense on vesting day. To its employee on 1st April 2000. Understood? This is actually the keyword in this question. If you don't read this question carefully, then you may do mistake. Same question have been asked in exam, and I know many students have done mistake. I know because they will not read the question carefully, and we have an habit to recognize during some year. We'll do 1 by 2, 1 by 3. Maja aata hai. Are you able to understand? Yes, sir. The SAR will be settled in cash. At that date, it is estimated that using an option pricing model, the fair value of SAR is 95. So on grant day, on vesting day, the fair value is given 95. SAR can be exercised at any time up to 31st March 2003. Is 3 year is what? 3 year is vest exercise period. At the end of the period, 31st March 2001, it is expected that 95% of total employee will exercise the option. Will exercise the option. Means 95% of total employee will exercise the option. Then 92% of total employee will exercise the option at the end of next year. And finally, 89% will vested. This is question typo mistake I will say. Means I will say anyone who has prepared this question might be sleeping at that time. Can I say it will be what 89% will exercise na? So this is typo mistake, or I will say that person does not have understanding about vesting and exercise. So this will be what 89% will actually exercise. This will be exercise na? Only at the end of third year. Fair value at the end of each period is given. So you can see fair value they have given at the end of each period. Okay, this is the fair value during which period? Exercise period. And at the end means at this date, if suppose they have not given intrinsic value, they have given only fair value, they have not given intrinsic value. So can you say this will be only intrinsic value? This will be only intrinsic value. So now you only say on first day means first day vesting day, how much expense will be recognized? Can I say how many employee? How many option given? 10,000 option na? 10,000 option given, and 100% will be what? Because nothing has given, so we'll assume 100% because 100% is vested, correct? Into what? 95. So can I say entire expense will be recognized? 9,50,000. You can see I have not done 1 by 3 or 1 by 4. Entire expense will be recognized at the beginning only. Have you understood this point? This is only the point which you need to understand why entire expense is recognized. Then we'll do reassessment. Now out of 10,000, how much we are expecting that they will exercise? 95%. What is the fair value? Fair value become 112. So now it become 10,64,000. So increase in expense. There will be increase in expense now. Got it? Then out of 10,000 option, how many options will be exercised? 92%. What is the fair value? It is 109. So you can see it become 10 lakh 2800. Now decrease, now decrease. Then again, how much actually exercised? 89% into what? 114. The payment will be done based on this. So how much now increase? 1 second increase what? 11,800. And then payment will be done. How much payment will be done? 10 lakh 14,600 will pay. Simply, the first journal entry is EB expense account debit to SBP liability, then EB expense debit to SBP liability, then SBP liability to EB expense, then EB expense debit to SBP liability, then SBP liability to bank. Super easy. Journal entry is very easy, but you will do mistake in this calculation only. Have you understood this calculation? Correct? Yes, sir. Got it? Yes, sir. Now we have done two questions of ESOP. We have done two questions of SAR. Now let us take one question of SBP with cash alternative. SBP with cash alternative. Now whenever there is an SBP with cash alternative, so what Ind AS 102 says that option may be given to, means option might be with employee or option may be with entity. It is a choice of settlement. Means I have announced one SBP with cash alternative. Means you have an option, either you can opt for equity or you can opt for what? Cash. Or if the option is with entity, to entity will decide whether I want to settle in equity or I want to settle what? In cash. Understood? Now whatever question has been given in ICAI study material that belong to this only, means they have not given any question where settlement choice is with entity. Means from examination point this is only important, they will not ask any question based on settlement choice with entity, because normally the trend is that whenever they want to ask question, first they will ask that question RTP and MTP, then only they will ask in exam. So till now they have not given any question based on settlement choice with entity, so we will concentrate on this only. When settlement choice is with employee, to just try to understand, can you say entity has given an option. Now it is as per employee, they may either offer cash or they may either offer equity. Now whenever there is a, can you see, it is similar to compound financial instrument. So whenever it is compound, means there is some component equity, some component liability. So whenever compound financial instrument, so we first determine what is our maximum liability and we try to recognize maximum liability, and any difference will be considered as equity component. We will try to recognize maximum liability on grant date and the difference will be considered as what? Equity. Can I say, it means, can I say this will be split into two parts? One is liability component, one is equity component. Liability component will be considered as SAR, which will do reassessment of that SAR, and equity component will be treated as ESOP, means no reassessment, no reassessment. Let me take one question from question, let us understand how to do this type of questions. Correct? What they have given? Let's see question. So come to one question. You can see question number 4. Tata Industries has issued a share-based option to one of its key management personnel, which can be exercised either in cash or equity, and it has the following features. Cash settled shares is 74,000. Service condition 3 years. Option number 2, equity settled share is 90,000. Condition, service condition 3 years. Restriction to sale means if you opt for what? Equity settlement. So after exercising the option, you cannot transfer the shares for 2 years. Means can I say this option is with restriction? Just try to understand, whenever there is some right with restriction. So my question to you all, the fair value will be more or less. Means suppose cash, for cash option there is no restriction. So suppose the fair value of cash option is 20. My question to you all, if you want to calculate fair value of option with restriction, it will be more or less than 20. Means I have given one right. I have given one right to you that you can demand cash. So if you demand cash, the fair value of option is 20. So there is no restriction on that. There is no restriction. Now I said you can demand equity also, but there is a restriction that you cannot sell it for 2 years. So my question to you are, the fair value of cash alternative and fair value of equity alternative will be same, or it will be different? Different. Which one will be more? Equity will be more. It is with restriction. Restriction means fair value will be less now. Fair value will be less. Just try to understand, in the vegetable market you went. Any market, vegetable market. So in vegetable market there are two type of product. One is what? One is, mango. Mango. One is pakka. Pakka mango, One is kacha mango. Kacha mango, So means kacha mango will be sellable only when it become matured, but it might be available in the market. My question to you all, which will have more fair value? Which can be consumed right now only, na? So can you say, if the market price of this is 100, the market price of this will be 100 or less than 100? Less than 100. Less than 100 na. So because it is having some restriction, because it cannot be consumed today only. So anything with restriction will have less fair value. So can you see, in this question, because they have given equity settled shares have some restriction, so fair value will be less. Now they have given, check karo, fair value equity price with a restriction of sale for 2 years is 115, and fair value on grant date is 135. Means this is for cash alternative, this is for equity alternative. Means for cash alternative will take 135, and for equity alternative will take what? 115. Now they have given fair value, this is 138, 140, 147. Understood? However, the question is, I will say, question has not been designed properly. Can I say this reassessment is required only for cash alternative? Reassessment is not required for equity alternative. So because we want fair value at the end of each year for cash alternative, it can be understood this is what the fair value for cash alternative. It can be understood. Correct now? Are you able to understand what I am saying? It can be understood, but can I say the question is not given the information properly, because they have given fair value. So can I say both are fair value? 115 is also fair value. 135 is also fair value. Understood what I am saying? Let me first explain the question. They have given 3-year vesting period. Correct. Now they have given cash alternative for how many shares? 74,000. And the fair value is given how much? 135. And equity settlement, what is the number of shares? 90,000. And what is the fair value they have given? 115. This is with restriction, this is without restriction. Now they have given fair value at the end of each year. So can I say, understood, we want this only, so we'll take this only now. 140 and 147. Can I say, in the question they might also give this also, but this is not at all relevant. If given, this is not at all relevant. Therefore normally they don't provide this type of information, but if they provide, it can be dangerous question. So they may give you fair value with restriction at the end of each year, fair value without restriction at the end of each year. So for cash alternative will take with or without. Without restriction. For equity will not take only, even though given in the question. Understood? In this question you can see exercise price is not given, so we'll assume exercise price is 0. Whenever exercise price is not given, we'll assume exercise price is 0. So we can write down exercise price is nil if nothing has been given. Are you able to understand what I am saying? Correct. Now, in this question, first, what we'll do? We'll first calculate fair value of liability component and equity component. So first we'll calculate fair value on grant day. on grande. Understood? We write down fair value of liability component on grande. How many options? It is 74,000 into what? 135. How much? 99 lakh 90,000. So guys, this can be the maximum liability on granted. Now we'll find out fair value of equity component. So fair value of equity component will be 90,000 into what? 115. So guys, this is maximum equity. But from this we'll deduct what? 99 lakh 90,000, and the difference will be recognized as equity only. Means how much is coming? 90,000 into 115 minus 99 lakh 90,000 is equal to, so 3 lakh 60,000 will be what? Equity. This is maximum liability and minimum equity we will recognize on grant date. Now we'll calculate what? Expense. Calculation of EB expense. Can you say for these we'll do reassessment? For this no reassessment. The same working note. Year end. Working cumulative expense. Expense. Year end 1. So can you see it is 74,000 into what? Now what will take? Into what? 74 na? 138 into 138 into 1 by 3. How much? 34 lakh 4,000. Correct. And because can I say there is no changes in the employee, for equity we can say 3 lakh 60,000 divided by 3. We can say 3 lakh 60,000 divided by 3. So it will be equity component will be 3 lakh 60,000 divided by 3, means into 1 by 3. How much? 1 lakh 20,000. So can this become the total expense? How much total expense? Three lakh 3 lakh 35 lakh 35 lakh 24,000. Understood? Then year end 2. Now we'll take 74,000. Once again we'll do reassessment. It is how much? 140 into 2 by 3. How much? Minus this how much? 35 lakh, and equity component will be 3 lakh 60,000 into 2 by 3. Is it will be 2 lakh 40,000 and then 1 lakh 20,000. Can you give me the total? Then third year once again we'll do 74,000 into what? 147 into 3 by 3. 87 lakh. 1 crore 8 lakh. 78 minus these 39 lakh 71,333. This will add again 1 lakh 20,000. This become expense 40 lakh 91,333. You can see calculation of expense. Now, first year journal entry will be what? Now you need to recognize both reserve and liability both. So ये entry will be EB expense account debit this amount to SBP reserve to SBP liability. Correct. Second year EB expense account debit this amount to SBP reserve to SBP liability. Then third year EB expense account debit this to reserve to SBP liability. Done. Now only on settlement we need to understand what journal entry. So only I will give you the settlement journal entry. Normally students do mistake in settlement journal entry. Now in this question it is not given whether settlement will be done in cash or equity. So you need to give both choice. Okay, settlement will be understood only on exercise day. On exercise day. So let us assume if imply of a cash settlement then what journal entry? If imply of for equity settlement then what journal entry? So if imply of a cash settlement. So can you see, we'll first write on SBP liability account. What is the cumulative amount we have already recognized? 1 crore 8 lakh 78,000. Can you see it will be paid? Because vesting day and exercise day are same. We are assuming vesting day and exercise day are same. Therefore no difference. If suppose they have given exercise day, so there may be some difference also. The difference will be transferred to EB expense. The difference will be transferred to EB expense. Correct? Have you understood this journal entry? And SBP reserve whatever is there that will be closed by transfer to what? Retained earning. So that will be closed by transfer to retained earning. How much? Understood. Correct. Equity settlement. Cash settlement very easy. Understood. Cash settlement. Now equity settlement to can I say whatever whatever is outstanding in liability now it will be converted into equity shares. Correct. So SBP liability account debit how much? 1 crore 78,000. Can I say there may be some exercise money also? The bank account debit suppose is there to will bank account debit because there may be some exercise money received. Question exercise money 0. Correct. To what equity share capital? To equity share capital. So how many shares? 90,000 now. 90,000. Whether they have given nominal value. Nominal value given. So nominal value is not given now. So we can assume nominal value. How much nominal value is you will assume? Let us assume 100 because ICAI also assume 100. 90 lakh to what? Securities premium. How much securities premium? It is 18 lakh 78,000. And SBP reserve account will be closed by transfer to what? Retained earning. That is 3 lakh 60,000. Have you understood this part? Actually, this journal entry now we are doing because of Companies Act. थोड़ा सा extra गया. This journal entry we are doing as per Companies Act. India's what India says there is no concept of premium in India's. India says whatever consideration received for equity will be transferred to equity. Means as per India there is a equity and other equity. But as per Companies Act we write on nominal value in equity share capital, and the anything received over and above nominal value is transferred to one nonsense account, that is premium account. That is Bakwas account. So as per India there is no concept of securities premium, but can I say we cannot violate the requirement of Companies Act. So it require amendment in Companies Act. If you are following India, there should be amendment in Companies Act, but we know in India it will take some time. So till amendment is done, we'll do this journal entry because we cannot violate the requirement of Companies Act. As per though, I will say whatever consideration is SBP liability, this SBP reserve will be transferred to equity as per India's. Understood what I am saying? So this journal entry we are doing because of Companies Act only. Chalega? Understood? Journal entry is very easy. Super. Cash alternative also done. Now, this also you have understood. Let us read what is given. Means in this chapter I'm not reading the content. Once you have understood, you can understand by your own. If you read, check करेंगे. The plan consists of two components: liability component, equity component. For the purpose of accounting treatment, entities should assume that all employee will offer cash settlement. Initially, we'll assume that they will offer cash settlement. For this purpose, fair value plan on grant date will be split into two parts, which will be calculated as under. Fair value of liability component will be equal to fair value plan under cash alternative is equal to option granted multiplied by fair value plan under cash alternative. Fair value of equity component will be equal to fair value of plan under equity settlement minus fair value of liability component. Correct? Understood? Then accounting treatment of equity component will be similar to ESOP, whereas liability components will be similar to SAR. In other words, fair value plan under cash alternative will be reassessed at the end of each year, whereas no reassessment is required for equity component. Accounting treatment on settlement on exercise date. If employee offer cash settlement, SBP reserve account will be closed by transfer retained earning. SBP liability will be settled at intrinsic value per option on exercise date. Any difference in such account will be adjusted in EV expense. Correct. And if the employee offer equity settlement, correct now. So SBP liability will be closed. Means this I have just given as per India's. If you want to change as per the requirement of Companies Act, you can add on SBP liability will be settled by allotment of equity shares. Correct. And SBP reserve will be closed by transfer to retained earning. Correct. So this journal entry you can ignore it. You can add on whatever we have done as per ICAI solution. Chalega? Got it? Yes, sir. Then when settlement choice is with entity, they will not ask any question on this because there is no question. I am ignoring it. Correct. The next concept is modification. Modification means what? The plan may be modified. Plan may be modified. Now this modification, whenever there is a modification, it can be either favorable to the entity or it can be unfavorable to the entity. When I am saying unfavorable to entity means beneficial to employee, just try to understand when you will do modification plan, this entire concept is to motivate the employee. So can I say you will do modification only to motivate employee? So any modification should be beneficial to employee. But can I say it might be happen that you have done some modification which is not beneficial to employee, means it is favorable to what? Entity. So what India says that if any plan is modified and is favorable to entity, means not beneficial to employee, ignore it for accounting purpose. Means no adjustment required. Whatever you are doing for original plan, continue that accounting. So if any plan is modified and it is entity favorable to entity means not beneficial to employee, ignore it for accounting purpose. Means can I say modification will be accounted only when the plan is modified and that modification is beneficial to employee. So of course in exam can I say they will give the situation when it is beneficial to employee. They will not give any situation when it is not beneficial to employee. But be careful, suppose they have given any question which is not beneficial to employee, I will say ignore whatever modification has been done, follow original accounting. Whatever has been done from the beginning, that you only follow. Understood? Yes, sir. It means whenever there is a modification, such modification is beneficial or not beneficial to employee. Situation number one, if the modification reduces the total fair value of option or not otherwise beneficial to employee. So can you see the fair value of option decreases? If the fair value of option decreases, it is beneficial or not beneficial to employee. If the fair value of option is decreasing, it means it is not beneficial to employee. So whenever fair value of option is decreasing due to what? Due to modification, it means it is not beneficial to employee. How the fair value of option will decrease? If we reduce or if we increase exercise price. Can you see, if we increase exercise price, fair value of option will decrease. So it might happen we have increased exercise price. If we are increasing the exercise price, it is not beneficial to employee. Correct now. So what they are saying, the entity shall continue to account for the service received as consideration for the equity instrument granted as if that modification had not occurred. Means do a continue the accounting from the beginning as if such modification is not yet done only. Means there is no modification. In other words, such modification will be ignored for accounting purpose. Correct. This situation will arise if the modification reduces the fair value option granted by increasing the exercise price, or if the modification reduces the number of options granted per employee. Number of options granted per employee has been reduced, or the entity modifies the vesting condition. The vesting condition is modified. Correct. By increasing the vesting period, they have increased the vesting period. So if they are increasing the vesting period, it is not beneficial to employee. Or by modifying or adding any performance condition, there may be some performance condition which has been increased. Understood? Have you understood? Correct. So I will say whenever this type of questions, however they will not ask. If they will ask, ignore it. Okay? No question in ICI study material. It means now we need to understand what we'll do about if the modification increases the total fair value option or is beneficial to employee. So there are three situations. If the modification increases the fair value option granted, example by reducing exercise price. One question we have, two questions we have regarding this in ICA study material. If the modification increases the number of options granted, there is no question in ICI material regarding this. Okay. Or if the entity modifies the vesting condition that is beneficial to employee, for example, by reducing the vesting period. One question we have in ICI study material. Means if I just inform you what will do in this or what will do in this, it is okay. Correct. Let me take one question. From question we'll try to understand. From question we'll try to understand. So one question already I have taken. I have taken a good question. Correct. Means there are 2-3 question I think so. But I have taken the good question. Only one question I have taken. QA Limited had on 1st April 2015 granted 1000 share option to 2000 employee. The options are due to vest on 31st March 2018 provided the employee remain in employment till 31st March 2018. On 1st April 2015, the directors of the company estimated that 1800 employees would qualify. Sorry. On 1st April 2015, the directors of the company estimated that 1800 employees would qualify for the option on 31st March 2018. So this estimation was done on grant date. Can you see we do estimation on grant date or year end one? We require information, means which information is relevant for recognition of expense. Employee estimation on grant day ki employee estimation on year end one. Year end one. So can you see this information is bakwas? Correct. This estimate was amended to 1850 employee on 31st March 2016, further amended to 1840 employee on 31st March 2017. Correct. On 1st April 2015, the fair value of option was 1.20. The fair value increased to 1.30 on 31st March 2016, but due to challenging business condition, the fair value declined thereafter. In September 2016, when the fair value of an option was 0.90, so on September 2016, The director repriced means modified the option, and this caused the fair value to increase to rupees 1.05. So repricing has been done. Whenever it will reprice means they have reduced the exercise price. Due to reduction in exercise price, fair value of option will increase. Trading condition improved in second half of the year, and by 31st March 2017, the fair value of option was 1.25. QA Limited decided that additional costs incurred due to repricing on the option on 30th September should be spread over remaining vesting period. The company has requested to suggest suitable accounting. First, have you understood the information? So many information is given. This question you can understand when you are writing. If you are not writing, you will not be able to understand. When I have read, have you understood this question? If you have done previously, then to okay, you have understood. Have you done this question previously? Same to same question? Not done na? Bolo. This was given in MTP May 2019. So if you have done this question previously, then okay, you have understood. But for the first time when you are reading this question, सब ऊपर गया. अरे बोलना ये सुनो. You have understood? Understood? Huh? Already done na? But have you understood? Chalo. Very good. If you have understood, very good. But a normal student will not understand. Correct? Chalo. So what I am saying, when you want to understand this type of question, better you write. If you write now, it will come better understanding. Sometimes we feel that we have understood, but actually we have not understood. Sometimes we feel that we have understood, but it will be better understood when you are writing all the information. Correct? So I will say write and understand. So 1/4/2005, what happened, Bata? How many employee they have given? Initially, how many employee? 2000 employee. How many options per employee? It is 1000 option per employee. Then they have given how many estimated number of employee? This was estimated 1800 initially. But again, this information is not relevant. Bolo yes or no? Then they have given at the end of first year, means 31st March 2006. 31st March 2000, it is 15, sorry. 15, 16, 17, and 31st March 2018. So 1800 now become 1850, correct? And then 1850 become what? 1840. This information is not given. We don't know why this information has not been given, correct? Then they have given on 1st April 2015 the fair value of option. So on this date, what is the fair value of option? 1.20, correct? Then they have given fair value was increased to 1.30, correct? Then what is given on September 2006? September 2006, some modification was done. And on this date, what was the fair value? 0.90. So then this was the fair value of original plan. This is the fair value of original plan na? This is the fair value of original plan. Then they have done some modification, and due to modification the fair value was increased to what? 1.05. So on this date the fair value become 1.05, correct? So now can I say due to some repricing etc. now it become modified plan. So now they have given fair value of modified plan is 1.05, which is increased by 1.25 to 1.25. So now it become 1.25 at year end. This information not given, this information not given, not given, correct? Means they have given information only for 2 years, correct? Now why they have not given for third year, that we don't know, correct? Why they have not given? Because they have asked suitable accounting treatment as on 31st March 2017, means they want only up to this date only, means they don't want any accounting treatment for third year, and because of that reason they have not given any information about third year. Means for third year we want actual information na? But they have not given actual information. So thank you very much, they have not given, they don't want. So we need to find out EB expense of first year and second year only. We want EB expense of first year and second year. Now what Ind AS 102 says that whenever there is a modification, due to modification, first you need to find out what is the incremental fair value of option. Means you need to calculate incremental fair value of option due to modification. How to calculate incremental fair value of option due to modification? By comparing fair value of option of original plan on the date of modification and fair value of modified plan on the date of modification. Means can I say this was increased to this, how much it is becoming? 0.01.15. So can I say this become incremental fair value of option? Can I say which will provide benefit for remaining vesting period? So this incremental fair value option will be recognized as an expense during remaining vesting period from the date of modification. From the date of modification is from this date. So how many year? This is 1.5 year. So this will be recognized as an expense during how many year? 1.5 year. This is the concept. Original expense remains same. Is do not alter your original expense. There will be some modification expense, and modification expense will be equal to incremental fair value of option on the date of modification which will be recognized as an expense during remaining vesting period from the date of modification. Understood? Correct. So let us calculate. So year end 1 working cumulative expense first year 31st March 2016. But how many employee you will take? How many employee you will take? 18 1850. How many option per employee? 1000. What is the fair value? 1 point 1 point बोलो 1.3. अरे बोलो 1.30. Everyone is wrong. I said now. Sometimes we don't understand from the information given in the question. They have tried to confuse you and you are confused. This is SAR or this is equity. This is ESOP. For ESOP, देखो one point I have not cut. This to I have cut. This to I have deleted ना. Means this is झटका question. झटका question means every point is झटका. This type of question if they will ask, then everyone will be killed in exam. If the straightforward question, then very simple. Normally in exam they ask straightforward question. Then also sometimes we find difficulty. This is a झटका question. Every point में झटका है. Because there are many information which is not relevant. This is equity settled na. So for equity settled, any subsequent reassessment is not at all relevant. So we'll take 1.20 ki 1.30. 1.20 ki 1.30. 1.20. अरे बोलना रे 1.20. Understood? 1.20 into what? बोलो into 1 by 3 is equal to 7,40,000. This will be also 7,40,000. Now 31st March 2017. Can I say one will be our original expense and one will be modification expense? There will be two expense. So original expense, how many employee you will take? Into what? Into what? 1.20. Into what? 2 by 3. Plus what? Modified expense. So same number employee 18. Into what? What is the incremental fair value option? 0.15. Into what? This will be recognized for how many period? 1.5. So for this year only half. 6 month na? You will take 0.5 divided by what? 1.5. Everything is given na. If you read this timeline, I say now you can understand the question whenever you have written. From para to you can't understand. If you read now, if you only read the question, you will not be able to understand. Will you be able to understand? अरे बोलना रे. Now have you understood my emotions? We, we think that we have understood, but actually we have not understood. Reading, no, reading, understanding, applying. These three are different things. You have read, you have understood, but can you apply? Application part is most difficult. When you apply now, that at that point of time we understood, acha we have not understood. So when you read, मजा आया. Correct now. When you have read, मजा आया. When you have understood, मजा आया. But when you are applying, then you are finding difficulties. So in exam, reading, understanding, applying at one time. Don't have time. This is what C exam. C exam is this. And normally what we do, first we read, we take break. Then we understand in another 10 minutes. And then we apply. No, no, no. That is easy. But in exam or read, understand, apply. Block. Block. Khatam. So that practice you do by your own. Na? And normally students fail in this. Same to same question will come. You have done 20 times that question, same to same questions come. But then also you need to now read, apply, read, understand, apply together. And there what your mind is blocked. One information you have not understood, even though you have done 20 times earlier, then also you will be not able to apply that in exam. This is CA. This is CA where we do mistake. This is CA exam where we do mistakes. Are you getting what I am saying? So same thing we have done in the last 4 questions. We are doing this only. Correct? Chalo. What is the expense? Cumulative expense? This total. Hmm? Total 15 lakh 60 minus this 8 lakh. Only this much they have asked. Year 3 they have not asked because they have not given information. We are not able to do. Check karo, the answer is correct. Answer is correct. In the third year also you can do if they have given actual number of employee. In third year only what will change? This number of employee will change. Balance will remain same. We'll do 3 by 3. Here we'll do 1.5 divided by 1.5. The only number of employee they will give. Thank you very much. We can do that. Then Jana entry remains same. Jana entry remains same. EB expense debit to SBP reserve. Correct. Modification understood? Modification understood? Yes, sir. One more question. I have not taken that question now. Now, there is one more question that we can understand with the what? The para whatever is given. Let us come to content. Now you will understand whatever I will read. Correct. So if the modification increases the fair value of option granted, example by reducing the exercise price. Right now, whatever question we have done, this was related to this only. What they have said. If the modification occur during vesting period, the modification occur during vesting period. In our question, modification occur during vesting period. Incremental fair value of option due to modification is recognized as an expense over what? Remaining vesting period from the date of modification. Acha, if suppose in this question modification was done at the end of second year, suppose, then it will be recognized in how many years? Only last year. Suppose modification was done at the beginning of second year, 2 years. Suppose modification was done at the end of first year, 2 years. Understood na? Understood. But sometime till now they have not asked this question. But modification suppose occurred during exercise period. You only say what you'll do. Suppose we have modified the exercise price during exercise period. So what you'll do? Hmm? The exercise price is modified. So because of that, there will be some incremental fair value option. So that will be recognized as an expense immediately. Immediately now. Because exercise pay we need to recognize expense immediately. Correct? So if the modification occur after vesting date, the incremental fair value option granted is recognized immediately. Or over the vesting period if the employee is required to complete additional period of service. Suppose vesting period is also increased. So during the additional vesting period we need to recognize. How to calculate fair value incremental fair value of option? It means fair value of modified plan on modification date. It will be given the question. Fair value of original plan on modification date. This will be also given the question. This we can calculate. Now suppose if there is a modification by increase in number of options granted. No question, but we can do it. In this also we need to calculate incremental fair value of option means additional option granted multiplied by fair value of plan on the date of modification. This will be incremental fair value of option. Means how to calculate fair value of additional option granted. Additional option granted will be given the question. Means suppose initially 1000 options. Now they say 1200 options. So 200 is additional multiplied by fair value of modified plan on modification date. This will be incremental, will be recognized over remaining vesting period from the date of modification. Last, if the entity modifies vesting condition that is beneficial to employee, for example by reducing vesting period, whenever they reduce, suppose from 4 they reduce to 3 at the end of second year. Understood? So what you will do? Suppose initially there was 4 vesting period. One question is already asked in exam regarding this, but it's very easy. Okay. First year, though already you have recognized expense. Now at the end of second year, vesting period become 3 year. Means initially it was 4 year, na? Now vesting period become 3 year. What you will do? Now can you say from second year you recognize the expense for how many year? Only 2 year. Correct, na? Means suppose you have done suppose 1000 options into 100. First year you have done 1 by 4. Second year what you will do? 1000 into 100. What you will do? 2 by 3. Means can I say this will be recognized on prospective basis? Prospective basis give the effect. Question was asked in exam. Super easy now. Sometimes I will say suppose you forgot also now apply your common sense and do it. Can I say if you applied your common sense you will do this only na? Are bolna re? Correct. Yes sir. The modified vesting condition will be taken into account for recognition of expense from the date of modification. Is on prospective basis. Last, cancellation. Means last for employee. Then we have non-employee also. Non-employee, so they will never ask. They can ask also, but that is very easy. Cancellation. Already a question have been asked on this about cancellation. Correct. Cancellation. I will take 1 second one question for to explain what to do in cancellation, because if I will read you will not understand. But let us take one question. Cancellation. Okay, cancellation means what? Cancellation of option by entity. This is not vested option cancel or unvested option cancel. Means sometimes the option is cancelled due to non-performance of condition or non-payment of exercise price. That too we have understood. But sometimes plan is only withdrawn. Means suppose we have one factory and factory is closed down. During COVID-19 many factory closed down. If factory is closed down, so this employee will not perform only. The employee will not perform. So plan is cancelled only na. Correct. So that is known as cancellation. Correct. But can I say whenever there is a cancellation due to this condition or circumstances, it may be with settlement or without settlement. Means even the plan is cancelled, but what employee will say, I have worked for 1 year, give me some compensation. Trade union will come into act na. So cancellation may be with or without settlement. In exam, so they will ask with settlement, but it can be without settlement also. Are we able to understand what I am saying? So cancellation with or without settlement. So let me take one question. From that question, we'll try to understand. I hope you all are understanding, huh? Because just try to understand what we do. Because you see, this chapter we take 4 days in regular class. 4 days means 12 hours. In 12 hours, what I teach, I am teaching in what, 2 hours. Correct now? It is not easy to take fast crash batch. What we do in 4 days, we are teaching you in 2 hours. So it is actually not easy to teach crash batch, because we are not able to understand whether you are understanding or not. Na? Because I don't know what is your level of understanding. If I if, if suppose level understanding 0, then I need to go slowly now. So I don't know what is your level of understanding. If suppose someone is coming very new, or someone has done revision and then came into class, he or she will understand better than what someone is starting from the beginning. He suppose taken classes 2 years before, now coming in the class, it might happen they are not able to understand. So teaching crash batch is more difficult than teaching what regular batch. Are you getting what I am saying? Regular batch में तो will say you don't know anything. Let us start from the beginning. धीरे धीरे प्यार से पढ़ाएंगे. Correct ना? तो it is easy to teach what regular batch. It is not easy to teach crash batch. The crash batch you will understand depending upon your level of understanding. Because I can't go as per different understanding now, because I need to complete a syllabus in 60 hours. I have that much time only. I can't go beyond that. Can I go beyond that? Then you will not come. So the objective is to give some concept on the assumption that you are understanding. Means if I will ask you whether you are understanding, whether you are not understanding, then I will die. अरे बोलना रे. Correct. So I need to take one assumption that whatever I am teaching you are understanding. And therefore I don't know whether this speed is okay for you, this speed is not okay for you. Are you able to understand? So in this you need to be also thoda sa, you need to be thoda sa what, attentive. If you are not attentive, you will not be able to understand. Thoda sa, not pura. Chalo. But today we have taken what, question 9. But I am trying to cover all the concepts, huh? You can see I am taking all different types of questions, because I am not missing any concepts from examination point of view. Anara Fertilizer Limited has issued 2000 share option to its 10 director for an exercise price of rupees 100. One doubt came first, let me clear the doubt. One doubt came that in question number 34, which is 1.05, is 1.05 only. No, third year. Oh ho. Third year, no. Suppose third year, in this question, the doubt came 31st March 2018. You are asking what third year, na? So I said only number of employee, you will take actual number of employees. Suppose actual number of employees given, suppose let us assume 1800. Suppose actual number of employees given 1800. So original options remain same. You can't change original options. It will be 1.20 into 3 by 3. And then incremental fair value option will be 1800 into 1000 into 0.15 only. That is what, 1.5 divided by 1.5. You can't make it, you can't take what, you can't take this fair value option. Array, where is this? Means this is not relevant for third year. You need to take what, fair value option on granted for original plan, and incremental fair value option on modification date for modified plan. Understood? Your doubt over? देखो, one thing I have not done, doubt came ना. If I am not doing one part, doubt came on that. So I don't know what is your level of understanding, that I am saying. Understood? One point I have not said, in that doubt came. So this is the difference between crash batch and regular batch. Got it? Now, I was taking one question. Where is that question? Anara Fertilizer Limited has issued 2000 share option to 10 director for an exercise price of INR 100. The directors are required to stay with the company for next 3 years. Fair value of option estimated 130. Expected director to vest the option 8. They are estimating that out of 10, 8 directors will vest the option. During the year 2, there was a crisis in the company and management decided to cancel such scheme immediately. It was estimated further as below. Fair value option at the time of cancellation was 90. Market price of the shares on the date of cancellation was 99. There was a compensation which was paid to directors. Only 9 directors were currently in employment during the date of cancellation of such scheme. Hence, the amount of 95 per option has been given to each of the 9 directors. Which is the amount settled. The amount settlement is what? Amount of settlement is what? 95 per employee. How the cancellation would be recorded? Have you understood the question? No, no, you have not understood. If you have done previously, then of course understood. Always you need to understand by writing. I always say understanding will come only by writing. Correct? So the how many year? 3 year. What is the employee first? 10 year. What is the option per employee? 2000. What is the fair value given? Exercise price how much? 100. Fair value is given how much? 130. Huh? Fair value option granted is 130. Then what is the estimated number of employee here? 8. Correct? Then suppose this is the date of cancellation. They have not given, but during second year it was cancelled. Correct? Now how many employees available? 9. 9. Now they have given what is the fair value of option at time of cancellation. What is the fair value now become 90? And they have given market price of shares. Market price of shares. What is the market price of shares given? 99. Correct? And how much compensation paid per employee? So what is the compensation paid per employee is 95. Understood? Correct. Now, can we do? Now let us do first year. But the year one, what you will do? Can you see year one we recognize EB expense, 2 SBP reserve, SBP reserve. That will be how many employee? 8 employee into 2000 into what? Into what? 130 into what? 1 by 3. How much? 6 lakh. Have you understood? Now, now what India says, on the date of cancellation, because cancellation can be with settlement or without settlement, that we don't know right now. Because cancellation date and settlement date may be different. So can I say on cancellation date we need to recognize the entire remaining expense of original plan on the assumption that it will be settled. Correct now? So we need to recognize the remaining expense on which date? On the date of cancellation. Correct? Based on original plan only, because this is SBP reserve na. So year 2 on the date of cancellation, suppose this is the date of cancellation, whatever. So we'll pass the same journal entry EB expense to what? SBP reserve, SBP reserve. So it will be how many employee now? 9 employee into 2000 into 130 minus what? 6 lakh 93,333. Have you understood this point? How much? This point have you understood? Cool. So on the date of cancellation, recognize entire expense on that day only. Means all the remaining expense will be recognized on the date of cancellation. Correct? Yes, sir. Now, can you see we need to pass journal entry on the date of settlement? On the date of settlement. Understood. So what they want to say, just try to understand on the date of settlement, because this is settled in cash. This is settled in cash. Even though SBP reserve, but settled in cash because they will now pay cash. So you can see what is the fair value. Fair value was 90, but settlement was done in 95. Means can I say 5 rupees extra you are paying? Means the fair value of option on cancellation date was 90, but you are paying how much? 95. You are paying extra 5. This is known as loss on cancellation. So any gain or loss, gain means less payment, loss means more payment. Any gain or loss will be transferred to PL. So first you need to find out gain or loss on cancellation. So what journal entry you'll do? बताओ. SBP reserve is how much? What is the SBP reserve? The total SBP reserve. This plus this is this into this. This is how much? How much? 23 lakh 40,000. Can you see we need to find out loss on cancellation, transfer to PL. Loss on cancellation, transfer to PL. So this will be how many employee? 9 employee into 2000 into what? 5. How much? 90,000 loss. And you are making payment. Payment how much you are doing? Can you say payment is 9 into 2000 into 95? How much? 17 lakh 20. 17 lakh 10,000. Have you understood this journal entry? Are you able to understand this journal entry? Now, just try to understand. Can you say when you are any equity, SBP reserve is equity, equity, and when you are settling that equity by payment of cash, means this is buyback of equity. Means employee is holding one equity, and you are paying cash instead of equity share, so it means buyback of what equity. So, as per financial instrument chapter, if you have done, if there is any buyback of equity, so during is due to buyback of that equity, any difference will remain in equity only. Means this difference will be transfer retained earning. Means this will not be transferred to PL. Means whenever you have that buyback, so due to buyback, any gain, loss, etc. will be transferred or will be retained in equity only. So can I say the difference will remain in what? Retained earning. How much difference? 7 lakh 20,000. Have you understood this journal entry? Have you understood? So I have given in the form of journal entry. I have a solution they have given in statement format, because they have only asked the statement wise. If you want to write down this journal entry. Written? Have you understood? Let's see what the content says. Come to the content. What happened? Yeah. Cancellation. Original option expense is the minimum expense to be recognized. Therefore, entity recognize immediately the amount that otherwise would have been recognized for service received over the remainder of vesting period. Mean recognize entire expense. Correct? First point you understood? If the cancellation is without settlement, if cancellation is without settlement, to SBP reserve will be transferred retained earning only. The entire SBP reserve will be transferred retained earning, no doubt. But if SBP, if cancellation is with settlement, then gain or loss on settlement will be recognized in PL calculation, which is calculated as under. So it will be compensation paid per option less fair value of option on the date of settlement. The difference will be either gain or loss, which will be transferred to PL. Any payment made to the employee on the cancellation or settlement of the grant shall be accounted for as repurchase of equity interest. It will be buyback of equity interest, and that is as a deduction from equity. So at a time of equity, whatever we buy back, that is transferred to what equity only. Correct? Except to the extent of gain or loss and settlement, means only to the extent of gain or loss and settlement which will be transferred to PL. Any difference in the journal entry will be transferred to what? Retained earning. The same you can see the journal entry is given SBP reserve account debit loss on cancellation to bank or to profit on cancellation. Any difference will be transferred to retained earning. Understood? Concept you understood? Correct. So with this we have completed employee share based payment. Now there are two small topic left. Let us do that also. Okay. Non-employee share based payment. Non-employee share based payment means what? Non-employee share based payment means what? Ki any share based payment with supplier for supply of PP, supply of inventory, etc. The first question arises when to recognize asset. So the asset will recognize when the asset control is obtained or when services are rendered. Now second question will arise at what amount it will be recognized. So what India says, an entity shall recognize the goods or services received or acquired in a share-based payment transaction when it obtains the control of the goods or when the services are received. Correct. Whenever an agreement is between entity and non-employee to receive either cash-based or on the price of equity shares or equity shares, means it can be also SBP liability or SBP reserve depending upon the contract. Following journal entry to be recorded asset account debit to SBP reserve or to SBP liability. Correct. Now the question is that what will be this amount. So what they said, if the fair value of goods and services can be measured reliably, if the fair value of goods and services can be measured reliably, then recognize fair value of goods and services. But if the fair value of goods and services cannot be measured reliably, then recognize the journal entry at fair value of equity instrument issued. Then we'll take recognize at fair value of equity instrument on granted. His first preference will be given to what fair value of goods and services received. If that is not measured reliably or that information is not given in the question, then take fair value of equity instrument on granted whatever issued. Simple. There are some small questions given in ICAI study matter that you can do. Then last concept of this chapter is what group share based payment plan. What is the meaning of group share based payment plan? Just try to understand. Suppose there is one parent company, there is one subsidiary company. Okay. Understood? And employee of subsidiary company. So employee of subsidiary company will provide services to subsidiary company. Are you getting? But there is an arrangement in which parent company will allot equity shares to what? Employee of subsidiary company. So this is known as groups SBP plan. Have you understood? Of course, can I say subsidiary companies should allot equity shares, but instead of subsidiary company, parent company is allotting equity shares to the employee of subsidiary company. Now, there may be some agreement between parent company and subsidiary company. In that agreement, subsidiary companies may or may not compensate parent company for this arrangement. If suppose they are compensating, then to okay. But if there is no compensation, so can you say in this they between them there will be no arrangement then? Are you getting what I am saying? So what will be journal entry? Let us understand. Parent company, subsidiary company. So in the books of parent company, in the books of subsidiary company, can I say EB expense will come? And in the books of parent company, can I say SBP reserve will come? Or it can be SBP liability also. Correct. Understood. So what account will be debited and what account will be credited in the respective books? So just try to understand. If suppose subsidiary company will compensate parent company, then so there will be receivable and there will be payable. Means some amount is receivable from whom? Subsidiary company, and some amount is payable to whom? Parent company. Understood. But if there is no such agreement, so can you see it is as simple as permanent investment has been done by parent company in subsidiary company. So then that will be treated as investment. Investment in what? Investment in equity instrument of subsidiary company, and it will be what? To capital contribution from what? Parent company. This is the journal entry. Means in one question they have given no arrangement. So this entry will come in one question of ICAI starting matter. They have said that 50% will reimburse. So if 50% reimbursed, so 50% will be receivable and 50% will be investment. If suppose the arrangement says that 50% of the amount compensated, the 50% of the final value of expense will be reimbursed. So 50% will be receivable and 50% will be investment. So one question has been given in that way also in ICAI study matrix. Have you understood? Can I say the situation may be reverse also? Now suppose parent company, subsidiary company, now employee of parent company. So employee is providing services to parent company, but subsidiary company allot equity shares. This is also quite possible. Correct. So in this case, what will happen? But the EB expense will come in the books of, and SBP reserve will come in the books of. Correct. Now you can see in this case what happened. This is the entity and parent company is the shareholders of what? Subsidiary company. We can say parent company is the shareholders of what? Subsidiary company. Okay, subsidiary company is distributing what? Some dividend. So it can be considered as deemed dividend. It can be considered as deemed dividend. So therefore, can I say it will become dividend income? Dividend income of which company? Parent company. And this will be dividend distribution of which company? Subsidiary company. Dividend distribution will be debited to our retained earning and dividend income will be transferred to what? PL. Have you understood this point? In ICAI book, they have given question only of part 1. Part 2, they have not given any question. So if they will ask part 1, they will not ask part 2. Got it? Correct. But I have done this, you can read point number 1 and then point number 2. Same thing is given. You can read. With this, our Ind AS 102 is over. So today we have done Ind AS 36, then we have done Ind AS 41, then we have done Ind AS 102. Only 3 Ind AS. We want more Ind AS is left. But are you able to follow? Are you getting benefit? Is this class beneficial? First, we need to understand whether this class is beneficial. Everyone in live class also will respond. Is this class beneficial? Everyone will respond. Huh? Correct? I am waiting for your reply. Till you reply, I will not start. You want India's 10, India's 1 ki India's 8? All three are very what? Simple India's. Will you start with India's 10, India's 1, India's 8? बताओ. अरे बोलो. 1. India's 1 will take. Can we take India's 1? India's 1. India's 7 I will do after consolidation. And therefore, instead of India's 7, I have taken what? Share based payment. This share based payment was actually planned for third day, but I have taken on second day only. चलेगा? So can we take India's 1? They are saying take India's 1. Now 9. 9 is what? India's 9 is nothing. India's 9. Right? Achha, India's 8 is saying. Correct? Na? Everyone is saying India's 1. Vote is going for India's 1. India's 1 is complicated. Why the vote is coming for India's 1? I was thinking to withdraw this India's 1 from my class. Huh? It's very theoretical portion. You want me to take India's 1? Bolo. Let us take, sir, chapter number 3. Is in my book chapter number 3. I need to open the chapter now. India's 1 chapter number 3. Everyone is going for India's 1. Oh my god. I was thinking I will not take India's 1. But India's 1. We are also like ICAI bouncer for you, sir. Very good. I was expecting. I was saying that we are also like ICAI. Don't expect the unexpected thing. Okay. Chalo. Now India's 1, I will just know from where question may come. So can I concentrate on that point? Because there are many points which are theoretical points that you can read by your own. I'm going concern what I will teach. At CA final level, regular batch, so I will teach, but at crash batch, what I will teach about going concern. So that is what understood point now. So I know where you can find difficulty. Can I touch that point only? If you permit me, I will go from all points, go through, but I will concentrate on what? The point. Difficult not. The point, difficult to nothing is there. Then so I should go. Bye bye. Difficult is nothing. If you read, there is nothing difficulties. I will know from where question can come, and if questions come, you will not be able to answer. That I know. Correct? So, here is the first general purpose financial statement you all know. Correct? What is the meaning of general purpose financial statement? You know. A complete set of financial statement include what? A complete set of financial statement include balance sheet, statement of PL, statement of changes in equity, statement of cash flow, notes, comparative information, and the last is what? A balance sheet at the beginning of preceding period, at the beginning of previous year. Third balance is required, but when? Third balance is required when an entity applies. There is some missing point here, some misprinting in my book. Correct now. A balance sheet at the beginning of previous year when an entity applies retrospective application or retrospective restatement or reclassification. So whenever there is a retrospective application due to changes in accounting policies, as per Ind AS 8, Ind AS 1 require third balance sheet. Whenever there is a retrospective restatement due to correction of error, as per Ind AS 8, Ind AS 1 require third balance sheet. Or there is reclassification. We have done reclassification in investment chapter. Ind AS 40 reclassification from one type to another type. So whenever there is reclassification also, what is required? Third balance sheet is required. Understood? Correct? Yes. So there is some printing mistake not given. You can write down 3 points. Whenever entity applies retrospective application of accounting policy, retrospective restatement and reclassification. Okay, there is some printing mistake. Next edition I will change it. Don't worry. Only one point is not written. 2 points are written. The first point is what? Write down applies retrospective application for accounting policy. Only one point is misprinted. Second point and third point is given. Correct. What is the general features of financial statement? It should be true and fair view. बचपन से we are doing true and fair. Correct now. This you can read by room. अच्छा, can we depart from India's? Can we depart from India's? Yes, we can depart, but it is very rare situation. We can depart. What they said, if the management conclude this question can be asked, they'll give one case study and they will say entity want to depart from the requirement of a para of India's. Yes, we can do. We can depart. You can't say no, we can't depart. So as per India's one, we can depart from India's. But when if management conclude that compliance of India's would be so misleading that it would complete the with the objective of financial statement. Correct now. Understood? Then we can depart. But if we depart, following disclosures are required. What are the disclosure? Management has concluded that financial statements are true and fair. The title of India's from which the entity has departed. The nature of departure includes the treatment that India's would require. Correct now. Reason why the treatment would be so misleading. The treatment adopted. Financial effect of such deviation in current and future years. Correct. Going concern, I will say you can read by rule. Going concern. Correct. Accrual basis, we all know that we do accounting on accrual basis except for cash flow. For cash flow statement, we don't apply accrual basis. There is a materiality and aggregation. This definition of materiality now has been changed in the last attempt only. So there is some changes in the definition of materiality. So what is the new definition? Information is material. Information is material if omitting, misstating or obscuring. This has been added in the definition. Obscuring means in the previous definition obscuring was missing. Understood? Correct. Information is material if omitting means omission of such information, misstatement of such information or obscuring of such information could reasonably be expected to influence the decision that the primary user of general purpose financial statement make on the basis of those financial statements. Means due to any information become material if due to omission, misstatement or due to obscuring, that will affect the decision of primary user of financial statement. Now, initially they have said is in the previous definition they used to use user of financial statement. Now they have added primary user. Who are the primary user? It is the primary users are those users who rely on the financial statement. We just try to understand directors are also user. Director does not rely on the financial statement because they know all the information. If suppose some fraud is done, directors are aware or not. Directors are not primary user, but other shareholders are primary user. Means I am also owner of Reliance Industries Limited. You know, I am the owner of Reliance Industries Limited. You know this fact? Don't know. Mukesh Bhai is my what partner in Reliance Industries Limited. Correct? So I am the owner of. अरे बोलना रे. The shareholders means owner only ना. I am not saying I am the owner. Owner and shareholders are same ना. अरे. So I am the owner of Reliance Industries Limited. ताली मारो. अरे बोलो यार. So I am the, you can be also owner of Reliance Industries Limited. So I am the owner of Reliance Industries Limited. But can I say I am not aware of whatever is done in that industry? So I become the primary user. But Mukesh Ambani is not primary user. He knows what is done there. Correct now. So primary user means who rely on what? Financial statement. Correct. What is the meaning of obscuring? Obscuring means information is obscured if it is communicated in such a way, means it is communicated but in such a way, correct now, that would have a similar effect for primary user of financial statement to omission or misstatement that misstating that information. Means the information is given, but the information is given in such a way that it is equal to misstatement or omission. Correct now. Means what can be the examples of obscuring? Information is disclosed but the language is not clear. Information disclosed but language we are not able to understand. Information scattered throughout the financial statement. Normally all disclosures should be given notes to account. but some disclosure is given balance sheet, some disclosure is given SOP, or some disclosure is given where in pata nahi. Correct now. So it is scattered everywhere. These similar items are inappropriately aggregated. Normally, we should not aggregate these similar items, but they are also aggregated. A similar item is inappropriately disaggregated, means they are separated. Similar items are separated. It means we are not providing the information clearly. Correct? The understandability of financial statement reduced as a result of material information being hidden by immaterial information. Is there is one miscellaneous expense in SOPL, not other expense. Under other expense, there will be one heading miscellaneous expense. No, in SOPL there is one other expense. Under other expense, there is some miscellaneous expense. Under that miscellaneous expense, if we put some material information, it means we are hiding the information. Means we have given the information, but we are hiding it now. We are hiding. This is also known as what, obscuring the information. Obscuring the information. So initially, this word obscuring was not added in the material definition, which has been added. A question can be asked in this, whether this is material, whether this is what, material information or not. Have you understood this point? Correct. Then coming to offsetting. Now the question is that, can we offset any asset with liability or income with expense? So what Ind AS 1 says that yes, we can offset, but only when Ind AS permit. Means offsetting is allowed only when Ind AS or law permit. Otherwise offsetting cannot be done. Otherwise offsetting cannot be done. Means DTA and DTL. You know DTA? You know DTL? DTA and DTL can be offset only as per the requirement of Ind AS 12. Otherwise we cannot offset. Financial asset can be offset with financial liability only when Ind AS 32 permit. Otherwise we cannot offset. Understood? Yes, sir. Then frequency of reporting, you can say comparative information is also important. This point is important for comparative information. We have understood comparative information. Yes, we need to give what, minimum 1 year comparative information. Correct. But can we give additional comparative information? For example, suppose we are preparing financial statement for 21-22. So can you see, we'll prepare balance sheet as on 31st March 2022 and as on 31st March 2021. But can we give me 1 year more balance sheet? I'm not saying about third balance sheet. Third balance sheet is understood. But can we give one more balance sheet as on 31st March 2020? Or can we give one more SOPL? Can we give one more notes, statement of cash flow? Well, yes, you can give, your choice. Correct. So minimum comparative information, what they want to say, this is important, and question is given from one point to this is expected in exam. Expected in exam. What they are saying, an entity shall present as a minimum two balance sheet, two is statement of PL, two is statement of cash flow, and two is statement of changes in equity and related notes. This to we know. Can we give additional comparative information? Yes, we can give. An entity may present comparative information in addition to minimum comparative financial statement required by the Ind AS, as long as that information is prepared in accordance with Ind AS. But that information should be as per Ind AS only. Correct. The comparative information may consist of one or more statement, but need not comprise a complete set of financial statement. Means, can you say we want two balance sheet, two SOPL, two statement of cash flow, and two statement of changes in equity. But we can give one additional balance sheet, and this, if even though we don't give, chalega. Suppose we want to give only one additional SOPL, chalega. Are you able to understand? Are you able to understand what I am saying? So what they are saying, comparative information may consist of one or more statement but did not consist of the complete set of financial statement. When this is the case, entities shall present related note information for those additional statement. But if you are providing one balance sheet extra, you need to give additional note for that extra balance sheet. If you are providing additional SOP, you need to give extra notes for that additional SOP. Understood? Correct. Consistency and presentation you can read by your own. I will not read. Correct. Changes in accounting policy, retrospective restatement, reclassification, third balance sheet required that we have understood. So whenever there is changes in accounting policy, retrospective restatement, reclassification, third balance is required at the beginning of preceding period. Correct. So third balance required if two conditions are satisfied. Third balance required when two conditions are satisfied. When it applies an accounting policy retrospectively or makes a retrospective restatement of item in the financial statement or reclassify item in his financial statement, and the retrospective restatement or reclassification has a material effect on the information in the balance sheet at the beginning of previous year. Means they affect, means due to retrospective application, retrospective restatement, reclassification, these have material effect on the balance at the beginning of previous year. Means this affected what opening balance of previous year. If they affect opening balance of previous year, then only what is required? Third balance sheet. Means due to retrospective application, restatement or reclassification, if it does not affect what? Opening balance of previous year, then what is not required? Understood. By then why third balance sheet? Correct. Now, whenever third balance sheet is required, correct now. In case whenever third balance sheet is given, it is not required to present related note. So when you are giving third balance sheet, you are not supposed to give related note for third balance sheet, or only what is required, balance required, related notes is not required. But for additional comparative statement, related notes is required. Third balance sheet is not additional balance sheet. That is the minimum requirement whenever there is a reclassification or whatever. Are you getting what I am saying? Yes, sir. In DS one is very theoretical. Okay. This you understood? Correct. Structure and content of financial statement. Structure and content means what will be the structure and content of balance sheet, structure and content of SOPL, and statement of changes in equity. Statement of cash flow is not given under Ind AS 1, that is given under Ind AS 7. Correct. Now can I say, when I say structure and content, we need to see the format given in schedule 3. Once we understand format given in schedule 3, same to same is the given under Ind AS 1. Correct. So you all know what format. Format discussion is not required. Format discussion. Format to you all know now. Format you know. But what Ind AS 1 says that this tender require particular disclosure in the balance sheet or SOPL or in SOK. Means require particular disclosure on the face of balance sheet, face of SOPL, face of SOK. Suppose EPS. EPS is required disclose, but can you disclose EPS in notes to account? No. That disclosure required where? On the face of SOPL. So you can't disclose EPS in notes to account. So there are some disclosure which need to be given on the face of all these statements. The other disclosure can be given either on the face or in notes to account as per your choice. But normally we give where? In notes to account only. Correct. So other disclosure with other line item can be given on the face or in the notes to account as per your choice. Understood? Correct. An entity shall display the following information prominently: the name of the reporting entity, the nature of financial statement, the period covered by the set of financial statement. Correct. The presentation currency. Presentation currency, presentation currency. As per Ind AS 21, there are three types of currency. One is foreign currency, one is functional currency, one is presentation currency. Functional currency may or may not be equal to presentation currency. If functional currency and presentation currency are different, so we need to present balance sheet in presentation currency only. So that need to be also disclosed. What is your presentation currency? Normally in India, presentation currency will be rupees only. Right? But functional currency can be dollar. Functional currency can be dollar. Detailed discussion will be done under Ind AS 21 regarding that. Then we need to also disclose the level of rounding off used in presenting the amount in the financial statement. Means how much rounding off you have done, that also you need to disclose. This all point we know. Correct now. This all points we know. Now balance sheet. Balance sheet, can I say we understood the balance sheet, we need to classify the item in current and non-current. Now we need to understand what is the meaning of current asset, what is the meaning of current liability. This is important from examination point of view. What is the meaning of current? What is the meaning of current asset and current liability? Can I say any asset will become current when any one of the four conditions are satisfied? Any one of the four conditions are satisfied. First condition is what? It is expected to be realized. It is expected to be realized or consumed or sold within company's normal operating cycle. Do you know what is operating cycle? Operating cycle is the aggregate of time from the purchase of raw material till the conversion of that into cash and cash equivalent. Means operating cycle is nothing but total of this. Operating cycle means what? Average holding period of raw material, average holding period of WIP, average holding period of finished goods, average realization period of debtor. The sum total will be operating cycle. Don't worry, operating cycle will be given in FR exam. Suppose operating cycle is 24 months, quite possible. So any asset which are expected to be realized, consumed or sold within 24 months will be what? Current. Understood? Second condition is what? It is expected to be realized within 12 months from the reporting date. It is expected to be realized within 12 months from reporting date. Means condition 1 is separate, condition 2 is separate. If suppose condition 1 is not satisfied but condition 2 is satisfied, then also it is current. Are we able to understand? Correct. Third, it is held for the purpose of trading. Here the inventory will be always held for the purpose of trading. Therefore, inventory will be always what? Current. This inventory cannot be non-current. Understood? Correct. And it is cash and cash equivalent. Can I say cash and cash equivalent will be always current? Unless the asset is restricted from being exchanged or used to settle liability at least 12 months after the reporting date. Suppose we know that there are some bank balance which are restricted. For example, if you know unclaimed dividend account, or now if you know CSR unspent account, which we open in scheduled bank. Okay, these are restrictions. This amount cannot be used for any other purpose. This amount can be used for some liability. And suppose that liability will be settled after 12 months. So this cash and cash equivalent will be also what? Non-current. Are you getting? So any restricted bank balance can be what? Non-current. Understood what I am saying? Yes, sir. Can you see if you have understood current asset, current liability also you have understood? Just reverse definition. What is the current liability? It is expected to be settled within normal operating cycle. Then it is due to be settled within 12 months from reporting date. Then it is held for the purpose of trading. Any liability can be held for the purpose of trading. Bolo, you said yes. Bolo. Any liability can be held for the purpose of trading. Can you give me some example? Ah, very good. Bolo, future and options. Future and you are saying future and options na. Derivative liability. And derivative liability is always held for the purpose of trading. So therefore derivative liability will be always current. Correct. One good example I am saying, suppose you debenture for the purpose of buyback, means issue debenture with an intention to buy back, that is also become what? Held for the purpose of trading. Therefore that debenture will be current. Understood? Then last, entity does not have an unconditional right to entity does not have an unconditional right to defer the settlement of liability for at least 12 months after reporting date. So if entity does not have an unconditional right to defer the settlement at least 12 months after reporting date, then that liability will be always current. The best example for this is loan repayable on demand. Suppose we have given you a loan which is repayable on demand. So for you, whenever I demand, you need to pay, and you cannot defer the settlement beyond 12 months from reporting date. It means it become what? Current liability. So loan repayable on demand will be always classified as current liability, even though it has no due date. So I hope, and this is the fourth point you have understood. Correct. But if you see second point, if you see the first point is given expected, if it is given expected, no changes. Bolna re. In this expected, here also expected. But for current asset, for second point is given expected, but here it is given due. Oh, oh, oh. Acha, acha, acha. Let me take one example. Are you able to understand what I am saying? अरे बोलना रही. Are you able to understand what I'm saying? Suppose this is the balance sheet date, and this is 1 lakh, 1 lakh, and this 1 lakh is the amount which is receivable, which is due to be settled on 31st March 2022. This is 31st March 2020. So can you say is it due to be settled after 12 months? But suppose as per management, it is expected to be settled within 12 months. Due to be settled after 12 months. But if it is expected to be settled within 12 months, but current, non-current, current. So what is it? It is expected to be settled within 12 months from reporting date. So it means management expectation will prevail. What is the expectation of management? Within 12 months expectation. But suppose it is a liability. Now it is due to be settled after 12 months, but expected to be settled within 12 months. Current, non-current. Are you able to understand what I am saying? It is due to be settled after 12 months, but expected to be settled within 12 months. बताओ current, non-current? No, no, non-current. यही तो बता रहा हूँ. Given it is due to be settled, here no expectation, then तो every liability will become current. Just try to understand. Management will like to present liability as current or non-current? Current. Current ना? अरे बोलना रे. Then तो they will say yes, expected to be settled, and they will say current only. अरे बोलना रे. Because long term liability will affect what? Affect, it may be what it may affect what many ratio. Are you able to understand what I am saying? So what is given? It is expected. It is due. So in case of liability, expectation will not prevail. But in case of asset, if you are expecting that it will be settled, okay only. Means if you think it can be settled, okay, it is current only. But for liability, it is due to be settled. Due to be settled. Correct. This type of question till now not given but can be given. Understood? Can you say once you have understood current asset and current liability, so what is not current? What is not current? That will become non-current. Means if all the conditions not satisfied, then that asset or liability will become non-current. Correct. But there is one exception to this rule. Exception is what? DTA and DTL will be always classified as non-current. DTA and DTL. Even though even though current definition may be applied, but then also it will be always classified as non-current. This is one exception to the general rule. Correct? Yes, sir. This you have understood. Correct. Special case. There are three special case. From my point of view, question may be asked from that three special case. Now, do you know what is the meaning of cash and cash equivalent? Cash. It is as per India 7, cash means cash in hand and current account with bank. What is the meaning of cash equivalent? Cash equivalent means, what is the meaning of cash equivalent? Cash equivalent means what? Cash means cash in hand. I am saying cash and cash equivalent. Cash means cash in hand and bank balance in current account. So bank balance in current account is cash. What is the meaning of cash equivalent? Cash equivalent are short-term highly liquid investment. Correct? Short-term highly liquid investment which can be easily realizable in a known amount of cash without, means which are subject to insignificant decline in their value. Correct. The definition once again will do where? In layer 7. Correct. Now one doubt will get, FD, fixed deposit, can be cash and cash equivalent if its maturity period is 3 months or less than 3 months from the date of acquisition. So what India 7 says that any investment whose maturity period is 3 months or less than 3 months from the date of acquisition can be cash equivalent. So can I say if FD maturity period, if FD maturity period is 3 months or less than 3 months from date of acquisition, can I say it is cash equivalent? Then it will be current. But if for an FD whose maturity period is more than 3 months from date of acquisition, now one doubt will come, it is current or non-current. Then in this we need to apply the definition of what? Current asset. If it is realizable within 12 months from the date from reporting date, then become current. And if it is realizable after 12 months from reporting date, it become non-current. Understood? So cash equivalent current asset, if it is this, then it will come under what? Other bank balance. Other bank balance under current asset under financial asset. If it is non-current asset, it will come under other financial asset. Other financial asset in balance sheet. Understood? This is very important. Means in current asset we'll have financial asset. Under financial asset we'll have cash and cash equivalent. So this will come under that. Under financial asset we'll have other bank balance. This will come there. Then this will come under non-current asset. Non-current asset will have financial asset. Under financial asset we'll have other financial asset. This will come there. This is an important question from examination point of view. Right. Second, bank loan payable within 12 months from reporting date. Bank loan payable within 12 months from reporting date. So within 12 months means it is current. Within 12 months it is current. No doubt. What they want to say? Loan due to be settled within 12 months after the reporting period is classified as current liability. Correct? Loan due to be settled within 12 months. Loan due to be settled within 12 months. Within 12 months after reporting period is classified as current liability. Even if the original term was for a period of longer than 12 months. Means even though original period was longer than what? 12 months, means you have taken loan for 5 years. But at the end of 4th year it will become current now. Correct? And if an agreement to refinance or to reschedule payment on a long term basis is completed after the reporting period. This is a very important point. Just try to understand. Normally what happens? There may be some refinancing. There may be some refinancing. Suppose this is the 31st March 2020. You are preparing balance sheet as on this date. So you have some loan which is payable on 31st March 2021, which was originally taken for 5 years, but now payable within 1 year. So it will be current liability. Correct? But suppose you have done one agreement after balance sheet date, and as per that agreement you have refinanced this loan or rescheduled payment for 5 years. Now the question is that on this date it will be current or non-current? Doubt aaya na? Have you understood this point? Means after balance sheet date you have done one agreement to refinance or reschedule it on a long term basis. Agreement is entered. Suppose this is before approval of financial statement also. Now it will be current or non-current? No, it will be current. That too they want to say na. Just try to understand. It will be current means it is non-adjusting event. It is not an adjusting event because that agreement was not effective on 31st March. Agreement become effective after 31st March. So it become non-current after 31st March. On 31st March it was current only. Are you able to understand what I am saying? So what they want to say? Loan due to be settled within 12 months after the reporting period is classified as current liability, even if the original term was for a period more than 12 months and if the agreement to refinance or to reschedule payment on a long term basis is completed after the reporting date. Have you understood this first point? There are 3 points in this para. What they want to say second point. If an entity expect and has a discretion to refinance at least 12 months after the reporting period under the existing loan facility is what they want to say. Same example I am taking. Suppose this is what 31st March. Right now we have a loan which is payable within 12 months. It is current only. Now on this date we are expecting to refinance. Till now agreement is not completed. We are expecting to refinance and we have a discretion to refinance also. We have a discretion to refinance. Means refinance will be at the discretion of entity, not with the discretion of bank. Are you getting? We are expecting to refinance and we have a discretion to refinance. Refinance on a long term basis. So whether it will be current or non-current. Now, have you understood the point? On 31st March, we have a loan which is payable within 12 months. Now on 31st March, we are expecting to refinance and we have a discretion to refinance on a long term basis. So it will be classified as current or non-current. It will be classified as non-current now. It will be classified as non-current because we have a discretion to refinance. Not we have expectation as well as discretion. Understood? Because we can refinance on as per our will now. We are expecting as well as you have discretion to refinance, yes, it will be non-current. What they are saying, if an entity expect and has a discretion to refinance at least 12 months after the reporting period under an existing loan facility, classify it as non-current liability even if it is otherwise due within a shorter period. Even though it is right now current liability, but you need to classify it as what? Non-current liability. But when refinancing or rolling over is the obligation is not at the discretion of entity. Means if suppose entity is expecting but it is not at the discretion of the entity, can whether it will be what, current or non-current? Current, because expectation nahi chalega, because as per current liability it is expected to be settled within 12 months, then it is current liability. But if you are saying we are expecting it to settle after 12 months, that is not current liability. So with expectation what is required? Discretion is required. Understood? Already there is one question based on this in ICAI study material. Have you understood this point? There is one more special point. Breach of a provision of a long-term arrangement. Correct. Now suppose what they want to say. Suppose you have taken a long-term borrowing. Understood? Now as per the agreement with the bank, if there is any breach means what? Default. And that default is material. The default is material. Correct. So once there is a breach on or before reporting date, is this a reporting date? If there is a breach of material provision on or before reporting date, then the loan will be class. Then this loan will become loan repayable on demand. And can I say once it become loan repayable on demand, it will become current liability? Understood? Correct. So as per terms and condition, if there is a breach and that breach is material, the loan become repayable on demand. Once it becomes loan repayable on demand, it will be classified as current liability. It will be classified as current liability. This much you understood? Now what they are saying. Breaches a provision of a long-term loan arrangement on or before the end of reporting period, liability become payable on demand. Correct? If the minor breach, can I say minor breach, then ignore? If it is a minor breach, so it will not become loan repayable on demand. Then it will be classified as current or non-current? Non-current. Classified as non-current. But if it is a major breach, but a breach is rectified before approval of financial statement. Breach is rectified before approval of financial statement. Then adjusting event. Adjusting event, तो बता it will be current or non-current? It will be non-current only. Are you able to understand? Right? But breach is not rectified before approval of financial statement. Understood? Breach is not rectified before approval of financial statement, but lender agree. Lender means bank. Bank agree not to demand payment as a consequence of breach of contract. Means bank agree that will not demand payment. If bank agree will not demand payment before approval of financial statement, it will be current or non-current? Non-current, adjusting event only. Are you able to understand this point? Have you understood this point? If breach is not rectified, but bank agree that will not demand payment, don't worry, before approval of financial statement. Thank you very much. It is non-current only. Then second point. If the lender is bank agreed by the end of reporting period, means by the end of reporting period, by the end of reporting period they have agreed to allow a grace period for rectification. So they have allowed some grace period for rectification, and that grace period is more than 12 months from reporting date. So if that grace period is more than 12 months from reporting date, means rectification can be done after report, means after 12 months also. So it will be non-current liability only. So what they are saying, if the bank agree by the end of reporting period to provide a grace period of more than 12 months after reporting period, then it will be classified as what? Non-current liability. But if the grace period is less than 12 months, then it will be current only. Are you able to understand? Means in all other case, it will be classified as what? Current liability. This is very important. A question can be asked on this. Already there is a question in book. I'll take that question at the end. I'll take all the questions once I complete Ind AS 1. Are you able to follow me? Are you able to follow me? Correct? Understood. This also understood. These were three important points from which question can come. Then there is a format, balance sheet format. This you can read by your own. Balance sheet format, do you know na? I also don't know. You know? Huh? There is one amendment in the balance sheet format that you know. On the face of balance sheet now, under financial liability, after borrowing lease liability will come. This is the amendment. This you know. This is last attempt amendment only. So after borrowing, point number one, there is one more point inserted IA. This become lease liability. And same thing is given under current liability. After borrowing in current liability, after borrowing also there is a lease liability. This is one amendment. On the face of balance sheet, there are many other amendments also, but that is for notes. On the face of balance sheet, this is only one amendment. Understood? Then about SOPL. SOPL, do you want me to discuss? Ajay, do you know about PL, OCI, other comprehensive income? I think this too you can do by your own PL. Correct. Now OCI, if I want to say about OCI, other comprehensive income. So OCI are of two type. You know about OCI? OCI are of two type. Item which will be not reclassified to PL, and item which will be reclassified to PL. What does it mean? Means item which will not reclassify to PL. So one example we have done, revaluation surplus, that will never be reclassified to PL. It will be transfer retain earning. Means any OCI component which is not reclassified to PL, that will be transfer retain earning at the end. Means for this what we do? For this reclaim is it is not reclassified. So on derecognition normally we pass journal entry, means revaluation surplus to retain earning. Correct. But when I am saying item which are reclassified to PL, so what we do, OCI account debit to PL we do. Means it will affect both OCI and PL. It will affect both OCI and PL. Understood? Correct. So what are the examples of items which are not reclassified to PL? Changes in revaluation surplus. In day 16 we created it. Remeasurement of defined benefit plan. This is under Ind AS 19. Equity instrument through OCI. This is under Ind AS 109. ठीक है ना. Exchange difference means item which will be reclassified to PL. You know about FCTR, foreign currency translation reserve. So exchange difference in translating the financial statement of foreign operation means FCTR as per Ind AS 21. Debt instrument to OCI as per Ind AS 109. Cash flow hedge reserve. Cash flow hedge reserve. This is also as per 109. Cash flow hedging reserve. Correct? चलेगा? Format. format of SOPL. So there is one more important point. This time in RTP they have given one question about this point number H. Do you know about exceptional item? Do you know about exceptional item? As per Schedule 3 requirement, exceptional item need to be disclosed separately. Means now as per Ind AS 1, there is no extraordinary item. There is no extraordinary item. But as per Schedule 3 format, they have given exceptional item need to be disclosed separately. But under Ind AS 1, exceptional item has not been defined. They have only given when items of income and expense are material, entities shall disclose their nature and amount separately. So one question have been asked in this RTP whether exceptional item and material item are same. Understood now? So of course, exceptional item may be material, but all material item are not exceptional. Materiality definition right now we have done, but exceptional item are those items is as per definition given in AS5. As per because Ind AS has not defined exceptional item. They have just given the examples. Some of the examples which require separate disclosure. So as per AS5, if you have done AS5, so exceptional item are those items related to ordinary activities only, whose nature, size and incidence are of such that which requires separate disclosure to understand the performance of the entity. This is the definition given under AS5. So in the RTP also they have given the same definition. So you can read that definition given in RTP. One question has been given, theoretical question has been given. If they have asked whether exceptional item and material item are same, so they are not same, but all exceptional item are material, but all material item are not exceptional. Some examples of exceptional item they have given in under Ind AS 1. Chalega? Have you understood this point? Chalo. Then this is what format. In this also there is one amendment. As per previous it was total revenue they have written. Then they have changed it to total income. Of course, this is total income, not total revenue. Means point number 3, they have mentioned total revenue. Means I used to write on total income only. But it was actually given total revenue. Then it was amended. I have already amended it, huh? It should be total income na? अरे बोलना रे. Statement of changes in equity. Can I see you can do it by room? Correct now. What I will explain. Statement of changes in equity. I am assuming that you know. चलेगा? Notes to account. I am assuming you know. So this Ind AS 1 is also completed from my point of view. Can we take some question as per Ind AS 1 is concerned? Question 5. An entity has taken a loan facility from a bank that is to be repaid within a period of 9 months from the end of reporting period. Is current? Current na? Prior to the end of reporting period, the entity and the bank enter into arrangement. Means before balance sheet they have entered into agreement whereby the existing outstanding loan will be unconditionally loaned into a new facility which expires after a period of 5 years. Means before balance sheet date they have entered into agreement to refinance it. How should such loan be classified in the balance sheet of the entity? But of current or non-current? Current, non-current? Huh? Huh? Non-current, na? Non-current, correct. It will be classified as non-current. Will the answer be different in the new facilities agreed upon after the end of reporting period? Yes. If the agreement is entered after the end of reporting period, then it will be current. That only we discussed today. Will the answer to A be different if the existing facilities from one bank and new facilities from another bank? Yes. Then existing facility will be current and new facility will be non-current. Then there are two facility now. Will the answer to A be different if the new facility is not yet tied up with the existing bank, but the entity has a potential to refinance? Entity has a potential but not discretion. Entity has a potential to refinance, but there is no discretion. So whether to be current or non-current. Entity has no discretion to refinance. There may be potential to refinance. So whether current or non-current. There should be discretion, na. If there is discretion, it become non-current. If there is no discretion, then it will be what? Bolo. Current, na. It will be current. Understood? One more question. In December 2001, entity entered into a loan agreement with a bank. The loan is repayable in 3 equal installments starting from December 2005. One of the loan covenant means the condition is that amount equal to the loan amount should be contributed by promoter by 24th March 2002. Failing which the loan become payable on demand. Understood? As on 24th March 2002, the entity has not been able to get promoter contribution, therefore it will become payable on demand. On 25th March, the entity approached the bank and obtained a grace period up to 30th June, means less than 12 months to get promoter contribution. The bank cannot demand immediate repayment during grace period. The annual reporting period of entity is 31st March. As on 31st March 2002, how should entity classify the loan? Batao. It will be current or non-current. So grace period is less than 12 months. It will be current only. Understood? Assume that in anticipation that it may not be able to get promoter contribution by the due date in Feb 2022, means before reporting date, the entity approached the bank and got the compliance date extended to June 30. Means they extended the compliance date for getting promoter contribution. In this case, will the loan will be classified as on 31st March be different from A? Now you only say, can I say on 31st March now there is no breach? Because compliance date was shifted from 24th from shifted from 24th March to what 30th June. So on 31st March there is no breach. If there is no breach, so it will not be classified as what? Current liability, it will be non-current only. Understood? Not understood. First point you understood. Point number A, they are saying this is 31st March. You need to get promoter contribution on 24th March. But on Feb, they approached the bank and this due date was shifted to what? June. Correct? Means you only say if it was shifted from 24th March to June, so whether any breach on 31st March. If there is no breach on 31st March, whether bank can demand loan. No, it is not repayable on demand. It is not repayable on demand. It is current or non-current? Non-current. That I am saying. Ah, understood. This question was asked in exam. Let us read. Charm Limited, the company is manufacturing company which is into manufacturing of wires and cables and has assessed its operating cycle to be 15 months. The company has some trade receivable which are receivable within a period of 12 months from the reporting date. Okay. With respect to following transactions which took place during the year, give your opinion based on relevant indices. The company has received a contract of 10 crore on 31st March 2021. The terms of contract require the company to make a security deposit of 20% of the contract value with the customer. Correct? Company to make means company will give security deposit. So it will be an asset. The company made a security deposit of 2 crore on 31st March 2021. This contract will be completed in about 14 months. In about 14 months means operating cycle, within operating cycle now, because 15 months is there. 70% deposit will be refunded immediately and 30% deposit will be refunded after 3 months from the completion of contract. The company want to present security deposit of 2 crore as non-current. Is the management decision correct or wrong? You only say. So can I say 70% is expected to be realized within 12 months and 30% is expected to be realized after operating cycle. So therefore 70% is what? Current and 30% is what? Non-current. Let's see what the answer is given. What is the answer is given? is 70% the segment made by company with the customer to the extent of 70% current, 30% security will be refunded after 3 months, and this will be what? Non-current. Same answer is given. The company has some trade receivable that are due after 14 months from the date of balance sheet. It is due after, due after. The management of company expect to receive the amount within the period of operating cycle. Despite the fact that these are receivable in 14 months, the management would like to present these as current. Whether correct? Yes, it is expected to be realized within operating cycle. Therefore, it can be classified as current. If they are correct, correct now? But the answer is given. Yes, the company decision presenting trade receivable as current is correct. Understood. However, whenever this is the case, now there is one more rule. Suppose this is the balance sheet date, correct? And this is 12 months, and this is your operating cycle, 15 months, correct? So suppose there are some trade receivable which are going to be realized within this date, so it is current only. But then also we'll disclose in our notes to account ki how much receivable is within 12 months and after 12 months. So one disclosure requirement is required. So if suppose it is current also, then also we need to inform ki out of this current item, how much is going to be realized within 12 months, how much is going to be realized after 12 months, even though it is current, because same thing is given. Additionally, the company also need to disclose the amount that are receivable within a period of 12 months and after 12 months from reporting date. Understood this point? Easy question now. In the normal course of business, the company has given two contracts and received a total deposit. Receive means what? Liability of 4 crore. 3 crore is received from X Limited and 1 crore is received from Y Limited on 31st March 2021. These are repayable on completion of the contract. However, if the contract is cancelled within the contract term of 18 months, however, if the contract is cancelled within the contract term of 18 months, then the deposit become payable immediately. Correct? Okay. The company is positive about the contract with X Limited but is in doubt about the contract received from Y Limited. The company want to present the amount of 3 crore as non-current and 1 crore as current in the balance sheet. Is the management decision is correct? But right now it is not repayable on demand. Na? But they are saying these are payable on completion of the contract. However, the contract is cancelled within contract term of 18 months, then the deposit become payable immediately. Means it payable immediately means it is payable on demand. Understood now? So I mean right now as per the original contract it is payable after means 18 months means it is not payable within operating cycle. So I will say all is what? Non-current. What the answer is? All are non-current now. In AS 1 state, the entities are classified the liability as current when it does not have unconditional right to defer the settlement. Correct? Although it is expected that X Limited will fulfill the contract, the deposit will not be refunded. But in case of cancellation within the contract, the refund of the deposit is a condition that is not within the control of entity. Hence, the Charm Limited does not have an unconditional right to defer the settlement liability for at least 12 months. According, the deposit will have to be classified as current liability in case of both. They are saying as per current liability, but that's it. Acha. Sorry, my mistake. In this, they have said ki, sorry, what they have said, the company is positive about the contract. Means what they are saying, if the contract is cancelled, then then it become payable on demand. Correct now. So right now in balance sheet date, there is an unconditional right. This point has been given now. If the entity does not have an unconditional right to defer the settlement beyond 12 months after reporting date, then it means the current liability only. So if it is cancelled, entity does not have an unconditional right to defer the settlement, and therefore it will become what? Current only. So both will be current only. Yes, I was also confused. The company is planning to replace the machinery. It has given an advance of 1 crore for the purchase of new machinery which will be delivered in 6 months. This any advance given for long term asset, correct, will be always non-current. It cannot be what? Current. Even though we are expected to purchase the machinery within 6 months. Because can I say advance is given for machinery? Machinery is always non-current, so that advance will be always considered as non-current. So this is one rule. So any advance will be always what? What they have given. Once again I have to read. The company is planning to replace the machinery. It is given an advance of 1 crore for purchase of new machinery which will be delivered in 6 months from the date of balance sheet. It has sold, just sold. It has sold old machinery for zero point 0.5 crore, the payment of which is due in 10 months from the date of balance sheet. The company want to present both this amount as current since they will be settled within 12 months from the end of reporting period. Is management dismissed? Correct. So this amount will be current. 0.50 will be current, but this advance given will be non-current. What the answer? Yes, the management is classify the payment of 0.5 as current is correct. This is correct. Then one acha. Capital advance are all capital advance are always non-current is given now. To be treated as always non-current. Understood? So 1 crore will be non-current, 0.5 will be current. Now it is okay. Understood. Correct. With this India's one, I have taken some questions which may be important from examination point of view. There are some other questions also, but that are questions which can be done easily by you. Correct? Okay. So India's one completed. We'll take 5 minute break. After 5 minutes, we'll restart. My also energy is going down. Okay. Theory na. Theory means India's one. We need to speak very much when we teach theory na. Oh, chalo. Correct. So we'll take 5 minute break. Now, can we start once again? So let us take the one more Indias. Can we take Indias 10 small Indias for revision? I am also tired. Bolo. Indias 10 can we take? I think Indias 10 will be very simple. So let us take Indias 10. Event occurring after reporting date. Correct. So any event which occur after reporting date in AS 10 similar to AS 4. Can I say any event which occur after reporting date but before approval of financial statement require adjustment? Means there may be some event which are adjusting event, there may be some event which are non-adjusting event. So in this chapter we need to find out adjusting event. If adjusting event, it will be adjusted in the current financial statement. If it is non-adjusting event, only a disclosure available, and which occur what? Between the reporting date and the date when the financial statement are approved for issue. Correct? Can I say when I say when financial statement are approved for issue, it means that is the date when it is signed by board of directors. When it is signed by board of directors. Correct? Now, can I say very simple? We need to find out what are adjusting event, what are non-adjusting event. What is the meaning of adjusting event? Any event which provide evidence of the condition existing on reporting date. Any event which provide evidence of the condition existing on reporting date. To provide evidence, such event need to be adjusted. When I say adjusted means we need to pass one adjustment entry. When we pass adjustment entry token, that will be adjusted to either asset or liability or income or expense. So either it will affect income and expense or asset or liability. Non-adjusting event are those events which relate to any condition after reporting date. So any event which relate to the condition after reporting date does not require any adjustment in the current financial year. So it require only disclosure if the amount is material, and disclosure need to be given in what? Notes to account. Correct. Examples of adjusting event, can I say examples of adjusting event can be the settlement of a court case after reporting period. Means some court case is pending on reporting date, it is settled before approval of financial statement, so it require adjustment. The bankruptcy of a customer that occur after reporting date, means there was some debtor which become a bankrupt after reporting date but before approval of financial statement, require adjustment. The sale of inventory after reporting date may give guidance, yeah, evidence of the NRB. Already we have discussed this point under India's 2. Any sale of inventory before approval of financial statement gives a evidence of NRB on reporting date. That is also adjusting event. The determination after reporting period of the amount of profit sharing or bonus payment. Suppose bonus is payable to employee, so bonus is based on profit. That profit is determined after reporting date only. So that gives an evidence ki what will be the amount of bonus payable, for what amount we need to create provision, that will be also based on that event. The discovery of fraud or error that shows that financial statements are incorrect. Any fraud or any error which discovered after balance sheet date but before approval of financial statement require adjustment. Correct? Yes, sir. Some examples of non-adjusting event: decline in the market price of investment. Any decline in the market price of event is related to the condition after reporting date, will not be adjusted. Major business combination after reporting date will be what? Condition relating to what? After reporting date. Announcement of a plan to discontinue an operation. Suppose just write announcement of plan, restructuring. Means I said for restructuring there are two conditions. Detailed plan has been made and the announcement of such plan. Suppose detailed plan was made before reporting date but announcement was done after reporting date. So there is no constructive obligation on reporting date. Therefore, no need to create any provision for restructuring. This is a non-adjusting event. Correct? Yes, sir. Major purchase of asset. Any purchase of asset after reporting date, it is what? Non-adjusting event. Classification of non-current asset held for sale. So any asset which is classified as held for sale before approval of financial statement but after reporting date will be also non-adjusting event. Correct? Changes in foreign exchange rate. Any changes in foreign exchange rate which it relate to the condition after reporting date. Correct? Major litigation. Any litigation after reporting date, it is also non-adjusting. For that will not do any adjustment. These are some examples. I hope you are understanding correctly. Now there are three special case. One is long-term loan. This already we have done in India's one right now. Long-term loan means if there is any what they said already we have done in the India's one. Whenever there is a breach of material provision in case of long-term borrowing on or before reporting date with the effect that such loan become payable on demand. Such loan will be classified as non-current if the lender agree not to demand payment as a consequences of that breach after reporting date but before approval of financial statement. Already we have done an India's one. Under India's one also it was ad adjusting event. In this also it is an adjusting event. Means current will become non-current. Understood? Yes, sir. Correct. Then going concern. Can I say going concern is affected? Whenever going concern is affected after reporting date but before approval of financial statement. So as per India's 10, it is an adjusting event. Understood? Means suppose after reporting date but before approval of financial statement there is a fire and due to the fire the going concern become inappropriate. But can I say actually there was no condition on reporting date but then also it will be considered as adjusting event. This is some special point. So what India's 10 says that if the going concern assumption is not appropriate that is become invalid after reporting date. India's 10 require fundamental changes in the basis of accounting. Means can I say entire financial statement will be prepared on non-going concern basis. Means all the assets and liability will be recognized at net realizable value. At a net realizable value. Correct? Understood? This also understood. Means due to event after reporting date, if the going concern remain valid, then it is a non-adjusting event. But if the going concern become invalid, then it will become adjusting event and we need to change the basis of accounting. Got it? Fundamental changes in the basis of accounting. Got it? Proposed dividend, can I say as per India's 10, any dividend which is declared after reporting date will never be recognized as a liability. Means any proposed dividend cannot be recognized as a liability. Understood? Correct. This also we know from Bachpan only. Disclosure requirement you can read, difference you can read. This was a very simple chapter. Only a revision we have done only for the what? Essay. For this India's 10, I will not take any question. If you have any doubt, you can ask me. It is India's 10, no doubt will come. You read the question, you will get the answer. So India's 10, I don't have any question also. Very simple question is given in ICAI study material. You can read. If you have doubt, you can ask me for a particular question. Chalega. Understood? Okay? Yes, sir. So can we take one more India's? Which one? India's 8. India's 8 ले लेते हैं. India's 8. So let us take India's 8. Today, now, India's 8 is also theoretical. Correct? Now, Can I say India said what is the title of India said? If you see the title of India said, it is changes in accounting policy, ch- changes in accounting estimate and error. Means in this Indias we need to understand what are the criteria for selecting accounting policies, what are the criteria for changes in accounting policy, and what are the accounting for changes in accounting policy, correction of error and changes in accounting estimate. Correct. So first we should give importance to accounting policy. Means more or less this India 8 is concentrate on accounting policies. Entire discussion is for accounting policies. So what is the meaning of accounting policies? Accounting policy means principle, specific accounting principle, basis, conventions, rules and practice applied in the preparation of financial statement. So it include accounting principle, basis means measurement base, whatever measurement basis you are taking, any rules and practice, any convention which are applied in the preparation and presentation of financial statement, that become what accounting policies. Correct. How to select accounting policies? What they said ki selection is depending upon other indices. What they said, when the specific index applies to a particular transaction event, apply that index. For example, if you purchase property, plant and equipment, apply index 16. If you purchase investment property, apply index 40. But if suppose there is no specific index, then management need to form accounting policy. So if there is no specific index, management need to form accounting policy by applying their own judgment. But how to apply their judgment? For that, India's 8 has given some source of judgment. Some source of judgment. Means management need to form accounting policy by applying their own judgment. But how to apply that judgment? For that, India's 8 has given some source of judgment. In making the judgment, management shall refer and consider the applicability of the following source in descending order. Means they need to apply this source in this order only. Means first this, if not applicable then this, if not applicable then this, like this in the descending order. So in this source there are some mandatory source, there are some optional source. Mandatory source, first we need to apply index dealing with similar transaction or event. For example, let me take one example. Suppose you receive grant from non-government. Basically grant is from government, but you receive grant from non-government agencies. Index 20 is not applicable. But can I say this is transaction for which India's 20 might be applicable. Similar transaction is there. So can you say we have similar Indias for that transaction? So what they are saying, India is dealing with similar and related issue. So even though grant received from non-government agencies is not covered under India's 20, but we can apply India's 20. For example, I said purchase of dog for security purpose. Understood. India's 41 is not applicable. But can I say it is similar because dog is used for business purpose only. So either we can apply India 16 or we can apply India's 41. We can apply India's 41. अरे बोलना रे. So it is similar transaction we have. So either we can apply what India's 16 or we can apply what India's 41. We need to form our own judgment. We need to form our accounting policy by applying the judgment. Correct. For example, you purchase some antique item. Antique item which the value of which may increase in future. Antique item, for example, Mahatma Gandhi specs, it was sold in some $1 million. Correct now. So suppose there is some antique item, you purchase it and it is what it is put on the wall. So put on the wall of what your cabin only. So it is for business purpose only, na. But can I say it? The value might increase in future. So it is held for capital appreciation. It is held for capital appreciation. Can I say we can apply India's 40? Or we can apply India's 16? Or we can apply India's 16. I hope you are understanding whatever I am saying. So what they are saying, India is dealing with similar and related issue. If suppose we do not have such India, Then apply the framework, conceptual framework for preparation and presentation of financial statement. Correct now. So we have one chapter, conceptual framework for Ind AS. So apply that conceptual framework. There all the definition of asset, liability, income, expense, equity is given. Understood? Correct. If suppose we cannot apply this also, then there are some optional source. For example, we can apply most recent pronouncement given by IASB. IASB means International Accounting Standard Board. So they may give some accounting treatment for that particular transaction to apply that, or other accounting standard setting bodies. For example, can I say we can also take the reference of accounting standard given by ICAI. For example, right now I have said key exceptional item definition is given in AS5. We can apply that. Correct na? Yes, sir. Or other accounting is literature. For example, we can apply US GAAP. Understood? Or accepted industry practice. Or we need to see what industry is doing, that we can apply. So this is the this in this order we need to form our own judgment for developing accounting policies. So this can be one part which can be important from examination point of view. Till now no question have been asked, but I think can be asked in exam. Correct. Then of course consistency of accounting policy. Can I say whatever accounting policy we are following, that should be followed consistently from one year to another year. Correct. Changes in accounting policy. Can we change? Yes, we can change under two circumstances. We can change under two circumstances. First, changes required by Ind AS, or when changes will result in financial statement providing reliable and more relevant information. Yes, whenever changes are required by Ind AS, it becomes mandatory change, and whenever changes will result in financial statement providing more and relevant financial information, can it is a voluntary change. Correct. Now, whenever you change, then what will be the accounting treatment that we need to understand? What will be the accounting treatment that we need to understand? Correct. But Ind AS 8 has given some point which are actually not a change in accounting policy. Is what Ind AS 8 says, that it seems these are account change in accounting policy, but they are not change in accounting policies. This is important from examination point of view. Till now no question have been asked. Correct. What they want to say, application of accounting policy which differ in substance. Application of accounting policy which differ in substance are not a change in accounting policy. For example, I have given one example of car dealer. If you remember, suppose it was held for rental to other in previous year. We have applied Ind AS 16, and now it was ceased to be given on rent, and now it become inventory. We will apply Ind AS 2. So can you say we are changing the accounting policy from 16 to 2? But whether it is a change in accounting policy, no, this is not a change in accounting policy, because this differ in substance. Previously it was property, plant and equipment. We have applied Ind AS 16. Now it become inventory. So we are applying Ind AS 2. So this is not a change in accounting policy. Understood? Second, application of new accounting policy for a transaction which did not occur previously. Means any transaction in current year which did not occur previously, of course we'll apply new accounting policy. Of course we'll apply new accounting policy. Now, such transaction does not prevail in last year. Now such transaction prevail in current year. So we'll apply new accounting policy. Due to COVID-19, we need to change our classes. Is initially we are into face-to-face classes. Now we started selling our recorded classes. So sale of recorded classes and providing services are two different things. So revenue recognition will change. Revenue recognition will change. Means we need to apply different accounting policy for revenue recognition. So this is not changing accounting policies. Are we able to understand? Third, application of new accounting policy for a transaction which were immaterial in previous year. Means there may be some item which were immaterial, so we have ignored it, but now it become material. If it become material, we need to apply new accounting policy. If you are applying new accounting policy, this is not change in accounting policies. Understood? So just they have given some instances. Be careful, these are not change in accounting policy. Do not apply retrospective application. One thing we have understood, that accounting for change in accounting policy means we need to apply retrospective application. But what Ind AS 8 says, that this accounting means this changes in accounting policy may result from initial application of Ind AS, either new Ind AS came or revised Ind AS. So whenever new Ind AS comes, for example, Ind AS 116 came or Ind AS 115 came. So that Ind AS will have some transitional provision. Transition means that Ind AS will contain some transitional provision. So can I say if that Ind AS will contain some transitional provision, apply that transitional provision, then don't apply Ind AS 8. Correct. So what they are saying, if the change result from initial application of Ind AS, it is a mandatory change. Ind AS might include transitional provision. If Ind AS include transitional provision, apply change as per transitional provision, means do not apply Ind AS 8. Means that transitional provision may provide retrospective or prospective application, do according to that. Understood. But if Ind AS do not provide transitional provision, or the change is due to what? Voluntary change. Okay, it is not a mandatory change, voluntary change. Then apply Ind AS 8. And what Ind AS 8 said, apply changes retrospectively. Apply changes retrospectively. Have you understood this point? Have you understood this point? Why they have said retrospectively? Because they don't want us to change the accounting policy. Because when I say retrospective, retrospective means from the beginning. Beginning means what? Whenever what? Suppose we started business in 1931. So from 1931, huh? Beginning means what? Retrospective means what? From when? Beginning means when you started your company. Suppose you started your company in 1931, start from there. That is retrospective application. So suppose we started our company in 1937 before independence, then you need to apply retrospective application from that. Can you say practically impossible? Practically impossible, and therefore they have given some relaxation also. But why they have given retrospective application? Because they don't want to change our accounting policy. Because can you say if they will say apply prospective application, so every day we will change our accounting policy to inflate our profit. To inflate our profit. Current year will take one policy, next year will take other policy. मजा आ रहा है. And we'll do prospective na. So intensely they have said retrospective application because it is not easy to apply retrospective application. But whenever they say what is the meaning of retrospective application means we need to adjust the opening balance of equity, asset and liability for the earliest prior period presented as if new accounting policy have been applied from the beginning. Means what they want to say when you are saying apply retrospective application, so can you need to find out a cumulative effect from the beginning, and that cumulative effect should be given to the opening balance of previous year. Means we need to adjust the opening balance of previous year, asset liability equity, and because it will affect opening balance of previous year, third balance required as per the requirement of Ind AS 1. Ind AS 1 says that because it will affect the opening balance of previous year, third balance sheet is required. Understood? And because of that reason, prepare third balance sheet as at the beginning of previous year as per Ind AS 1. Ind AS 8 does not say anything about third balance sheet. Ind AS 1 require third balance sheet. Understood? At the beginning of previous year. Are you able to understand this point? Correct. But can I say practically impossible? Practically impossible. Therefore, some exceptions are given. Exceptions to retrospective application. What is the exception? What they say, changes in accounting policies shall not be applied retrospectively if it is impracticable to determine period specific effect or cumulative effect of what changes in accounting policies, means if you are not able to determine the cumulative effect from the beginning, then we are not supposed to apply retrospective application. Then what we'll do, that we need to understand. So to explain this, I have taken one very simple example. Whatever is given now, that can be explained from one simple example. Example: an entity started business in 2006. In 2017, management changes inventory valuation from FIFO to WAP. FIFO means first in first out. WAP means weighted average price method. It is a voluntary change. Situation 1. All the records from 2006 are available. If all the records are available, then apply retrospective application from the beginning. Apply retrospective application from the beginning. But situation number 2, all records are available except for 2009 which are damaged by the fire. Means we are not able to determine the effect of particular year. So in this we'll apply retrospective but partial retrospective from the year 2010. Means we'll apply retrospective application but from 2010 we'll find out a cumulative effect from 2010, not from the beginning. So it means partial retrospective application is also allowed. Correct. Then situation number 3, no records of earlier years were available as virus attack on server has destroyed all the past record. Rare situation but possible situation. If all the records were destroyed, to apply prospective application. If there is no need to apply retrospective application, then give effect from prospectively, means from the data from the current year only, means from the current year 2017. Have you understood this? Correct. So this is completed. Disclosure you can read by own. Changes in accounting policy you understood. Changes in accounting policy, but I would like to explain something more in this because I know sometimes we understand but actually we don't understand. Correct now? Sometimes we think that we have understood. I just like to add something. Yes. The same example has been explained. Correct. Means when I am saying 2006 to 2017, can I say this current year is 2017? Previous year is 2016. Means we need to find out the cumulative effect up to this year. Means cumulative effect from 2006 to 2015. And that cumulative effect will be given where? To the opening balance of previous year. Opening balance of previous year. Are we able to understand? Sometimes we think we are understanding but actually we are not understanding. Now I think it is more clear. Because detailed discussion can be done where? In regular batch. Correct now. Detailed discussion cannot be done in. But as a teacher now we are very much what? Emotional. If we do not give the concept, we feel array is something what? Missing in my life. Are you able to understand? Means when I read this, you understood. अच्छा हो गया. There is one saying by me. जो दिखता है वो होता नहीं, जो होता है वो दिखता नहीं. I always say one thing. जो दिखता है वो होता नहीं. हिंदी you know. हिंदी you know. थोड़ा ना थोड़ा ही समझना है. जो दिखता है वो होता नहीं, जो होता है वो दिखता नहीं. Whatever is visible is not available, and whatever is available that is not visible. This is C exam. This is C exam. If you apply this now, you will become CA. See, sometimes we understand, but actually we don't understand. And sometimes we don't understand, but is actually we have understood. Correct? So what I want to say, just because this is very important, practically also some question may be asked. So what I am saying in the two, if the all the records are available, we need to give cumulative effect from the beginning. But from 2006 to 2015, this effect will be given in the opening balance of previous year. Understood? Okay. Suppose 2009 data are not available. You need to calculate a cumulative effect from 2010 to 2015, and this will be given in the opening balance of previous year. But when I am saying all the records are not available, it means can I say record? Record means what? When I am saying records are not available means what? Means books of account are not available. Balance it is available. Means all the records means previous year records is also not available. But previous year financial statement is available. That can be available from ROC department now. But my all the books of account is destroyed. So if previous year also books of account destroyed, it can be destroyed. Financial statement we have. It means can I say we cannot give retrospective application from the previous year also. then we to apply the changes from current year only. This is known as what? Prospective. But suppose if current year records are available, then from previous year records are available, then it should be applied from previous year. Are you able to understand? Are you able to understand? Means what I want to say, whenever this is known as full retrospective, this is known as partial retrospective, this is known as what? Prospective. Prospective application. Means what I want to say, just try to understand, whenever retrospective application, whether partial or full, one thing is clear, that we need to give 3-year balance sheet. 3 year, not 3 balance sheet. First is what? As on 31st 12 2017, as on 31st 12 2016, and as on 1 2016. So can you see, we will give cumulative effect in this asset and equity and liability. And can you say previous year balance sheet will be restated due to new accounting policy. So this will be restated. Comparative information will be restated. And can I say current year figure will be as per new accounting policy only. So current year figure are not restated. Current year figure will be as per new accounting policy only. Similarly, can I say in SOPL, only 2 SOPL, not 3, 2 SOPL. Can I say comparative figure will be restated due to changes in accounting policy. Now the previous year figure will be restated as per new accounting policy, and current year figure will be as per new accounting policy only. Means last year we have applied FIFO now, but current year it should be as per WAP, weighted average cost. Correct? We change from FIFO to weighted average price method. Understood this point? Can you say when I am saying SOKE, SOKE, so can you say this is balance at the beginning of previous year? This will take balance at the beginning of previous year, balance at the beginning of previous year, and cumulative effect will be given to this. So when we have given cumulative effect to this balance, this will become restated balance at the beginning of previous year, and this will go to third balance sheet. Then we'll add restated profit of 2016, restated profit of 2016. Correct? Can I say this will become restated balance sheet? This become restated balance at the end of previous year. At the end of previous year now, this will go to what? Previous year balance sheet, and then we'll add current year profit, and this will become balance at the end of current year. This will go to current year balance sheet. Understood this point? Have you understood this point? But whenever there is a prospective application, third balance is not required. Correct? Can you say will not restate previous year figure? We need to only apply new accounting policy in current year, but no restatement in the previous year. No restatement. Same thing in SOPL, same thing in SOKE. Understood? I hope thora you understood. Thora means full understood. Correct. So this was what? This was what? Changes in accounting policies. Correct. Now let us complete it. Okay. Now coming to changes in accounting estimate. Whenever there is changes in accounting estimate, it is very easy. That changes is given on prospective basis. Changes is given prospective basis. Prospective basis will be easy, means from the year in which changes has been made. Correct? What Ind AS 8 says, whenever it is difficult to distinguish between changes in accounting policy and changes in accounting estimate, always consider it as changes in accounting estimate. Means suppose you are not able to distinguish whether it is changes in accounting policy or changes in accounting estimate, always consider it as what? Changes in accounting estimate, because if you consider it accounting policy, then retrospective. So better you consider it as changes in accounting estimate. However, one clarification has been given that any changes in measurement base from cost model to revaluation model, but it will be what? Accounting policy or estimation? No. Measurement based cost model to revaluation model or vice versa will be accounting policy. Changes in accounting policy. Therefore, clarification was required, na? Correct. And if there is changes in depreciation method, then accounting estimate. Understood? Yes. Okay, in the very simple accounting treatment, the effect of changes in accounting estimates shall be recognized on a prospective basis from the date of change by including it in profit or loss. The period of change, if the change affect the period only, means if the change affect the period only, so it will be included in current year profit. But the period of change and future period, if the change affect both, means that change will be given in current year as well as future year. If the change affect both, for example, if you change the useful life, okay, changes in the useful life of asset will affect current year depreciation, future year depreciation. But if you change the amount of provision, can I say it will change? It will affect only current year profit. Are you able to understand? But understood. I think no discussion required. Coming to what prior period error. Error means what? What is the meaning of error? Error means what? Any omission or misstatement. Any omission or misstatement in the financial statement of one or more period. But as per India said, error will include fraud also. Means as per AS5, error means only unintentional mistake. But India said has given clarification error will include fraud. So accounting treatment of fraud will be as per error only. Understood? This point? Understood. This point is very important. What they said, error arises from failure to use or misuse. Use means what? Failure to use means unintentional. Misuse means what? Intentional. Means intentional mistake, fraud is also covered. Understood this point? So error arises from failure to use or misuse of reliable information that was available when financial statement were approved. Means when the financial statement were approved, that information was available, but you either you have not used that information or you have misused that information. Are you getting what I am saying? And could have been obtained and taken into account with a reasonable effort. Is any information which is available when financial statement are approved, and if you have not used it or if you have misused it, this become what? Error. Have you understood this point? Have you understood this point? This is a very important point. So types of error means mathematical mistake, mistakes in accounting policies, misinterpretation of fact, omission, fraud. It will also include fraud. Here is a correction of error will be done by correcting it retrospectively. Means now what India said say the correction will be done by retrospective restatement in financial statement if the error are material. So we need to apply retrospective restatement. Why we just whenever there is an accounting policy we say retrospective application. Whenever error we say retrospective restatement. Means we will restate the figure on a retrospective basis. Correct? Yes, sir. Correct. So there can be two situations. If the error relate to previous year, if the error relate to previous year, then can I say we need to restate the previous year figure only? We need to restate the previous year figure only, both in SOPL and balance sheet. But can I say it will not affect the opening balance of previous year? If it will not affect the opening balance of previous year, third balance sheet is not required. Understood? So restate the comparative amount of previous year SOPL, restate the asset, liability and equity of previous year balance sheet, and third balance sheet is not required. Of course, we need to restate the opening balance is okay also. Okay means statement of changes in equity. But if error relate to any year which is earlier than what previous year, then can I say we need to restate the opening balance of previous year and third balance sheet is required. It is as simple as whatever we have done for changes in accounting policy, same approach. Means in this case also can I say some exception has been given for retrospective restatement, same thing that is given. A prior period error shall be corrected by retrospective restatement except if it is impracticable to determine period specific effect or cumulative effect of error. Same thing. That example I have given it from 2006 to 2016, 17. Same thing. Cumulative effect, period specific effect. Understood? Correct. This closer you can read. Okay, done. Understood. I am not reading disclosure. It does not mean question cannot be asked from disclosure. Huh? So don't blame me if question is asked from disclosure. From my point of view, you can read disclosure by your own. I will read better. You read. Correct now. Understood. चलो ठीक है. चल let me take some question also. Better complete it in days 8. In days 8. In days 8 also I have not taken any questions because in days 8 also I feel that all the question you can do by your own. Can you do all the question by your own? Since I have not taken any question of in days 8 because from my point of view all question there is no chapter given in days 8 Chikro. So can you do all the questions of in days 8 by your own or you want me to take one question? बोलो. In days 8? Huh? One question I will take. Chalo, one question. I need to take one question from my book. So I need to go where? To my book. Let us go to my book, volume 1, in days 8. Let me take one good question which can be asked. One good question is there. Let me take one good question. One good. There are some questions which are good also. Well, let us take this question. Question 22. So only one question I will take. Chalega. During 2005, Cherry Limited discovered that some product that have been sold during 2003-2004 were incorrectly included in the inventory as on 31st March 2004 at rupees 6,500. Means it was sold but then also included in the inventory. Means it was included in the closing stock of which year? Closing stock of no 3 4. So it become opening stock of 4 5. Cherry Limited accounting records for 4 5 is current year. So sales itna, cost of goods sold itna, including 6,500 for the error in opening inventory, and the income tax 5250. They have given 3 4 sales this much, cost of goods sold is this much, profit before tax this much, income tax this much, profit this much, basic and diluted earning per share this much. So can you say when we restate, we need to also restate basic and diluted earning per share also for previous year. The 2003-4 opening retained earning was 20,000 and closing retained earning was 34,000. K Limited income tax rate was 30%. Okay. It has no other income or expense. K Limited has 50,000, 5,000 equity shares of share capital. Okay. So how the above item will be treated and accounted in K Limited statement of PL, statement of changes in equity, etc. So they have given first statement of PL. So can you see we need to restate first previous year figure. Again, there is no changes in sale, but cost of goods sold will change. Look at the closing stock was actually overstated. So we need decrease closing stock. Correct now. We need decrease closing stock. When you decrease closing stock, your cost of goods sold will increase. So you can see how much given. 53,500 will increase by 6,500. So 53,000 plus 6,500 how much? 60,000. So can you see we have restated this? Correct. So can you say income tax will be also restated? So now the profit become 13,500. Now you'll apply 30% on this. So income tax will be also restated. Now the net profit become 9450. So your EPS will be also restated. Correct. Okay, the current year figure does not require restatement. If you correct closing stock, so automatically opening stock will be corrected. But because in this question they have given this also wrong, so we need to correct it. So you can see 1,04,000 given and 80,000. So opening stock will be reduced. If opening stock will reduce, your cost will reduce. So you can see how much they have given cost of goods sold for opening. They have given 86,500 minus 6,500 will do. Minus 6,500 means 80,000 will do. Correct now. But this is not restatement. Can I say practically it will be automatically corrected? If you correct previous year, so automatically it will be corrected now. Understood? Then this can be calculated. Simple. Then we need to also prepare what? SOKE. SOKE may you can see they have given share capital and retained earnings. Share capital to be remain same 50,000. But you can see the balance at the beginning of previous year they have given 20,000. Balance at the beginning of previous year 20,000. Can I say in this we will add this profit? So this will be restated balance at the beginning of current year. Then we'll add this profit. So this will become balance at the end of current year. Understood? Simple. Then we need to give also disclosure. So in the disclosure we need to write down some notes about the error. We need to find out what is the nature of error. We write down some product that have been sold were incorrectly included in the closing stock of last year. We also included in the opening stock that we have written. Then we need to give the effect of such correction. So you can see effect has been given. What effect has been given? The effect in 2003-4. 3-4 means which year? Previous year. So can you see there is an increase in cost of goods sold? Due to this, there is a decrease in income tax. Due to that, there is a decrease in profit. Due to that, there is a decrease in what? Basic and diluted earning per share. Due to that, there is a decrease in inventory also of last year. Correct? And decrease in income tax payable. And there is decrease in what? Equity also. So this effect need to be given. You can give by your own. Only increasing cost of goods sold. Huh? All are what? Decreasing. You can give. One question done. Balance question can you do by your own? Huh? There is one more doubtful question that also I can do. You permit me. Let me think. Let me check whether you are giving correct answer or not correct answer. There is one question which is very important, and normally students have doubt in that question. Where is that question? I need to find out. This question. Issue number 1 means whether the third balance is required or not required. There is a question related to that. The company had presented current material liability as non-current in the financial statement for the period as on 31st March 2002. Means some liability which was current they have written as what? Non-current. While preparing annual financial statement of current year, management discovered that these liabilities should have been classified as current. The management intend to restate the comparative amount for the prior period presented. Suppose restatement is required, this is correction. But the question is that whether third balance is required. Whether third balance is required. Why third balance is not required? Please just try to understand. Huh? The same doubt came. Just try to when you are restating liability. So can you see if you have done mistake in current year, previous year, so it means this mistake was done in previous year also. What they have said, the company had presented certain material liability as non-current in financial statement for the period as on 31st March 2002. So when you are restating, so of course can I say that restatement will be also done where in the that restatement is that reclassification. Whenever liability or changes, so of course it will affect the opening balance of what? Previous year. Opening balance of previous year will be also affected now. I mean right now we don't know whether the opening balance was nil or not. It might happen opening balance of that liability was also certain amount. So can I say when you are changing the liability, so of course it will affect the opening balance of that previous year. It will affect the opening balance of previous year. What is required? Third balance sheet is required for reclassification also. We have done under Ind AS 1 for retrospective application, for retrospective restatement, and for reclassification also what is required? Third balance is required if it is material. But in this question they have not said now opening balance of that liability is nil. Are you able to understand? And therefore third balance is required. Got it? Same point. The company had charged certain expenses finance cost in the year 31st March 2002 while preparing the annual financial statement for the year ended 31st March 2003. It was discovered that these expenses should be classified as other expense. Now, can you see, whenever we are reclassifying expense from one class to another class, this will not affect previous year. Means opening balance now because expense does not have opening balance. So for this, what is not required? Third balance sheet is not required. Understood? So this was only a doubt in the market. There's a market, there's a doubt. Understood now? So you can read now, you will understand what is the answer. This question is expected in exam. Understood? Correct? Can I conclude today's class? I think we have done more than what was expected because we have covered a very important chapter in days 102 that was not in line today. So we are going what? Before time. Don't worry, if we complete before time, we'll take some more questions from my expected list. चलेगा? Okay? चलेगा? Thank you very much for today. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy your remaining day. Bye bye.